That was strange. Well then, what is good, guys? Welcome. How are we all doing? Happy Thursday to each and every single one of you out there. I don't know what was just happening then. I think we had a little bit of technical difficulties. But we are back. We are back, and I've got like really bad toothache today. I've got like really sensitive teeth. I don't know why. Really strange. So if every now and then you just see me go, like pull some weird faces, it's probably because my teeth are giving me a bit of jip. Although, guys, exciting! I've been given a coffee to try, and it's like a new style of coffee. It's a Japanese coffee, and you like open the bag, put it over the cup, and like pour it in. Really weird. I haven't tasted it yet. I'm letting it cool down, but it smells amazing. Anyway, what is good, guys? How are we all doing? As you guys know, it is a Thursday. It's the last stream of the week. We've got all sorts going on here today. We have Rich Wells coming in a little bit later on. We do have Richard Butler joining. He's going to be slightly late, he has told me. However, you get my ugly mug probably for the next 10-ish, 20-ish minutes, give or take. So come say good morning to me. Let me know what you guys are looking at in chat. I do apologize, guys. I'm back in the prison cell. I have removed all of my paintings, all of my artwork on the wall, because today is, I want to say it's a bit of an emotional one, but it's not. It's an exciting one, but it's kind of sad for me. I'm going back to the UK. I got a couple of things that have cropped up that has caused me to head back to the UK a lot earlier than I anticipated. So I've been packing up everything. Everything's ready to go. Even my setup right now, it's super bare. So I'm just literally trading from a camera, a microphone, and a laptop. That's all I've got available up in front of me right now. The rest of the apartment is ready to walk out the door with. So yeah, super weird. Today's my last day streaming in Hong Kong. The next time you guys will see me, I will be back in the UK. So I'm kind of excited for that, I suppose. So I'm going to give myself a week. Anyway, so let's have a bit of a catch up with chat, and then we shall jump into the markets, because I think I'm seeing a little bit of something. Oh, guys. Oh, my God. Anyway. Apologies. What is good? Daily Facts 488. How's it going? Hello there. Abradov Linkler. Peace. What is good, my man? How you doing? Real GCC. How you doing? Hello. Welcome to Thursday's session, everyone. What a week it has been in the markets. Absolutely. Let me know, guys, how you found the markets, the markets today as well. Let me know if you've managed to profit in the markets. Let me know if if the market's taken you for a bit of a ride, or let me know if you've been a bit like me and just stayed out completely. Oh, I'm grateful for lukewarm water. I don't think I can drink cold water right now. Rich, I'm in a trade and keep opening the charts. What can I do about it? I'm getting a bit nervous. Rich will be in shortly, but I tell you what, I can answer this as well for you if you want daily facts. The best thing you can do, my friend, so there's a couple of different options. If you're really struggling, like, let me know if you have it on your phone as well. If you've got the charts on your phone, then it's a bit difficult. Maybe delete a MetaTrader and TradingView on your phone. Best is just go out and go for a walk. It depends what your strategy says. If you've got a set and forget strategy and you're really struggling with, looking at the markets, if you're really struggling to, walk away and you're just wanting to check the trade, check how it's getting on, check the markets, then best thing you can do is chuck your headphones in and listen to myself and Rich chat shit for a bit while you go for a walk. That's the best thing I can advise you that you do. If you've not got a set and forget strategy, then perhaps you need to ask yourself, why are you so nervous in the market? Perhaps are you over risking? Are you in a little heavy? Is it an A+ setup? Maybe it's a B or a C setup. Maybe you're not quite as confident in the chart setup or in the trade setup. So Daily Facts, let me know what your thoughts are on the trade. Let me know. Give me a little bit more on the trade that you're currently in. Please hit that like button and subscribe if you haven't already. Bosh, absolutely. Make sure you smash that like button. Share it with absolutely everybody. from your mother, your brother, your sister, your uncle, your next door neighbor, your cat, your dog, your nephew, whoever wants to come watch the stream, subscribe, and become a better trader, then make sure you get them into the community over here at the Fivers. Good day, peeps. What's good, Shane Joyce? How you doing? Good day, mate. Putting all shrimp on the barbie. I don't know why I say that to all my Aussie friends. What's good, man? How you doing? Good morning, good afternoon, good evening. The Fivers community. Absolutely. What is good, my man? Good morning, good afternoon, good evening, and good night. Yeah, I got the same problem. It is a really common problem. I used to be the exact same. Even now, when I'm in a trade that I've placed on stream, you know, even now I get that issue where I'll want to keep checking the charts, and you know, when I'm setting and forgetting on my other strategies, I'm pretty fine. I'm pretty okay. I'm fine. But when I'm on stream, I'll place a trade. I'll be like, right, guys, I'll come back to this a little bit later on. I'll walk away, and then every 5 minutes, I'm like, just always looking at my phone, and it is a pain in the ass. It's a nightmare. The best thing you can do is, if you need to look at your phone at certain points, like if you're checking your phone to see if prices come to a certain point, maybe a reversal area or a potential point of reversal, potential point of continuation, a high value area, high interest area, or maybe a high or a low, then the best thing you can do is set alerts. If you've not hit those alerts, then you've got no reason to check the phone. You've got no reason to check the charts. Set alerts and have them waiting. And then just, yeah, literally just go for a walk, put your headphones in, listen to the Fivers live stream while you go for a bit of a walk. Good evening, Henry. How you doing, my man? What is good? Yesterday I talked with LJ about it because when I start the PS5 up, now for example, I feel worthless. That's really interesting. So I get the feeling, because I used to be the same. I've actually downloaded games on my computer. I'm not a big gamer, not a big computer guy. You know, as I've made you guys well aware that I'm a very country guy. I go out in the fields, I go out and just do outdoor activities. Never been a gamer. However, when it came to like trading and being in the charts, if you're not seeing anything in the charts, or better off, if you're already in a trade, this especially, if you're already in a trade and you're struggling to like step away and not look at the charts, there's nothing wrong with setting the PS5 up. Because if trading is the goal, like let's say you got a day off work on a random Thursday like today. You got a day off work, you don't need to go into work, you don't want to do back testing because back testing is going to affect your psychology. You've already been to the gym, you've already gone out and explored the outside world, and you're in a trade. And like I said, you don't want to go back testing because, again, back testing is just going to affect your psychology because it's going to make you want to know what's going on in the markets because, you know, it's relative. The best thing you can do is, yeah, set up the PS5, my friend. Set up the PS5, load up your favorite game that's going to get you absolutely indulged in that game, and just play away. Absolutely. I have got zero problem with that. So my brother once said to me, he was like, he walked into my office and he was like, what the hell are you doing? I was like, I'm playing a game, clearly. And he was like, why are you playing a game? You're supposed to be a trader. Why aren't you trading? Why aren't you earning money? Why aren't you doing something? You're just wasting away playing on your computer. And like I said, I've never been a gamer, so he was incredibly shocked that I'd opened up a game. And I said to him, I actually dropped my screen, opened up my trading view. I think I don't know, let's say, for example, I was around break even. I said, see, I'm in a trade. He goes, okay, can't you do something that makes your trading better? I said, why would I want to do that? Because if I'm going to back test, make my trading better, if I'm going to go back test, then I'm going to be actively looking in the markets to see what's going on, to see what my strategy is doing. That's going to make me think about my trading. And he was like, okay, well, why don't you go outside? I was like, well, I've already been to the gym today. It's piddling down with rain outside. I don't want to go outside. So I'm not going to go in and watch TV. So I'm going to just chill, sit at my desk and play some games. There's absolutely nothing wrong with that. So yes, I get you that daily facts. It makes you feel worthless. But you should only feel worthless if you know that you should be doing something else. sometimes the PS5 is a fantastic distraction and can actually be used as a tool. I just ruined a perfectly good trade about an hour ago, modifying a trade that I should have just left. Oh man, dude, that's so frustrating. Again, though, dude, it happens, man. It really does happen. You know, but why? Ask yourself, why did you modify the trade? Why did you edit the trade? How did you feel when you were actually in the trade? You know, and this is why I say journaling is so important. Because journaling isn't necessarily, you know, you plot down the entry and the exit criteria. You also talk about how you felt, how you're feeling during the trade, how you're feeling like when you watch the trade. So, Shane, that's really interesting, man. Let me know how you actually felt during the trade and what actually gave you that impulse to modify it instead of just leaving it. Bonjour à tous. What is good, my friend? How you doing, Gabriel? Salut. Alors, salut, ça va? What is good, Abradov Linkler, my good friend? How you doing? Howdy, Daily Facts. What's good? Hi, LJ. G'day, mate. I'm LJ now. Fundamentals and stuff. I'm joking. No, not LJ, my friend. I am the better looking version. I'm joking. No, I'm not. I'm the shorter, less better looking version of LJ. Ashleigh, what's good? Will, how you doing? Good morning. Thank you very much, Ashleigh. Good morning, William. How are you? What is good, Raphael? I'm good, brother. Not too bad at all, my friend. How are you? I'm long EU. Oh, oh la la. Let's have a look, shall we? Okay. Okay. I think I rate that. I think I can get on board with that. Can I? I mean, price looks good. You know, we've put in low, high, low, lower high, higher low. Yeah, so we're coming down and squeezing in. I think I'd need to see a break and close. Why did I get rid of my mouse? There we go. I shouldn't have packed my mouse. I should have packed everything but. Well, my keyboard I barely use, but my mouse I always use. I think something. I'd be a bit nervous around this level here, Raphael. That's the only thing. I would be a bit nervous until we've broken that point. However, as a high risk entry point, although now I do. Are you in it now? Because I kind of, if you're around break even now, I kind of rate that. Let me know where you're in from. That's quite interesting. Hey, LJ, your view on WTI oil. Sorry, Will. No worries, my man. Syed, I can have a look at WTI oil. I don't trade oil, but I know that we did have a massive drop on oil after the ceasefire. A friend of mine who is into his... How should we put this? I don't want to say wartime. Let's say military fundamentals. He's into his military fundamentals and he likes his politics that affects the military. You know, again, he works. He's in the military, but he's learnt to trade, and now he uses his knowledge in the military to help him trade with defense contracts and stuff like that. Yeah, he amongst others think that this ceasefire is a pile of buhaki. He thinks that it's absolute garbage. He says give it a week max, which is really interesting because I kind of agree with him. I can't see this ceasefire lasting long. However, you know, look, we have a ceasefire at the moment for, I think as well, minimum 2 weeks. And it has dropped oil significantly as well. So we did take a massive drop on oil. But I can have a look at the technicals and look at the charts and see what's happening. William, let's meet here in the UK for a nice pint. Weather is looking great. We could organise with Pedro. Dude, yeah! Mate, that sounds sick. Let's do that. Depends, because I know that Pedro is like... So there's me, and then you go all the way up, and then you go into England, and then you come down. I'm sure Pedro is down on the coast here. But yeah, dude, that'd be sick. In fact, there is... I am speaking in London in October. But yeah, if I'm centre of the country, then yeah, 100%. Let's do that. Whereabouts in the UK are you from? Don't give us your coordinates, but yeah, give us an area, maybe your county. It's weird. It's not certain. Gonna happen. Too much uncertainty. Ooh. What were we talking about 12 minutes ago? It's weird. All not certain. All not certain what's gonna happen. Too much uncertainty. Oh, okay, the chart. Yeah, fair. You mean like you staying in or out of the charts? Yeah, no, I don't blame you, man. I'm the exact same. I don't know what's going to happen. It's too unpredictable for me. I think at the my throat keeps drying. I think at the moment, Trump is too volatile, and the whole situation with Iran is too volatile. So, I think there is too much uncertainty for me to trade this. It's really worrying. I'm actually getting ill. I can feel it. I can feel a little bit of something coming. So yeah, no, I don't blame you. You know, too much uncertainty. You know, people don't know what's going on. Aberdolf Linkler mostly stayed out too. Smart move, my friend. Took a gold trade, closed in profit this morning. Cello, that's awesome, man. Where did you trade gold? Because I know that gold was a bit funny this morning. Gold went up and down on the 5 minute around here. So we had this nice opportunity here for some buys, and then again price dropped, and then it bought up, and then it consolidated. So for me, too much chopping gold. I do like the NAS. So the NAS and Euro USD are quite nice. So sorry, Euro and Pound. So Pound's quite nice. Waiting for something to happen here. Doesn't look as nice as the Euro. The Euro does look really good. I think we're just waiting for the Euro to take some nice highs. However, the NAS looks really, really good. So two things can happen here. We can either continue a sell-off, and if we continue a sell-off, I want to pull back to around here. No, we're holding here. I want to pull back, consolidate, drop. Close below, pull back, continuation. Or I want to see, in fact, let's get a different one. There we go. I want to see price move up, break and close above this line here, pull back, consolidate, continue up, pull back, continuation. I think that would be nice on NAS. But so they're my two little thoughts that I got on the Nasdaq. Same goes S&P, US 30. They're all very similar. US 30 is not so much, so it'd be interesting. Okay, yeah, US 30 pretty similar, it's pretty correlated. S&P same as that. So I'm just gonna look at the NAS. I don't want to, split my trade into too many. By trading via mitosis. Yeah, GU. Just gotta wait for GU. EU looks nicer. Gonna wait for that. Raffle, I'm really interested to see if you're already in this long. I have MT5 on my phone to enter. Okay, nice. So, are you looking at the charts, or are you looking at your P&L? So that's another thing as well. Like, are you looking at the charts, trying to identify whether you should hold it? Like, are you trying to future-proof your trade by looking at like Trading View, or are you just looking at your phone, being like, please be in profit, please be in profit? The random edit, what is good, my man? Been a good week for me. Absolutely awesome, mate. Congratulations, proud of you, brother. Good morning, sir. What's good, my man? Took a lot of losses lately, but always kept my risk the same. I don't know why, but it's just happening, bro. Yeah, that's dude. Don't beat yourself up over that, man. You know, look, losses happen. Like straight up, losses happen for a start. Depends how many losses you've had. It can help you depend on and determine whether you drop your risk. Bro, don't beat yourself up. Don't beat yourself up over a losing period, especially during times like now with economic crisis, war, financial ambiguity. The oil's doing all sorts, like energies are doing all sorts. Twitter is doing all sorts to the markets as well. So don't beat yourself up over not being able to, trade at peak performance right now. That's the least of your worries. If anything, pat yourself on the back for staying in the markets and being able to see something. I don't manage it because I have a really strict exit method. I'm scared alerts won't go off. It happened in the past, mate. Same as that, dude. Same as that. But so alerts won't go off, I believe, if you don't have Wi-Fi. I think that's the case. I'm assuming with MetaTrader, and so I don't use alerts with MetaTrader unless I'm at the PC or the computer. But I use alerts when it comes to my trading view. So alerts I have missed because I haven't had Wi-Fi, I haven't had data. So don't go out for a walk and not have your data on. And then, because you could come back and you wouldn't, and then your alerts start pinging through. So yes, I kind of agree with you there. But I suppose, that those things just happen. Alerts, they shouldn't scare you, bro. As long as you've set them correctly and you've set them. The only time alerts may not go off is if we get like a really weird spike in price and it just like wicks up really quick, wicks down really quick. Then sometimes maybe the move would have happened so quick that it doesn't trigger the alert. But that's not that often. Even then, most of the time it'll trigger the alert. It may be delayed, but it will trigger the alert. No different to being slipped. But yeah, bro. Honestly, daily facts. Don't ever be afraid of alerts. Just have the confidence. Make sure you set it correctly. So, for example, let's say I don't know. Let's try and put something like a date. I don't know. Let's say you're changing a strimmer head. You know what a strimmer is. You do the grass with a strimmer. The strimmer has a cable or a cord. If you don't put that cord on properly, or if you don't put that box on properly, it has risk of popping off and flying somewhere. You'd make sure that you're going to put that cable head on properly, or that strimmer head on properly. Same goes if you're a scientist. Let's say you're working on vaccines for, I don't know, let's say COVID. Let's say you're working on a COVID vaccine. You're not going to just leave the door open. You're not going to just leave things unsanitized. You're going to be super meticulous to make sure you're sanitizing everything, cleaning up behind you, making sure you're doing not a decompression, what do you call it, like a clean, like a hygienic clean before you actually leave the station and leave the lab. So same goes with your trading. These people have to be super meticulous when they're doing their job. Otherwise, potentially bad things happen. Same goes with you. Make sure that us as traders, same goes with us as traders. Make sure that you're meticulous about your trading and treat it as if you are in a genuine career and you could lose your job if you don't do it properly. And therefore, when setting alerts, that's no different to sanitizing your equipment before the surgeon goes and opens someone up, or a dentist, You have a dentist, a dental nurse. A dental nurse will make sure all equipment is clean and sanitized before the dentist goes and shoves it in someone's gob. They're not going to go, oh yeah, just give me that, I don't know, scrapey thingy off the floor. Give me that scrapey thingy off the floor. I'm going to go put it in my patient's mouth. No, they're going to make sure it's super, super clean and hygienic because it needs to be for their job. So does your stop loss, so does your entry, so does your TP, and so does your alerts. If your alerts are something you're afraid of, it's perhaps because you're rushing them. Make sure that you are super meticulous about setting them. The shiny yellow metal. Hey Will, I have noticed one thing, and mainly referencing to gold. The market is not following technicals at all. It mostly follows geopolitical news. This past 2 weeks have been tough for gold traders, waiting for a more clear picture regarding war and rates, as DXY should be pumping, but it's hanging around that 100 level. Yeah, I had a quick look on DXY the other day. What are we at now? Yeah, we're 99.80. Yeah, so it's hanging around that sort of, yeah, that sort of like 99, pretty much 99 flat in that one, that just under 100 level. Where are we here? Yeah, 99.135. Yeah, so it's a weird one. I fully agree with you. I've stopped trading gold at the moment with the war going on. Gold, oil. I probably will be looking at trading oil, but not intraday. Or, you know, maybe like sort of swing trading it. That's actually a really nice coffee. It's not that strong though. It's not like a bittery coffee. That's a really nice coffee for black. Yeah, so it's a bit of a tricky one trading gold. I have noticed it seems to be running more alongside the geopolitical news releases instead of pure technicals or instead of technicals fundamentals. It has become really hard to trade. That's why I've just stepped away completely. I've moved over to my other assets that are a little bit easier. But you know, if the markets aren't giving you the opportunity you want to see, just step away. Just press pause for a minute. You know, the markets will be here longer than we will be. So the best thing we can do is when we're not seeing the markets present themselves, is go and enjoy ourselves, go do something else, come back at a later date when the markets are still going to be here and hopefully they've calmed down. Oh, there we go. Look at EU. Nice. Okay, this is quite interesting. See what EU wants to do. So we've got Asia highs here. Maybe stop down there. Something like that, maybe. If you have to check every minute, then you are not confident in your strategy. If you were, you would have no problem letting it run. Work on a clear, strong strat that you can trust. Yeah, I agree with this, but I kind of disagree as well. Like sometimes it's not always your strategy. Sometimes it's your risk, and sometimes it's just how you feel. Usually, like Aberdolf Linkler, I 100% agree with you. Until I started thinking myself, I started losing confidence. Not losing confidence, that's the wrong word. I started checking and having a bit more anxiety in the trading when I was in a trade. And I realized that it was because I was so used to watching it on stream. I was not okay just not knowing. I had confidence in the strategy, didn't care about my TP, didn't care about my stop loss. You know, whether I hit stop loss or TP, it didn't really affect me that much. I wasn't risking a huge amount. It was purely the fact that I didn't know what was going on. That was weird to me. It was a new feeling to me regarding this account. Like I said, my other accounts I didn't care, but this stream account, it was a new feeling. Not watching the trades, not watching what's going on. So sometimes it is just genuinely how you feel. Other times it can be how much you're risking. That's why I say, you know, don't over risk. If you place a trade and you risk a percentage because that's what the average recommend, 1% risk. But then let's say you're trading with a $100,000 account and you risk 1%, which is £1,000 or $1,000, and then you end up looking at that trade going into stop loss. You look at that trade and you're like $400, $500, $600 down, and you start sweating and thinking, I wish I hadn't placed this. Oh my God, what am I doing? You know, it's because you personally are not okay or potentially a little less comfortable risking $1,000 per loss. You know, 1%, yeah, it does sound small, but when you start looking at it as a dollar figure, it can be quite significant. You know, it can be quite a lot. So just be very careful and very mindful when other people recommend 1% or $1,000 or $1,500. Just think, what would that mean to me to see that? You know, so not only that, it depends on your strategy. If you know that you take, you know, let's say you have a 30% win rate, and you know most of the time you're losing a trade, then if you end up risking 1.5%, 2%, you may end up blowing your account before your nice runner comes, before you can make it all back. So again, just, you know, take into consideration your strategy. And that's why I say always look independently before looking, you know, for other people. I checked every 15 minutes because I work and a 15-minute candle close above the EMA, but every time I just get a shock when I look. Okay, but again, why are you looking? So you're looking every 15 minutes. Like, we know why you're looking every 15 minutes, but why are you looking in general? Like, what is your reason for thinking 15 minutes is up? I'm gonna go back and check. So like, what's your reasons for that? Because you can also get alerts on the EMA. You can have the EMA you can have the EMA alert you on when it crosses. So you can get alerts for that. Henry, insider military trader. Yeah, fair. No, he did. Yeah, no, I can't say. One thing he did say to me. Should I say? I mean, like, it's not going to get him in trouble, but he did say he heard from a person who heard from a person who heard from a person who heard from a person. He didn't give me how many specific people had told him, and I think there's a reason for that, because it could have been a lot, or it could have been, one or two. But basically, he heard from someone regarding a defense contract, and he was like, if you want to buy it, there it is. But yeah, so that was quite interesting. So I don't know whether that counts as insider trading or just gossip at that point. It's like the whole postman theory. If your postman tells you to buy a stock, it's a good chance it's too late. So yeah, who knows? Yes, let's hit 100 likes before the next session. Absolutely, guys, make sure you absolutely smash that like button. Raffle, I live in London. Oh, dude, awesome. Yeah, I'll be in London in October. Yeah, that's sick. Yeah, let's... I think... So what's happening is it's London Prop Expo. So I'm pretty sure the Fives are going to be there as well. Don't quote me on that, though. I'm not too sure yet. But yeah, I'll be speaking there, and it's a 2-day event this time. So I think what they're doing in the evening between day 1 and day 2 is a trader's evening do, like a trader's drink. So yeah, man, that'd be sick. It'd be super cool. In fact, everyone as well that is in the UK or around that London area. It'd be cool to see you guys there. Oil is climbing. Let's have a look at WTI then, shall we? WTI. So look on the hourly. I don't like looking at oil on the lower time frames, like on the 5-minute. It has to be like, even the 15-minute is low. So yeah, this was the ceasefire agreement, I believe. Yeah, Tuesday. Yeah, this was the ceasefire agreement, and then we did drop. We sort of chilled out a little bit. We came back down, mitigated this wick, and then we've started pulling back up ever so slightly. We've got a nice little gap fill there, but we are pulling up. We are ever so slowly climbing. For those technical traders out there as well, like myself, we have come into a nice area of interest around this consolidation zone here. We wicked under really nicely, held it, and now we're starting to move above. I don't want to say if I was you I'd buy, but this could be a nice area to be buying from. We've clearly got this nice upwards channel as well. So we've got a nice upwards channel, pull back into this area, and we are reacting quite nicely off it. So I think oil could be potentially on the move, but yeah, again, we'll see. It's going to be hard to tell at the moment what's going on because of course, a little bit of geopolitical unrest and things going on potentially with the war. And I know that we've had this whole ceasefire agreement, but let's just let's just see how it goes. I'd like to see us relax for a week or two first, and if we can hold it for about a week or two and show that the markets are starting to calm down, the Twitter terrorist is starting to calm down, the whole war situation is easing off a little bit, then I think yes, there we go. I think we could be onto something then. Ty Keith, what's good, my man? Good morning, Will. Yo, what's good? Hi guys, how you doing, Ty Keith? What's good, my friend? Look at the charts only. Dude, that's awesome. That's even better, because what you're doing then is you're looking at the charts, you're not caring about the P&L. You're almost trying to future-proof your trading, which is really easy. That's easier to sort of solve than it would be if you were trying to, if you were just trying to look at the P&L. So what potentially you're doing there is, potentially Adolf Linkler could be right. You could have a bit of a confidence issue. You could be a little bit nervous in your strategy. And perhaps you're just a little bit worried that if sort of, I don't know, you said something about if it closes under the EMA on a buy. If it closes under the EMA, then you close. Am I correct in assuming that? So do you have a discretionary stop loss, or is it a hard stop, like a full solid stop loss? Tried getting in the Euro USD yesterday at break of Tokyo high, and then got reversed instantly. A little too hungry for it. It happens, man. Yeah. So sometimes you'll see a nice move, and you're like, "Yeah, let's go." Completely reverses on you. You're like, "No, that's not what I wanted to see." And then it'll move in your direction after that, and you're like, perhaps I should have just waited." You know, that's where it's good to know on your times. Is there a right time to get in? Yes and no. There's probably never a right time to get in the markets. However, if you start seeing a bit of a pattern forming on the market moves, like for example, let's say it swept Tokyo on market open, like within the half an hour of market open, it swept Tokyo and then moved in the opposite direction to what you want to see happen after sweeping Tokyo, then see what happens half an hour after that. Or half an hour after that. And then if you see like an hour after Tokyo, or hour and a half after Tokyo, you've got your manipulations, shall we call it, and then price eases up and heads in what you would understand as your intended direction, then you know then, according to the pattern, that you can come back and you can mark out the Tokyo range and be like, right, okay, so Tokyo, there it is, you know, it's market opens in half an hour. I'm going to come back in 2 hours time because it's an hour and a half after Tokyo, and by then usually all the garbage priced from the market open has settled down, especially if it's a Monday after the weekend open as well. I'm going to sanitize you. Thank you. Yes, sanitize, that's the word I was looking for. Raffle, good morning. What is good? Have we got two Raphaels in? That spun me right out then. What's good, my man? How are you, Will? I'm good, bro. How are you? What's good? Thank you, Will. I will leave some time for others now to ask something. Dude, ask away, man. Like I'm a big advocate of that. I used to be one of those kids in school that I wasn't the smartest kid in the class, but I'd have a bit of a brain. And when I turned it on, I was like, oh yeah, I know this. Oh, it's simple. Oh, this is easy. And then I'd see kids raising their hands, and I'd be like, why is he raising his hand? Like, it's easy. Like, I'm dumb as shit. And this guy, like, I know this. But but then I'd have a moment where I'm like, oh, I don't actually know what's going on here. Like, what's going on? Someone explain this to me. And because I would actually almost mock kids for putting their hand up, I wouldn't want to put my hand up. And it wasn't until my later years in school did I start realizing that, dude, everyone's gonna have a question at some point. Everyone's gonna be confused at some point. However, there are also going to be some people who are just a little bit nervous to ask that question. And I learned that probably like year 9, year 10, which is like going into GCSEs then. I put my hand up and I asked a question, everyone laughed. Some kid come up to me, really shy kid, like literally no one knew he existed sort of kid, comes up to me, he was like, Will, thank you very much, I had no idea on that question. I was like, bro, it changed my life. And I was like, wow. It changed my whole life when it comes to having confidence and asking stupid questions. So, dude, don't ever think that, I'm not going to ask questions. I'm going to give time for someone else. Like, dude, literally ask away. Like, ask as many questions as you want, and I'll answer as many as I can. Obviously, I will have to get to the charts at some point. You guys are asking some fantastic questions, but you're probably also asking questions that other people have thought of, but maybe either too nervous to ask or just don't want to ask. But I can guarantee, hopefully, I can help you, but I can guarantee these people are probably thinking something similar or have thought something similar. Raphael, why are you copying my name? Dude, that spun me right out. I thought, has Raphael like changed his username and then changed his, or not changed his username, changed his profile picture and then said good morning to me again? I was like, dude, is this kid trying to like wind me up? But yeah. So yeah, it did spin me out a bit. Does gold has broken out of the inverted flag on the 1 day time frame? I don't know what I was trying to say then. My words just mashed into one. On the daily time frame, let's have a look, shall we? What pattern did you say? Let me have a look. Inverted. Oh god, I gotta try and remember how to draw an inverted flag. Guys, what does an inverted flag look like? Right, so I'll tell you what, I'm gonna draw what I think an inverted flag is, and then you guys can tell me if I'm wrong or not. Is that an inverted flag? Someone say in the comments if that's an inverted flag. Because if so, I think you're referencing this pattern here. Yes? No? Maybe? Because if so, then yeah, we've broken and closed above it with this candle here. Dude, I'm bad with flag patterns. I'm bad with like pattern naming. If there's a pattern, I'll see it, I'll trade it, I'll test it, and I'll come up with my own stupid name for it because I don't know what these patterns are. So, Mohammed, I hope that answers your question on a flag pattern. We've got, I suppose, the pole of the flag, and then we've got the actual flag itself. And yes, we did have a break and close on this candle here above to the upside, but I'm a bit worried that may not be a flag pattern. Because my name is Rafael Garcia. Yeah, fair. Maybe I need to start looking at everyone's entire username now, not just Raphael. Agree, 1% is not the same for everyone. For me, it's not 1 gazillion. Yeah, it's not 1 gazillion, so I'm fine. Yeah, no, literally that, you know. So 1%, I remember on one of my portfolios last year, I was trading across the whole portfolio before I divided them. 1% for me was about 12-ish thousand, and if I had put 12 grand in, or like 12 grand in a stop loss on one single account, that would have fried my brain. Like, I would have looked at that and I would have been like, whoa, no. I was like, that is not happening. I don't like that whatsoever. That's no, that's too much. That's not 1% to me. But across the whole portfolio, it was technically $12,000. You know, that was 1%. And I started realizing that, okay, actually, you know, I need to break it down in a way that works for me. And it was still 1% risk, but I knew that divided across the portfolios, what I can do is use trade copiers, I can use demo accounts, I can trade a 10k demo account, risk 1%, and then have a 100k live account hooked up to the back end of it, because the trade copy will just see a like for like when it comes to risk, which is 1%. Me personally, I would see the $10,000 risk. Sorry, the 1% risk of the $10,000 account. Again, that was hypothetical. You know, I don't actually use a $10,000 account. I trade. I feel like my nice little sweet spot is 100k. You know, anything over 100k, I think I'd lose. Let's say 200k, I'd lose 2 grand, and I'd be like, oh no, that's 2 grand, that's a lot of money, because it's about understanding what that money means for you. You know, I've been trading long enough on $100,000 accounts now where 1% is $1,000. It is what it is, you know. So the rest of the time, I'll divide a portfolio and I'll put it behind in a filing cabinet and let the trade copy do the rest. Yeah, Rich be like, bed. That's fair. Rich hasn't messaged me either. Yeah. He was like, dude, I may be a little bit late. I was like, yeah, sweet, man. He's like, I just got to sort some stuff out. I was like, bro, don't sweat it. I was like, that's sound. Be as late as you want. He's nearly missed his entire session. Oh, man. Will, what do you think of GU? Let's have a look. Let's all call Rich out when he comes in later on. Just be like, well. Look what the cat dragged in. So, Azrael asking me what I think of GU. GU, honestly, looks really nice for buys. On the 15-minute, actually, if we can break and close above so this is Tokyo high. If we can break and close above, there may be a continuation potential. Also, we've had that nice move above this area now. Potential pullback is in order, I suppose, for those trading that pullbacks. I'm also kind of interested to see whether or not my gold strategy works when it comes to trading the break and close instead of the break and retest. So the break and close would be about here. Stop loss would be... Well, stop loss could be either under the Tokyo lows or it can be under the swing low. And then low-hanging fruit being the Tokyo highs. You're not quite at a 1-to-1. Let's see if you can stretch a 1-to-1. Okay, so a pullback looks nicer because we can get a 1-to-2 on a pullback. But the break and close looks quite nice as well. Especially if we can... Oh, no. Especially if we can close above here. Which, I mean, at the moment, well, we got 2 minutes. If we can close, like, heavy bullish for 2 minutes without too much of a wick above, that would look quite nice on GU. What's EU doing? Oh, look at EU. You're flying. So we've just taken now Tokyo highs. So these here, the Tokyo highs. But damn, son. Okay. What does this look like on the 15? Also, look at this. I predicted this yesterday with LJ. I was just saying that, you know, I want to see price on EU. On EU, come down, pull back, and then head down. But, you know, if it wasn't going to, it was going to come above here and then just chop around a little bit and then head down. And it did, to be fair. It did head down, but it just, yeah, it wasn't nice trading for me yesterday. I didn't like it too much. Go back to current price on EU, though, but... Damn. Have we got... No, this has got to be organic price. This doesn't look overly volatile, but it is volumetric. Damn, look at that. What sort of price move is this? It's just in this one candle. Oh, right, why isn't it letting me... There we go. So it's an... No, it's not an 11 pip candle, will you absolute melt? It is a 8 pip candle. Okay, yeah, so it seems organic, you know. There's nothing to be like, oh my god, what news? That seems pretty organic there. Although we've closed on Tokyo highs on GU, we've not quite closed above like on EU. Oh man alive, EU. Yes. Hello. Raphael, I'm hoping you're going to say to me like, yeah, I was already in on EU. Wasn't looking at entering in. I was already in. Where would you TP on that there? And is that pullback too deep? Oh no. Maybe there. I want to see what happens now. I want to see what happens. This is quite nice. I quite like this. There's a potential continuation pattern setting up here. Oil sell. Some of the guys saying selling oil. Roy, what is good, Roy? How you doing, my man? I am the original. You are copy paste, bro. What? I told you I'm more older than you. Oh man. Oh dude. Are we actually wagering over who's older in the comments right now? Dude, I'm invested. I want to know who's older. Oh man. No, don't go back to speaking Portuguese. I can't understand that. Pedro, where are you? I need you with my translator. Okay, so we got 85. Hey, oh, Raphael, you're younger. There we go, guys. We found out. Oh, dude, I was invested in that. Yeah, that was quite funny. That. William, my EU looking nice now. Fingers crossed. Where are you TPing from? If you haven't already hit TP, like damn. Yeah, let us know where you're looking at taking out. Well, about silver, what do you think, dude? Silver. I haven't watched silver in a while. XAG USD. From that price section, not a lot. Oh, dude. Yeah, not. Although that's quite nice. Okay, we had quite a nice. We filled the gap with this wick here. We wicked in and filled that gap. Well, okay, let's go body to body just in case those are like, go to the body, not the wick. So we filled in that gap nicely, but bro, that is flat. Although it seems to be, you know what? The higher up I go, I like the look of this for buys. I think I'd be buying silver if I had to. Like if you said I'm gonna put a gun to your head, you gotta. What am I doing with the fib? I'm gonna put a gun to your head, and you gotta trade something here. I think I'd trade. I think I'd buy this. Yeah, I'm gonna ignore that massive wick. There we go. You gotta take a mean average. You know, a bit like when you're in school and you're plotting those little coordinates. You got to take a mean average across the board. So that's what I've done here. I've ignored that wick, but I've also ignored these highs. So we're clearly heading in that bullish bias. Guys, this is the end of the week. Give me, cut me a bit of slack here. My brain's not braining. I think I wouldn't want to drop much lower than the hourly. This is the 4 hour. This is the hourly here. Hourly looks okay. We're lacking in a bit of volume throughout today. Yeah, we had a nice sell-off yesterday into this area here, which is a really nice area of interest. It's a potential point of continuation, which is quite nice. But throughout today so far, we've flattened off. Like we're 10 a.m. UK time, 5 p.m. Hong Kong time. So yeah, I'm not really seeing much. Yeah, I think I'd have to be swinging this. It'd have to be a potentially 4 hour analysis, 1 hour swing trade, long bias. If I was to enter in now, and then potentially I could scale in on a smaller time frame when price gives me something a little bit better to look at. I think that's why I do Raphael Senior. There you go. Raphael Junior, Raphael Senior. I would say like number 1 and number 2, but then it gives like a whole hierarchy thing, and you guys are going to war in the comments with each other anyway. So yeah, I'm not gonna aid and abet that one. So yeah, Raphael Senior. I'm gonna go with long on silver, but it's very flat at the moment. We're not doing a huge amount. Yes, my man. Euro TP. Also, what Ferrari is that? Is that a Ferrari in your... Looks like a Ferrari. Is it? Yeah, that's definitely a Ferrari. It's gotta be. Let us know what car that is in your profile pic. Yeah. Unbiased Trader, what's good, my man? Good morning. How you doing, bro? What is good, my friend? Have you seen GJ? No, I haven't. Let's have a look at GJ. I've got fat fingers, man. I just sausage finger the hell out of my keyboard 90% of the time. Wow, look at that in the hourly. Ah, talk about swing bias in this. Like, you could swing trade this a treat. Okay, yeah, we got a lot of chop around here. So when was this? Friday last week. Dude, you could have been... Could you have traded this with logic? Like, not hindsight trading. Could you looked at this with logic? Maybe? And then maybe a break and close above. It pulled back into a fib. You can see that it pulled back into a fib zone. Oh, magnifique. That is, look at that. Oh, look at that. There you go. There's your entry criteria right there. Bosh. Now, if you missed it on the Tuesday, you could have got back in on the, well, it would have been Monday, but on the Sunday, I suppose, market open. Yeah, you could have back in on the Monday around here, and you could have swung trade this all week. You could have just bought GJ and held it. For day trading, even day trading, this looks nice. Look at that. Nice little consolidation, break and close above. We didn't get the pullback, however, we didn't get the pullback, but break and close above, continuation. There's a potential. Let's say if you were trading, like I said, I got that gold strategy, which is break and close above. Oh, should we see if this can hit a 1 to 2? Again, guys, I'm not in this. I'm just plotting this out. This is on the 15-minute time frame. See if you could refine it anymore. Nah, that's the best you're getting. So we're going to stay on the 15. So 15-minute time frame, 1 to 2 hour right there. Got the break and close above. Open new candle, entry criteria. We've got a pullback instantly. That would have made you sweat a little bit. But, a bit of confidence, who knows. Although, low-hanging fruit over here, haven't quite taken it yet. Or would you? I'm going to go with you wouldn't have, and therefore 1 to 2 are. Come on. Go big or go home. Yeah, wow, that's impressive. Dude, I know that's crazy, isn't it? Will at silver, my TP point says 47.90. What do you think? 47.90. Let's have a look. Silver. No. There we go. For silver. We're at 73. You're looking at selling. Oh wow, you're looking at selling that. What, down here? 47.90. Okay. I don't hate it. I don't hate it. I think if we can... Let me have a look on the daily. If we can close under here, if we can break and close under the 6981 level, 6981 2000. You know, if we can break and close under that level there, then yeah, maybe there's a chance for that potentially. AJ, my TP hit at Asia and I locked myself out for the day. Bosh. That is what we like to see. TP, stop loss, whatever it is. Once you've hit what you need to see for you to stop trading, lock yourself out. Get your brother or your family member or your wife or your husband or whoever you're living with to buy them a safe when only they know the combination. And then get them to put your computer in a safe, or maybe get them to lock the door and only they have the key to your office. Make sure you can't trade for the rest of the day. You know, once you're out, once you're done for the day, you don't need to trade. Like that was my biggest imposter syndrome. I think it is the word I'm looking for. That was my biggest sort of Achilles heel when trading, was trying to get myself to stop. Like I'd jump into the market, I'd stop trading, I'd be done by like 9, 10 a.m. And I'm like, what the hell am I supposed to do for the rest of the day? Like I've hit I think I hit like 3%. I was like it was like a 3K day. It was risking 1% being 1 hour about $1,000. You know, 3 hour TP, 1 to 3. I was done by 10 a.m. I was like, what the hell am I supposed to do now? So I just got back in the market. Boom, lost it all.
Yo.
Well. Hello.
Sorry, mate. The meeting ran over ever so slightly. Ever so slightly, but a good meeting. Good meeting. Good stuff was discussed, and good resolution. Well. Somebody needs to pop up that emoji, though, like a little well.
Yeah.
I almost read Master Rich. It's Mr. Rich. What's been up? What's been going on, mate? How's the stream been?
Well, I managed to call a bit of a ceasefire between Raphael Senior and Raphael Junior. We had a bit of Portuguese civil war going on in the chat.
Oh, Betancourt versus Garcia.
Yeah. Trying to work out who was older. And I was there like analyzing the chart with them, and I was like, guys, I'm low-key invested. Like, I want to know who's older.
Let me know.
Yeah, so I was like, okay. I was like, I'll tell you what, yeah, go for it. So, but other than that, not much. Just checking out silver, checking out GJ. What else have we checked out? Gold, EU, GU just took Asia highs and continued. Like we had some real bullish move there, so that was quite nice. Everyone who's watching right now was about to smash that like button. That was about to happen. Those who are new here were also about to subscribe.
It got really hot all of a sudden in this freaking.
It's because I'm here, mate. Yeah, I do. Hang on a minute. I do apologize. Is that better? Is that better? You'll cool down a bit now. I don't want to make you all hot and flustered. I don't want to get you all
hot and bothered, mate. Hot and bothered. Now we're supposed to be having a cold front, and all of a sudden the temperatures like reached into the late 20s, and I'm just like,
yeah, same here.
Jeez, what's going on?
Yeah, we had 9 days of rain, and then followed by today onwards is like 29 degrees. So I'm like, all right, I'm leaving tomorrow, but gee, thanks for the weather now.
Hello to everybody that is saying hello to me.
Hello. How are you?
Hello. All right, mate. Did you want to hop off, or are you sticking on?
I'm interviewing another fantastic trader here at the Vibers. I got an interview in about half an hour, so I'm gonna go prep for that. So
All right, dude, you
yeah,
go do that.
I
Leave it to
shall.
me.
Yeah, I shall see you guys in about 2 hours' time. In the meantime, I'm gonna go interview one of you absolute legends for getting. Dude, he emailed me with his payout as well. What an absolute whopper as well. So yeah, looking forward to interviewing him. So guys, make sure you keep an eye out because we're gonna be releasing some new trader interviews over the next couple of weeks as well. Because I've been flooded with interviews. So guys, I'm gonna love you and leave you, and I shall see y'all in about 2 hours. Peace.
Thank you very much, William. All right, let me see quickly who wants to talk about what at this point. Let me just... Sorry, guys. Thursdays, like, we have a bi-weekly, I always get confused between bi-weekly and bi-monthly. Bi-monthly means twice or every 2 months. And then bi-weekly is every 2 weeks. Okay, so it's bi-weekly. We have a bi-weekly meeting about everything. And they tend to, you have one person that brings their stuff, second person brings their stuff, third person, and so on and so forth. And then you have all of, you have the managers and the CEOs and whatnot in there. So a lot of fun. But they do tend to sometimes get a little bit flustering, especially if you're supposed to be on stream. Yes. Anyway, so as I was saying, LJ is not here today. LJ, he did mention yesterday he asked for the day off, basically. So he's traveling a little bit. And then no Ashleigh as well. Ashleigh was supposed to be in here today as well, but she got called into work. So no Ashleigh today. However, what we do have is we do have Rich Wells, who's going to pop in 50 minutes or so, give or take. So if you do have some questions for Richard Wells, do get them ready. So what I'm thinking is we go through 1 or 2 charts, and then who would like to just, I don't know, 10 questions on the trivia? Who would like to do that? Because obviously LJ not being here, there's not going to be any macro or fundamental analysis today. So how about we just do a little bit of trivia, which by the way is going to start happening more often, the trivia thing. So I got the go ahead to say yes, let's do it. So for everybody that enjoyed the trivia on Monday, yeah, we'll have some more trivia. All right, so who wants to look at what? Let's have a look. Raphael is out first in, saying, Richard, look at my EU entry. Okay, EU. Let's go to EU. All right, let me just try and look at this objectively without any indicators. Entry 116.61.7 and stop loss is slightly lower. Okay, so you put in a buy, 16617, 16617. So that's 14, that's 17. Entry is there. Stop loss is at 434. And take profit is at 7219. Okay, so that's on the 5. Let's look at the hourly first. I mean, this does look good. I'm not going to lie to you. What we did have, obviously, we had this very nice reaction off of Monday's news. So this pushed the price up. We had a bit of follow through as well on Monday. So the continuation during the London session, a bit of a pullback during the New York session, and since then we've kind of been stuck sideways, having a little bit of a breakout. So if I just zoom in ever so slightly, we take the low. This was yesterday's low. Sorry, wrong one. This was the Tokyo low, and this was Tokyo high. Now the interesting thing about the Tokyo high is that it also coincides with this low segment that we had here, which was the lower portion of yesterday's Tokyo session. So pretty interesting. If you just took the whole Tokyo session bottom one of the candles and you drew it all the way through, you basically have a support zone. So price pushed above, came back, reacted off of this area, or at least created it initially, then broke away from it, came back to retest it, and then continued higher. So a very nice support zone. And then during the New York session, we broke through, pushing it lower, which was kind of what I wanted. I wanted it to come back a little bit because I said this yesterday. I wanted price on all of the assets that went bullishly to try and pull back ever so slightly to start picking up some of the missed orders and then to continue up like momentously. In this case, that same support zone became a resistance point. So we broke through, we retested it, but we did not create a new low. So slightly different to this reaction that we had here, that being the high point. So that being the high, coming down, establishing the area, breaking above and creating a new high, then coming back down to test it, and then yet again breaking up to create a new high. So clear support zone. Whereas over here, even though it pushed lower, creating a resistance point, when it came to test it, this movement here did not create a new low. It would have been great if we actually did create a new low down here. Then there was more prevalence for price to, when retesting this area of resistance, to try and push lower again, because then it actually had a point to test. In this case, it had the lows to be tested and it failed. So in that case, you're starting to see higher lows and slightly higher highs. If I move this out of the way and I look at this whole segment of Tokyo as a area of consolidation, we're seeing a breakout. So your trade as of right now looks really good. I'm just going to say this first and foremost. So your take profit point is at the high. So if you, let's say hypothetically you don't reach it and it's somewhere over there, just using as an example, and then you start pulling back, how do you intend on managing your trade, Raphael? Do you intend to just leave it to go to take profit, or what do you think? In this case, I'm going to say I would always want to have my stop loss not above or equal to the recent point, but slightly below it. I'll go down to a lower time frame to kind of look for a reactionary point. So in this case, this whole segment that we had here, that wick, if we go down to the 5 minute, I would like to see what happened in this wicked area. So you had the high, which was created with a bullish movement, then a bit of a doji, and then a singular bearish candle, two bullish candles, and then a very strong bearish candle. So technically this whole segment here, from the top of this candle down to here, was a decision point. So I would then take this whole segment like that, just assuming that these top wicks weren't convicting. They weren't convicting in their upward continuation. So I would rather have my my take profit be slightly around this area, knowing that at this point in time, this was when the change happened. The full sell-off started at this point. Even though you had the high that was created, when you had an opportunity to try and test it, it failed. And then sellers started pitching in. Buyers tried to break this new attempt at creating a new downward directional movement, and then they just absolutely lost. So that's that back and forth that eventually the bears just absolutely overwhelmed the bulls. So it's in this area where I would very much like to see whether or not, if price does get back to it, it's going to have a similar reaction. Now, as far as targets go, that's pretty much where I would have targeted, either just at that box or slightly below it. And then I like your stop loss. I think your stop loss is great. You're going at the previous day New York session, which it's not the previous day low. The previous day low is all the way down here because that was rollover, and then we had that massive spike. But to have your stop loss all the way down here, I think is just silly. You've already proven with this low of Tokyo that this area that is down here is kind of like a safe zone. You've already had multiple attempts at trying to push price lower and then failed. So I do like where your stop loss is. I do feel like you can always have gone a little bit higher, but that's pretty much your style, like how you want to trade. So I do like your trade. It's just the take profit point I would probably have had a little bit lower. But other than that, I think it's pretty good. I think it's pretty good. It's a pretty good trade. So we're having a breakout of the Tokyo high right now on the 5 minute. So I'm just going to move this out of the way, then you can see it. So this is the breakout candle on the 5 minute. And then you technically had an attempt to try and push price lower and then failed. And then that was a very nice bullish candle. It doesn't look like it. But you are getting a slow upward ascent. Slow upward ascent like this. And it looks good so far. This is a continuation of this move of yesterday. I would have loved a deeper pullback and then continuation. However, what we do have, what I can see is we have a 5 minute base point over here, which was reacted upon. So I like this. This is exactly the kind of stuff that I'm looking for continuations. When you have a pullback to an area where there was previously a back and forth and then a reinitiation, a re-attempt to try and push higher. So a singular reaction here from a base area. Let me just mark this as a base area. We also had a much lower one down here, but this one to me was already mitigated because the base itself, if you have a look at the base here, this is on the 5 minute. The whole candle top and the candle bottom, at no point with the following candles did price dip below that bearish candle's wick. So there was no attempt to try and take price lower and then continue up. Whereas with this one down here, the base is created there. You get confirmation of follow up, but then you have this wick down here that sweeps that low. So to me, this area over here has been mitigated. I would probably have taken this whole segment then, instead of that base, I would have taken this whole segment like this, because then it becomes a break and retest and continuation. So yeah, I like your trade, Raffle. I think it's a good one. How long it's going to last, I don't know. You're almost close to a 1-to-1, so that's pretty good. But yeah, that looks good. All right, let's have a look-see. I would move to break even after a new low is created, and yes, the TP advice is top advice. Thanks. Oh, dude, no problem, mate. No problem. Unbiased trader, at the moment, I'm looking for long opportunities in indices in general. What are your views? Okay, so indices. Obviously, I'm a NASDAQ trader, so the first and foremost, I would have a look at NASDAQ. This morning, I was looking at a sell somewhere over here. However, going into a meeting, I don't want to be in a trade and in a meeting at the same time. I don't want to be distracted on either front. So no trade was taken here, but I was initially looking for us to try and sweep technically the London and New York low of yesterday. I wanted price to come back down and sweep and before picking up and going up higher. But that's only because from yesterday, when we reached this top, which was a pretty good one, which was 2508 or 25,080, we had a strong attempt to try and push into it, and then this absolute sell-off. And it was a decent sell-off. Like the whole, if you look at it like this, the whole London session up until that point had been $121, so at 12,000 points movement at that time. But just this initiated move from here down to the low, so when New York opened up, was 31,000 points in terms of movement. So there was this clearer idea from the New York Open, that price wanted to potentially come back lower to test areas down here. Unfortunately, we did not get this base tested at all, which is what I initially wanted. I wanted price to come back down to this base area, much like what happened with EU. I wanted that. So I would have loved if price started doing this, try to get down here, and then from there start picking up to try and take the previous day's highs. But in this case, what we did have was this small area over here, which was also a base, but a smaller base. So every base that's created on your way up during a trend, the lower down the base is, when you have a pullback, the stronger the reaction becomes. There's more trades that's sitting in wait there. So in this case, we had this reaction off of that base exactly this morning, and a secondary one as we were coming out of the New York session, and then all the way down here during the London session as well. So that's why I like bases. That's why I always look at these, and it's on the 5 minute. That's usually where I create my bases. You have a trend that's created. Price, in this case, sellers are not in control. They're trying to gain control. So what happens is there's a bit of a pullback, and then the bulls are like, nope, we're just continuing. And the same thing happens here as well. Bulls continued rallying. Bears try to, sell it down. Sorry, bulls take over control yet again. And you get it with each one of these continuation candles. Each one of these follow-up bullish candles after a bearish candle. And then when price comes back to it, because that was a previous area where there was this back and forth, or at least it's a decision point. It's an area where the bulls had complete control. The bears tried to have a say, and they just got overwhelmed. So you would assume in future, when price comes back to that area like it did over here, you're going to have a similar reaction than what you had previously. So that's bases. That's how I define a base. And in this case, you had multiple reactions. So I would have loved to have seen, because it had already been touched once, twice, a third time, and then reacted off of, I would have loved to have seen it broken through and then try and go lower to this one. So that was the idea with NASDAQ. As of right now, I'm still stuck with the idea of there's potentially more downside directional movements incoming. And it is because of how strong this movement was yesterday after we had reached the highs. And consider this, we haven't created any new highs whatsoever since yesterday. All of the highs that were created, all of the swing points of yesterday have kind of been, it hasn't been respected, but it hasn't even been tested. So technically, we are currently stuck in this range. So where we are right now, this consolidation, and it's a large area of consolidation, we're kind of consolidating. There's no particular directional bias. There's no particular directional movement. So in this case, we need a break. And you guys are probably getting sick of me saying this, but like every time we come on here, it's like, oh, Richard is always waiting. Yeah, that's exactly the point. We're always waiting. We're waiting for movements to happen. As of right now, it's very consolidative. We're struggling ever so slightly to pick a side. Yes, we are making slightly lower highs, ever so slightly in relation to these highs. However, we're also making equal lows to a degree, because these two lows, basically, this one and the one over here, is an equal low. So to me, as of right now, I'm waiting for a break. What would I like to see versus what I think is going to happen? I do think that there is a potential for us to try and push a little bit lower, but it is because of the fact that we've had multiple reactions here and we have not created new highs. Okay, not that one. So this reaction that we had down here directly led to that high. This reaction down here directly led to that high. This reaction down here yet has to complete its high. We'll see whether or not it's going to be that as a high, even though this movement was created off of that one. So we're getting microstructure on the lower time frame, but we're not getting any sort of directional bias. and that's kind of where I'm stuck at the moment. Personally, I would love to see a bit more of a breakout pushing price a little bit lower, because to me that would align very well with this base area down here for a pickup to try and push up price higher. Considering that that won't even be half of the move from the previous day. Where's my fib tool? From there all the way to the high, which was there. This move down here is the 50-point mark. So let me remove that one and bugger. This one. There we go. So you can see that this base area here is the 0.5 retracement zone for that initial impulsive move, and that is what I would like to see. I would like to see price come down, tap into this area, and then decide whether or not it wishes to continue up. Obviously, then this becomes a point of resistance. So because we had multiple reactions, this will then become a break zone, and I would like to see whether or not it can break through this area, retest it, and then continue higher. But I want a deeper pullback. That's what I want to see. It's also what I think is going to happen today. If we're going to have a breakout, I think it's going to be to the lower side to try and pick up some more orders and then continue higher. That's on NASDAQ. On S&P, it's going to be a similar thing, except that on S&P, it does feel like we had the consolidation here already during the Tokyo session, and we've had the breakout, and now a potential retest is in play. However, we also have the low point here from yesterday, which got wicked. No base reaction whatsoever. The base reaction is here. Oh, that's not a base. It has been... all of these bases, this one and this one has been mitigated. Slightly. Just slightly. But already a singular reaction. And then this one also did not respect it at all. So this low to me is not in play anymore. So we'll do this one. That low. And we'll do this one. So as of right now, 2 wicks on this low over here, which was the last section before the closure of the New York session. This high was created off of this low reaction. This lower high was created off this one. And since then, no real attempt to try and push back into this area up over here. Since then, consolidation. We're having a breakout. A bit of a W. Not really, a little bit. So you have a downward movement, a bit of a retrace, a equal low, and then an attempt to push up. So generally this would mean that there is a higher upside in place. However, because of the consolidation that we had here, I would like to see the reaction off of this area over here first and foremost, before I can say, yes, we're going to continue pushing higher. Also in line with what I want to see on NASDAQ is the fact that the S&P and the NAS, the indices, some of them tend to be correlated and they run nicely together. I would like to see this area respected and then price to try and push lower. Potentially come and sweep the lows of yesterday. Well, yesterday's New York lows, let's rather say. New York and London lows. Not the daily low. How deep would that be? Oh, that would be a massive pullback then. So from here to the highs of yesterday... yeah, 50% would be all the way down here, so 6719, and we're at 6767, so a full $60, so 600 points movement lower. I am of the opinion that it needs to test first before we can potentially push higher. So I would like to see price come down on S&P 500 as well as the NASDAQ. Let's look at US 30. US 30, I'm seeing the same thing. Same idea as with what we had with the S&P. A little bit of consolidation with rollover. Is that an equal high? That's almost an equal high. That's an equal high. I would like to see... What can we see? Did this react off of that? It did. Are we at it right now? We are. We also just reacted off of it this morning as well. Just wicked into it, but no follow through. I would still like to see this area get tested and then price push lower. And then potentially... This area doesn't look bad. So like this. Then a potential push down to there with the idea of testing the New York lows of yesterday. So these two areas is what I would like to see tested first and foremost. So want to see price come into the area, struggle to either break through or struggle to break above, then try and push a little bit lower, come and test this area down here, and then potentially come lower again. I don't know why I did that movement like that, but something like this is what I would like to see. Potentially pick up some orders here and then start pushing up. I mean, even the lows of, not the lows, the lows of the Tokyo session looks good for a potential area to test. So indices, I am net selling right now, even though it is a slightly sideways. We are seeing some movements, a little bit of movements. But for me right now, net selling. DXY at this point in time, still a bit sideways, even though we did have a very strong attempt yesterday. High created, Tokyo didn't sweep it. And since then, we've been making slightly lower highs. And finally, we broke lower than the Tokyo session, even though no follow through just yet. So this area over here is a high area of interest where we are right now. So establishment is over here. Retest, break and retest. Another retest, failed, push lower. Breakthrough, retest at the end of the New York session. Just before rollover, it tested again, started pushing up. We did not sweep the highs of the previous day. So this test that we had down here did not create a new high. Tested it yet again, even lower high, and then retest again. So I'm looking at this thinking there is a potential that this whole area right now is going to be in contention, and I would like to see it break lower, retest and continue lower, trying to potentially take these lows that we had, each one of these low swings. Let's see if there's any bases that were formed during them. No, but we do have an order block down here. It's a small order block. So a bullish order block, but it's way down low. So it's a very, very, very deep retracement. And in that case, you would then want to see whether or not it's actually just going to pick up some orders. This is not happening today. I don't think the dollar is going to come all the way down here today. Yes, yesterday came all the way down there and then pushed up, but I don't think this is today. So dollar index, I am looking for potential shorts on the dollar index. So I'm looking for all of the dollar pairs that is the quote currency in this case, the base currencies, let's rather say, to start pushing up higher. EU, GU, AU, I would like to see all of them push up a little bit, and then see something like UCAD, UCHF, UJPY to start pushing a little bit lower. Even though UJ has been bullish, I think there is a potential. We do have a very strong base area here, which ever so slightly got mitigated already. Massive consolidation, breakout. So maybe this whole segment like this. Let's see where that would be. So that is 159.40 to 159.23. I think if we can come back to this area, and then start pushing lower, that would be great. I don't see us coming back up here again for a while. I think this is pretty much the high end for UJ, and I don't think we're going to see that for a while. Yen pairs being the outside of the norm today. AU getting a bit of a sell-off. EU, I would like to see it continue higher. GU continue higher. NZD is also a little bit more flat. Yeah, that's currently where I'm stuck right now. All right, let's have a little look there. Let's look. Hello, Mark. How are you? Would you be able to look DAX? I'm short since 23,835. Oh, dude, that's nice. 23,835. 23,835. 23,835. So here. 835. Oh, on the 1 minute. Okay. Let's see, what made you decide to take this? Okay, you broke lower than Tokyo on the 1 minute. Okay, so you had a break and then a retest and then a volumetric push down. I like that. I don't use the 1 minute at all, but this looks good. What does it look like on the 5 minute? Okay. So no real test on the 5. All right. So entry probably somewhere over there. Little bit of drawdown. Where were you aiming for, Daily Facts? Okay, so you didn't say exactly where you were aiming for, but let's think about this. If you're entering on the 1, your take profit would either be on the 5 or the 15. Let's have a look at the 15. Okay, so gap filled. So base here, which was already filled as of right now. Can we go lower? Maybe this one. Or maybe this one is... Let me just see that. Is that one? Okay, yeah. So this is more the area that you would kind of aim for, and we've just missed it. So maybe have your take profit be somewhere over there, and then your stop loss be slightly above this candle. Something like that. Is that what you're looking for? What does it look like on the 5? It's a fly. The 5 minute doesn't look bad. The 5 minute has a nice base here, even though it got slightly mitigated. Not strongly mitigated, but looks good. So base. Okay. It looks alright. I just don't know where your stop loss and take profits are, but so far it looks good. I mean, if your stop loss is all the way up over there, then I mean you'd probably need to... You'd probably be aiming for this cluster down here. But then again, if you are going that large of a stop loss, I'm assuming it would be more of a swing trade, in which case you would probably be trying to aim all the way down here somewhere, which would make it a little bit more more in line with a swing strategy where you have large risk to reward ratios. But if you're doing more of a intraday, I would say stop loss probably somewhere over there, and then take profit, come in, take profit somewhere on one of these bottoms. Something like that would have been nice. I mean, this is a 1 to 3R trade, which is pretty good. But I don't know how you trade, sir. I don't know. Why I can't make payment in Indian rupee? You mean on the hub? I've never actually checked that. Dollar, euro, pound. I think you can. I think you can make payments on the hub in Indian rupee. I think so. Don't quote me just yet. Let me go and confirm for you. Because there's 4 payment options when it's cash, or in this case, not when it's not crypto. You can. The option is there in Indian rupee. It is. So it's USD, Euro, Pound, and Indian rupee. So you can. I don't know why you're being prevented, but you should be able to in your base currency. Usam is saying, Richard, the bases you refer to here, are they also known as pivot points? I'm not sure. Pivot points to me has always been it's like a, what do you call it? Pivot 1, pivot 2, pivot 3, and then those are on, what do you call those things? LJ uses them a lot. Standard deviation. So to me, standard deviations are the pivot points. The way that I see this is you only get a base in a trend. You don't get bases when you have consolidation. So a base, in my mind, is when a trend has been established and there is an attempt by the opposite direction. So in this case, we were in buys. So you have strong directional movement in buys in this case. Here we go. So strong directional movement in buys, and then an attempt by the opposite, in this case sells, trying to break this upward trend. So I always refer to trading as arm wrestling. You have 2 participants, 2 people arm wrestling, so grabbing hold and then trying to push each other away from the midpoint. And at some point, one of them is going to take over. One of them is going to win the round. So going to press the other one all the way down. That's the overwhelming action. It's this. This is where you have strong directional movements. But you have multiple rounds of arm wrestling. In this case, this is where the beginning of the next match, where the bears are getting a bit closer to pushing the bulls all the way out of the way, but then the bulls just absolutely overwhelm them and then continue pushing them lower. And that's the continuation. So that's what I refer to as bases. The base is an area where there was an attempt by the opposite directional, or in this case, opposite participant from the current trend direction, trying to break the trend. So this was an attempt by the bears to try and break this bullish movement that we had. It's how I've always viewed these areas. I don't know what the, let's call it the more conventional naming is for it, if that makes sense. This is how I came to understand it, and yeah, it's the same thing with order blocks. My understanding of an order block was not the same as Victor's understanding of order blocks. And Victor's understanding of order blocks makes a lot more sense to me, and I can see them a lot more. You can consider this an order block as well, because in this case, well, his is at the end of a move, not during the initialization of a move or in the midpoint of a move. So this, on the 5 minute, would be considered an outside bar, because that's the wrong one. Because the candle body of the previous candle, the whole candle is completely enveloped and both sides have been taken. So in this case, this is an engulfing candle because the whole candle engulfs, but it's outside bar. So it completely is outside of the other one's body. So how he would then mark it would be, I think, at the open and then the close, something like this. That would be his order block. But in my case, this is a base. But like I said, I think order blocks are at the initiation of a move. So an order block would be somewhere down here. You would need an order block here to kind of like say this is an order block, because the move completely reversed from there, where mine is in between, like as the move is going. I don't know if that makes sense to you, but that's what makes sense to me. Sort of like a rebound areas. You can consider it a rebound area, but an area where you rebound off of is like, in my mind, is like double, like double tops, double bottoms. So you move away from it, you come back to it, and then you rebound off of it. So you can consider the establishment and then the retest. That retest would be a rebounding. So it's just a retest of a base, but you can consider it in a rebound area. Do you have something like this on Discord, like something to view on YouTube? Or something to view on, So Discord, our Discord community and the live stream you can consider them two different communities. However, they're integrated. So we would like for people that come to the YouTube channel to eventually join the Discord, because the Discord has its own unique characteristics, its own unique society, you can almost think. The community that's there is a little bit more personal, I think, where we do try on the live stream to get to everybody's comments. The idea of the live stream has always been live trading, which we're encompassing with certain people, and we're trying to branch that out more, and like educational, to the sense of like you want people to learn from people that are established traders, and then thirdly, for not education, for entertainment purposes. So the idea is to have a little bit of fun on the YouTube, where with the Discord, I feel it's more personal. It's a little bit, the Discord is definitely, if you go and look at the channels or the streams that we have on Discord, like Rich's section this afternoon and tomorrow, it's very personal. So he directly answers your questions and directly talks to you. Where the live stream, you also have that, but we have other things that is more unique to the YouTube. But if you have an account, or have previously purchased an account with the Fivers, you will get access to the Discord, and then you can go and join all of that. We do have different segments, community news, announcements and whatnot, that you can go and have a look at, and they will tell you whom is going live, what information they're going to be talking about. It's really cool. I love the Discord, and I think everybody that is a part of this YouTube stream, go and get yourself an account just so you can get part of the Discord. It's really well worth it. Stash is saying, today I touched stop loss. I thought DXY was looking to fill yesterday's gap. I mean, okay, it's not. I mean, there's a massive, massive gap. So it depends on how tight you put your stop loss. I don't know exactly where you had placed your stop loss, but that's quite a big gap. There is always chance for this big gap to be filled. But I don't know how strong of a reaction we're going to have as of right now. It's a massive gap, though. Not going to lie. In relation to the movements itself. Quite the sell-off. See, so here you have on the hourly, from that point there to there, this would be, just missed it, didn't take it. If you took the whole one, then yeah, but in this case, this would be an order block, but there was no reaction off of it, it just missed it. Unless that's not how Victor sees an order block. But in this case, it just missed it on the way down as well, or on the way up as well. Yeah. I don't know. I would have thought that we could potentially fill this gap, but the problem is I know we fill portions of the gap. We just don't fill the gap exactly the day after, or 2 days after, or 3 days after. It sometimes can be weeks where price is moving away from it, and then eventually it starts making its way back to it and then fills it. But then that filling itself is a completely new trend. So it's not just a retracement for the segment, it's a new trend that's formed. So a new bullish trend that is created. Cole, are you a trader? I am. I do trade full time. I also manage the stream, so I do that also full time. But yeah, I do trade. Elphinius, how are you, mate? I haven't seen you in a while. The gap close. Yeah. To me, gaps do sometimes get filled, but not in its entirety. And if it's going to get filled, it's going to take some time, I think. Around 23.5K. Okay, so that's your take profit point, yeah? Okay, so you're all the way down here. Okay, so you're looking for this area down here. Okay, that makes sense. Stop loss is 23,895. So over there. I mean, you're looking for a 5R trade. That's pretty good. It's pretty good. So you're taking this area over here as your... Slightly above it. I like that. I do like that. That would then also basically be seen as the break and retest. And if it does break above this again, you're kind of like just wrong with the direction. So I do like that. But yeah, it looks good so far. I mean, you got all the way to a 1-to-1, so that's pretty good. I like that. Yeah. TP would be a full 6.5R. Oh, 23,400, not 500, sorry. 23,400, so you're here. Okay, so you are also hoping that we get all the way down here to this point. Or at least down there. Something like that. Or let's do this rather. Very specific take profit point. I mean, if you look at the hourly, we are quite bearish since last night, since yesterday afternoon. But always consider the fact that this move was very, very strong, very volumetric. So if we're looking at the fib for just the move itself, we're not taking into consideration where the move originated from, but just the impulse move already. We already reached half retracement. If we take the full move, so all the way from the bottom, so when it was initiated. Actually, let's take that one there, because there's... The first base is half retracement, and then all the way from the bottom here, between these two is half retracement. So do be careful with that as well. But you have your idea, you have your plan, and you go with that, mate. Fed will officially release the balance sheet at 4:30 p.m. today. Yes, that is today's news. Core PCE price index, final GDP price index, as well as unemployment claims. That is today at, well, in this case, 2:30 p.m. GMT plus 2, so that's 12:30 GMT, which is pretty good. 4:30 Eastern time today. If balance is 6.7 trillion, 50 basis point rate cut if balance is 6.6 trillion to 6.7 trillion, 25 basis point cut if balance is less than 6.6 trillion. No rate cut in April. Very interesting. Very interesting. We'll see whether or not we actually get that. We actually get those price points. But base points cut, We'll see. We will see, said the blind man. M-Rog asking, Richard, am I allowed to use Traders Connect to copy my trades from my private account? Dude, you can. So long as you are the owner of that account. You're not allowed to trade from someone else's account into your account. So you also need to be the owner of that specific account. So very much need to make sure that you can prove that. Let's put it like that. But there's no limitation on copy trading so long as you are the owner. While we call them a base, I previously considered them a demand zone. I mean, that's fair. That's fair. I do like the idea of referring to it also as a demand zone. However, to me, demand zones is not in a trend. It's at the bottom of a trend, as an example. So it's a reaction where there was a complete turnaround. Yo, Rich, what's up?
Hey, how we doing? What have I stumbled into?
Just talking about my way of identifying my bases for my rally-based rallies and my drop-based drops.
Okay.
Yeah,
awesome.
So more of a technical Richard Butler vision thing.
This is interesting. We held a poll in the Discord in one of the coaching workshops, and 80% of traders said they had a strategy, they knew their edge, and they knew how to execute on it as well. And so 20% was more based on not knew how to execute, but 20% was mistakes around executing on it as well. So I could chat about price action, mate, for days. It is something that I have a secret soft spot for, but it doesn't overlap too much in what I do with the fivers. A lot of what we focus on is mindset and kind of how to really build your edge to a state where you execute on it with consistency and confidence. But there's the trader in me that's like, talk about price action. So I'm so glad I kind of walked into you giving us a masterclass in these kind of setups.
Well, thanks, Rich. Appreciate it. What do you want to talk about? I know that whenever you rock up on a Thursday, there's going to be some nuggets of wisdom. So I can't wait. What are we talking about? What do you want to talk about? Tell me.
Well, first
I have no patience today. I want to know.
So first of all, I'd love to draw a line in the sand and say I'm going to be on the stream for the next hour. If there's anything that chat wants to chat about, these streams exist solely for your benefit. So if there's anything specifically that you're sitting on at the moment and it's a hot topic and you want to chat to us about it, get it in the chat. If you just say, hey, Richard, I got a question, we're going to assume that we're talking about the stream host just above me. But if you say, hey, Rich, then I will kind of take the answer on it. There was something I wanted to touch on ever so quickly. So we get asked this quite a lot of the time. How do you join the Discord? So you can watch the YouTube streams. Anyone can turn up, watch the YouTube streams, and you're more than welcome to. You're more than welcome to chat, give us a thumbs up, give us a subscribe, and have a conversation with us. Now, we built a performance coaching course, which you also have access to on the Fivers website. So you go to the Fivers website, you go Learn to Trade, and you're going to get access to Module 1 of the performance coaching course, 3 videos. If you want to get access to the full course, that's where you've got to register as a trader. Now, you don't have to purchase an account, you just have to register with your email address. So completely free to you. You get access to the full performance coaching course, which is 18 videos. Took nearly a year for me to build this, okay? But if you want to get access to the juice, and I call it the juice because I'm a little bit biased, this month is community month in the Fivers Discord. There are over 30,000 members in the Discord, and we are focused this month on building it out with competitions, with giveaways, with workshops as well. And we are just week on week hitting new numbers within the course. Yesterday was an incredible workshop from Victor, you know him from the streams. And today I'll be holding a workshop in about 3.5 hours from now. And then I think tomorrow is Akram and LJ, and I'll be holding another one as well. Now, if you do want to get access to the Fivers Discord, you do have to be a Fivers trader, which is this message that I've pulled up on the screen at the moment. You can join the Discord from your hub. So you get access to the hub, which is where the performance coaching course is, just by registering with your email address. If you purchased at least one Fivers account, I believe the cheapest account, Richard helped me out here, I want to say it's $22 and it is a bootcamp account.
It's the 2.5K high stakes account.
Is that lower than the bootcamp, the 20K bootcamp for $22?
The boot camp, I don't think, is $22. No.
Is it not? Has chat been lying to me? I asked them last week. I was like, "What's the cheapest account?" Okay, so you can pick up
the cheapest account. I'm gonna confirm for you now, mate. So let's not BS anybody in chat.
Let's not start any rumors that we can't cash in.
Richard said, no. Sorry, guys. Let's see.
Yeah, let's see what the bar to end is.
The 20K bootcamp is $22. The high stake 2.5K is $19.
19. Okay, so for $19, what you do is you get access to the Fivers Discord, and even if you run through that account and it only lasts you a few days, which we really hope you don't, you still get access to the Fivers Discord. Now, inside that Discord is where you get access to a lot more personal access to a lot of the Fivers team and some of the work that we do, including the coaching calls, the coaching workshops. It's just a massive chat for traders to just rock up for nearly a couple of hours and just talk about everything trading related. So if you do touch on something in chat today and we don't have time to talk about it, those streams typically are a place where we get a little bit more time to go through stuff on a one-on-one level. And one of the things that come up more recently is a trader asked me, how do I get more confident in my strategy? Now, before we dive into this rabbit hole, because I don't think it's that deep, at least to me, it's not that deep. I try and keep it simple. I would love to hear from our audience of 160 today. If you had to build your confidence around your edge, around your strategy, if you had to increase it ever so slightly, what's the approach you would use to gain a little bit more confidence? Now, if I can get 3 answers, I'll then expand on this topic and I'll talk you through exactly how I've done this as a trader myself. Much like Richard Butler, I've been trading the markets full time for many, many years. I think it's totaling about 8 years for myself. I'm holding multiple funded accounts with the Fivers, and it's not a brag of, hey, look at me. It's just a byproduct of the processes that I've built. Typically, as traders, we don't like rules. No one likes rules. Rules are boring. Rules are fun. Rules box you in. But if we don't create at least a framework for how we attempt to approach the market, I'm talking about an entry criteria, an exit criteria. I'm talking about risk management. I'm talking about having a plan, like what is your best intention? And then a review process that says, I dropped the soap again. If we don't have this kind of feedback loops, I don't know where they come from. Don't challenge me on it. Anyway, if we don't have these kind of feedback loops, then there's a part of me, I don't even know where that come from, but there's a part of me that is just going to turn up each day and going to drift and gonna wander. And this is where traders just waste so much time. It's so easy for a trader to go 2 years, 3 years, 4 years in the market and still not really get a great return on their time. How do I know? I lost money for 2 years. And in the 3rd year, everything changed where I managed to perform around about break even, which to me was a massive achievement. But I was only able to do it because I started to frame how I wanted to approach the market. How was I going to manage my risk? How was I going to manage myself? So these are the kind of topics in the Discord sessions that we go into way, way deeper. So if you've got some thoughts around how you would build your confidence in your trading setup, we'd love to hear it from you in chat. And Richard, why don't you kick us off? You got a little nugget while I catch up with chat?
For building confidence in trading.
Sure. Or building confidence in your strategy, if we're going to be specific.
Okay. I can talk from my experience. My experience being I'm somebody that I like numbers. If I see a stat or I see a number and it looks good, that gives me confidence. It's that you do the mathematical work and then you get that feedback, and the feedback itself is the thing that's like, yeah, this actually does work. And then it's all of the next steps of like, okay, if I follow it, what can I reasonably expect? Is there a error amount that I can expect being above or below my expectancy? So for me, it's looking at the numbers. And I gain confidence by seeing me either hitting my expectancy or me being within that margin of error. And if I'm within that margin of error, I hope from my back-tested information that I stuck to my plan entirely. But if I don't stick to my plan and I start drifting, that kind of knocks my confidence in terms of trading. Then I become a little bit more, let's not call it scared to trade or scared to take an actual entry, but it's that I'm entering when I'm supposed to, but then I become scared for holding the trade to fruition. So if I do my back testing and I see the numbers and they line up, I go with it. Then it's just like, great, I love this. But when it starts drifting, I start like, ugh. So that's for me. Numbers, and if I can reach that number of over a data set, then confidence is peaking.
So creating a feedback loop that takes trading from just it feels like it's working into hard numbers that shows you, hey, this is actually working or this isn't working, and you can use that information as your benchmark to be able to pivot. I see we've got a comment here that says from Daily Facts, has got a daily fact for us saying journal and trust the process. So again, creating a feedback loop that allows us to take trading from in our head into something that works. Now, when I talk about trading being in our heads, it's actually a nod and a reference to what Mark Douglas spoke about in his book, Trading in the Zone. Wonderful trading related book. If you haven't read it, I would totally recommend that book. And he talks about the idea that in the real world, we have boundaries. And this is kind of my interpretation. I'm paraphrasing slightly. But in the real world, we have boundaries. You know, if you were to, I'm not going to give examples, but there's certain things that you would do that would get you in trouble. Now, in trading, you can do whatever you like. You can just chuck on a random trade on in the market. You can average into it. You can have no stop loss. You can cut your trade at 2 pips of profit. In fact, I see that a trader is talking about the difference between a big account and a small account. We'll go into that in a sec. But typically, Mark Douglas talks about you have unlimited creative ability in the market to decide when the fun or the pain starts and exactly when it stops. Now, a lot of the time when traders get offside in a trade, they become compromised, and the trade just runs against them. And if you haven't felt it, it feels like you are mentally paralyzed. You're looking at the charts, you're looking at your P&L, and it's just going down. It's $1,000 down. And your analysis was only to lose $300. Then it dropped $1,500, then $2,000, then $3,000. I've been on the wrong end of this several times. And my ability to look at the chart and say, right, Rich, you had an analysis and you had a stop loss, and this trade would have been $300 if you were wrong. Why are you down $2,500 and it's still going against you? Now, the ability to do that when you're in the moment, our cortisol levels are up, our chimp brain has grabbed hold of the wheel. Now, our chimp brain is our emotional brain, makes instant gratification decisions, loves to avoid pain, seek pleasure. It's very emotionally reactive. And in trading, that's not a good captain to have at the wheel. Now, typically when traders end up offside in a trade or even in a big profitable trade, that chimp brain is the first one to the party, turns up, gets all excited. And our job as a trader is to not allow that chimp to make an emotional decision. Emotional decisions are great in the real world. They can keep you alive. They keep you out of fight or flight. They keep you in fight or flight. They can get you out of trouble. But in the markets, we perceive it as threatening. We perceive it as this is a fight or flight moment. But actually what we want to do is try and keep ourselves calm. We want to try and follow our plan, and we want to have processes to be able to do that. So if you don't have these processes, it's super simple to slip into allowing that chimp to grab the wheel, take the ship on autopilot, and typically it ends up terrible. So if you've ever sort of blinked and think, how did I just blow my account? It's because you weren't driving the vehicle anymore. It was the chimp brain had kind of stepped up. And it happens to many of us. And sadly, well, I say sadly, fortunately, it happened to me in a big way around about year 2 in my trading journey. And as a result, it was one of the biggest lessons that caused me to actually address the way I was conducting myself in the market. So this kind of ties in to a message. I see if I can find it. I'm going to bring it up. Hang on. I've gone a little bit too far. I got it.
Which one?
This one here, I can see it. Okay, So
Yeah.
Stash says, I've got 2 challenge accounts. I've got a 5K and a 100K. In the 5K, I usually let trades run till TP or stop loss because I, in brackets, see small numbers. $25, maybe $50. I don't care. But the same trades on the bigger account, I assume, hurt. So we're talking about how we instantly connect value to money. We connect this idea of, if this trade wins, I'm going to win $25. I'm going to lose $25. $25 typically doesn't really change our lives. So it's super easy to feel unthreatened about moving outside of our comfort zone. Now, this is something that our chimp brain and our emotional brain loves to do, loves to sit in routines and comfort zones. Sometimes they can be toxic and they might not be helpful. So let's say, for an example, you're trading $50 risk and you win a trade. Cool, it's $50. And I don't mean to downplay what $50 is, but for most people, $50 doesn't get them out of the rat race. It doesn't retire their friends or family. It doesn't change their lives significantly. Now, when you start talking about a bigger account and that same $50 now becomes $1,000, all of a sudden $1,000 is so much easier to start thinking what you would do with it. I bet most of us here haven't laid in bed in the morning and thought, what would I do if I had a $50 win today? How would I spend it? But the same thought is, how would I spend $2,000 if I won $2,000 today? How would I spend it? It's much easier to start attaching value to bigger numbers. And the same pattern happens when we take on a bigger trading account. It's normal. So when we lose $1,000, so most retail traders, they're not going to have $10,000 in an account. And most retail traders are certainly not going to have $1,000 open risk on a position. But when we take on a prop firm account and we take on 100K at 1% risk, we see these numbers move, and these numbers move, and they're way bigger than what we used to. And I know you're thinking, well, that's great, Rich. Thanks for the theory lesson. But what can I friggin' do about it? Well, I can tell you what you can do about it. In a poll we had in the community, over 85% of traders will watch their P&L when they're in a trade. But they admitted that they didn't need to watch their P&L. It was just fun. So the trouble is, if trading is fun, it's exciting. That same excitement, if you experience excitement in your trading, take the equal and opposite experience of that excitement. That will be the pain and the fear that you experience. So if you're up $1,000 and this is really cool and it's really exciting, if you're down $1,000, you're typically going to experience the opposite of that excitement, and you'll experience the same kind of fear and the same kind of pain. So as traders, when we look at the P&L, our objectivity massively starts to drop because we're putting the profit way before the process. Now, up until we get into the trade, we start looking at the process. Hey, this is a valid trade. I'm looking for rally-based rally, and I'm waiting for the market to come and give me my entry criteria. I've tested this. I've studied this. There's edge within my strategy. I just need to execute on it. Life is simple. Holy moly, I'm in the trade. I'm up $500. All of a sudden, we're thinking about a different reason for getting in the trade. Maybe I should close this because I'm up at $500. $500 could maybe fix my car or pay my rent for the month, or it could pay my food shop for the entire month, depending on where you live. So it's super easy for us to humanize the P&L swings. Now, over time, we can condition ourselves and we can learn to reprogram our neural pathways to look at them P&Ls as less exciting and less threatening. But as a trader that has $500 in their bank, to see a $1,000 swing on a screen is not normal. Let's call it for what it is. It's not normal to see those kind of...
you're not used to it.
Exactly. So the reaction that we're going to have typically is going to be outside of our normal reaction, which will be, I'm calm, I'm collected, I'm the trader I want to be. So it's going to be normal to have these reactions of, oh, I'm up $300, let me close this trade. Or, I'm down $300, I don't know what to do. Yep. And think of this logically. A trader moves their stop loss, and the logical reason behind it, this is what the chimp brain will often say. I'm down $300. Rather than let the market hit my stop loss, I'm going to move it because I don't want to lose. A trader will literally tell themselves, I will move my stop loss just to try and avoid the pain of losing. But if we logically look at what the trader's doing, the trader should be saying, I'm going to move my stop loss and I'm going to open up an uncertainty around how much I'm actually going to be able to lose within this trade. In fact, I'm willing to risk my entire account for the sake of being right and getting lucky. If your stop loss is in a place where your trade is invalidated and the market hits it, it's a good loss. And then you look for the next opportunity that meets your trading plan. So there's kind of a lot of layers here that we have to make obviously friends with being a loser. There's a wonderful book from Tom Hugard called Best Loser Wins. And it's about knowing how to connect with that trade before you get in, letting that trade hit your objectivity, TP or stop loss. And if you notice that you're looking at the P&L swings because you're trading a 100K account, close the P&L tab at the bottom. If you don't need the P&L to make a decision on it, why are you staring at it? Because if you think about trading for 20 years, in 20 years from now, would you be looking at the P&L swing? Like, would you be looking at that balance at the bottom of the screen going up and down and up and down? A lot of the time we wouldn't. We would just be saying, no, I'm just objectively trading my edge and I'm letting the market do its thing. And so this is kind of what I've picked up through my journey of 8 years as a trader, is it's more helpful when I close the P&L tab at the bottom and I just look at the candles. And if I took the entry on a 1 minute chart, for an example, when I'm in the trade and my management rule is TP or stop loss, I will zoom out to like an hourly chart and it feels way less threatening. Then I'll go to my spreadsheet, I'll record the trade, and all I care about is the same as what Richard referenced, which is, did I follow my plan? Is it a 1? Is it a -1? And we create a data set that tells us either your edge is working in the market, then you can logically look to scale up, or your edge isn't working in the market, and how big is this drawdown? How long has it been since you've earned profits? And do we need to adjust our risk and size accordingly? But it's super easy for us to emotionalize trading. And if that wasn't a thing, then, well, I think the markets would move a little bit more differently. And also there wouldn't be any work for psychologists and
Someone
performance
like
coaches.
yourself.
Yeah, so you've got to understand that when anyone tries to sell you on an idea, they're going to do so typically from their own bias. What I'm trying to do is just explain to you what I've experienced in my journey as a trader and the work I've done to navigate that and what's worked for me. So all I do is just share openly what I've experienced as a trader. And when I work alongside hundreds of traders, when you see those traders have a breakthrough, it always falls back to the same kind of things. If they found an objective way to participate in the market, they found a way to realize when they're wasting their time or their strategy doesn't work, and they found a way to pivot that's logical and not emotional. So there is a right number that they will hit before they say, my system doesn't work, I need to adapt it, refine it, or I need to start thinking about new ways to interact with the market. And it's cool to see, but you've then got a couple of traders that will size up, chuck on massive trades, get lucky, and then it ruins all the statistics for not just themselves, for everyone.
There are
because
outliers.
Yeah, there are. But if we're looking at averages, the way to massively increase your odds on having a sustainable career in the markets is to always manage your always manage your risk on every single trade. And this genuinely, if you asked 100 traders this and they answered it honestly, the results would be shocking. If a trader took 10 trades, how many times could they hand on heart say, I managed my risk well on every single trade? And this is a fundamental of trading. But so many traders have this attitude of, I'm going to be the outlier, I'm going to be different.
Yep.
But they don't manage the risk on every single trade. And as a result, what do we see? Blown challenge account, blown challenge account, blown personal account, blown live funding account.
Yeah.
How do I know? I've been there. I've done it. And it's always been because I've had a bias or I've had an idea about the market. And you know what? The market's dropped 3% today. It's got to go up. And I would just buy it for no technical reason other than it can't drop any further. And it would stop me out. And I'd be like, it's even more stretched now. That elastic band's going to pull back up. Let me get in again. And to this day, I struggle to think of a account that I have completely blown that was based on trading and managing my risk. Everyone I think of was all me doing really dumb stuff and skipping the foundations and the basics that we talk about.
Yep.
Manage your risk on every single trade. Even if you say I'm going to risk 4% on a trade, please don't. It's pretty aggressive. But you would then be going, well, I'm managing my risk. It's unfortunate and sad just how many traders will go, hey, daily stop got hit. Half the account was left untouched, but the account just got blown because the trader just couldn't stop. And it's better to take a controlled loss than the almighty loss that's going to take your account away. It's just what we witnessed, and it's what I've personally experienced.
I wanted to mention this. That's why I brought the screen up. So you were talking about like the visualization of seeing money movements. So the nice thing is with MetaTrader is when you are in a trade, you can right click down here and it's saying volumes now, but there will be a third one just underneath volumes that says profit. And you can have it in amount, which would be dollar, or whatever your account balance is in, or it will be in points. So you can literally have here where it says profits, you can have it in points. And then obviously you'll have the cumulative ones for whatever amounts of trades that you have. Currently, you'll see it in profit. But then what you do is you literally just drag this until you can only see the actual position, the one position that you're in, and not the profit, because the profit will be underneath it. So you'll have two lines. You'll have the information as it's stipulated here, balance, equity, free margin. Then you'll have the trade, and then underneath that, the third column would be profits. So change it to points. So you're always just looking at the points, which is like the pip movement or, the spread or whatever. You would see just that. You can still close it if you have to. I mean, you can quickly reach it and just click X if you so wanted to close it. But you're not actively seeing the dollar amount. So you're seeing the points movements, but not the dollar movements. That's something that I did in the beginning when I was looking at like, oh wow, this thing is like, it's going crazy. It's like $200, $300, $400 in profit. I'm like, oh crap, I need to close it. Or if it goes like down into drawdown, then you want to close it. It's that idea of out of sight, out of mind. You're focusing on the movement itself, not the ramification of the movement. So you're not focusing on the outcome per se. If I close it now, it's going to be X winner or an X loss. You're just like, well, it's still 80% of the way away from my take profit, or it's 80% of the way away from my of my stop loss. So in that case, you're not focusing on the dollar value. And I think I've spoken about this before, where you need to devalue the value of money for yourself. And understand that if you make a decision now based on the information that's on the screen, that dollar value that you're seeing, you're controlled by that value. You're saying to your future self with your future trades that $200 is the only amount that I'm allowed to lose. Now you go and get yourself a bigger account. That $200 equals $2,000 if you had a 10K and now you have a 100K account. So you're teaching yourself that this is the limits that I have. And if I get to $200, that's too much for me. But you're trading an account that's 10 times larger. You're going to have 10 times more profits and 10 times more stop losses, and then it's still the equivalent percentage between the two. If you compare them in percentage-wise, it's still 1% for the one and 1% for the other one, that kind of like thing. So if you... It's like putting a Band-Aid on a sore, on like a deep cut. You're going to need stitches for that cut, but you're putting a Band-Aid because that's what you can do right now. So right now, remove that sight portion until you can find something that is implementable for your current issue to try and work your way out of it. So just as a Band-Aid, change it to points if you're in a trade, and then just move it down so you can still close and manage the trade if you have to, but you're not seeing the actual dollar amount. That's one way. And then there was another suggestion about doing copy trading, where you take the smaller account and let that be your focal point, and then you have the bigger account be the copied, so the master and slave account. So let that one be the slave account. So you don't actually get to see it. You still need to go and check and make sure that your entries were as it was supposed to be and your stop losses and all of that stuff printed the way that it was supposed to be, and you can then adjust that. But you're not actively looking at the dollar value move up and down. So that's another way to also just kind of, once again, put a Band-Aid on a very deep cut. You're going to need stitches for that one, mate, but the idea is still the same.
You know, you remind me actually, when you trade with Sol, I believe Sol changes his profit to points as well. So at the bottom of his screen, when he trades live, a lot of the time he will have points on there. And the second thing you said is about putting the small account. So one of the accounts that I trade, one of my live accounts with the Fives is a 60k high stakes. I don't think they offer this account anymore, but it's
not anymore. It's now a 50k.
The 50 and the 100. But I've got a 60k, which is one of my live accounts. And I used to trade on this predominantly as the master account. But exactly as Richard has said, rather than kind of checking that the trade executed and then seeing larger numbers just to make sure it's executed, I found that a little bit triggering. It got my chimp brain going, $100. And even trading 8 years, it was like, I know it's connected to other accounts in the back end. So I deliberately changed the master account to a 5K. It's a very, very small account, but it's super chill to see trades that finish $10 in profit, $20 in profit, and not have to think about, wow, this, you know, if I look at the P&L, because we all do it, we see where our TP is and we know what we've risked on a trade. And even if we don't look at the P&L, we can still go, I reckon I'm up about 520. And then you just open the P&L tab for a minute and then it goes,
and then it's
460. It goes 460, 400, 350. And it's like, oh, why did I look? Maybe I should close this. So, yeah, for me, it's actually helped by having the master account as a smaller account. And if I did have the P&L out, it doesn't trigger me. It's like, oh, cool. It's just moving and doing what it does. Two things quickly. So, Daily Fact says, I might not be able to make the Discord session today. Will it be recorded? Some of the sessions we've started to move into recording stage. I'm not sure if we will record today. If we do, I'll make sure that it's edited and uploaded as soon as I get an opportunity to do it. Matthew was talking recently. Thanks for your insight on how I can handle my trade having a bias, but stop out before going in my bias. With your insight, I begin to see improvement. Matthew, I love to hear that, and I wish you all the best.
Yeah, that was on Tuesday.
Yes, it was a couple of days ago. And this is what we love to see. We love to see traders connecting with the stuff that we mention, because it's just like a mirror. We're not going to give you the answer, but we're going to give you an idea, and that idea is something that you can then go work on and see if you can make it your own, to see if you can get it to complement your trading journey. Mark says, I can listen to Rich and get on flow state. His voice is so calming. If you want to check out a little bit more of that kind of flow state, the Fivers course that we've created has 2.5 hours of content of me basically just explaining trading concepts. Now, there's one section in there in module 2, which is called the emotional playbook. And that emotional playbook is where you create the most calming answer that you need to hear in that moment, and you play it back. You can be an audio recording. I did genuinely think about what would it be like for me to create an emotional playbook by covering the 10 biggest things traders experience. For an example, I've got a valid trade setting up, I'm feeling the fear, I can't bring myself to place that trade. What is the voice that trader needs to hear in the moment? I can tell you what it's not. It's not the chimp brain that's running around in their head going, this trade's going to lose, don't place it, the last trade lost, why should you place this one? Size down, take it on a demo account. Like, what is the voice you need to hear in that moment? And it's a calm, relaxed, okay, we've got a valid trade setting up. Now, this trade is in line with a plan that we've tested for hundreds of trades, and we know that we have a small edge here. I understand you feel super nervous right now. We agreed that we're going to take these trades together. And when I say together, we're talking about the emotional brain and the logical brain. So we're agreeing and we're improving that relationship. I want you to place 1 unit of risk on the correct entry and just accept that if you can do this, the feedback you get is going to tell you over time that your data is working and your strategy is working, or it's not. If we fail to do this, we hurt ourselves long term. Let's just place that trade. And that's the voice I would need to hear. And I was like, well, what if I recorded this and just played it to myself every time I felt nervous about placing a trade? What if every time I felt super nervous when a trade was in profit and it's nearly at my take profit and it pulls back a bit, that chimp brain starts firing up, close the trade, you nearly had $1,000, you nearly passed your funded account, you nearly got a payout. That chimp brain doesn't help me in that moment. My cortisol levels are rising, my adrenaline's going up through the roof, heart rate's increasing, palms are sweaty. I'm sure there's a rhyme there somewhere about spaghetti, but we're not going there. What we're doing is we're talking about what's the voice I need to hear in that moment. And again, it's just recognizing, hey, this trade isn't done yet. We made a plan. We're following that plan. I need to be able to say that I followed my plan correctly right here. We've got to put that process ahead of the P&L to become the trader we want to be. Let's allow this trade to play out together. And if it goes to our stop loss, it will be one good loss. And at least we can say we've done the right thing. If it goes to our TP, we're just following the system. And that's the voice of reason that I would need. And there's probably 10 triggers where traders will be in profit and want to close a trade. They want to revenge trade another trade. They want to FOMO into a trade. They're bored, or they want to skip a trade, or they don't want to take a loss, or, all these kind of areas where the chimp brain just suddenly goes, bing, trigger. And it just starts whispering and pouring sweet honey in your ear. And a lot of the times, what it tells us is not helpful to our bigger objective as a trader, which is always to follow our plan. So that's just something that you've got that in module 2, and it's called your emotional playbook. And I would always encourage traders to create their own emotional playbook, because you know the voice that you need to hear in that moment. Will I do an emotional playbook recording session at some point for traders if they want to? Maybe. I mean, I've got work for about 15 years ahead of me, so it would be very low down on a very long list of stuff. But I genuinely appreciate the feedback, and I hope it's helpful as well. So just to recap, if you're watching the P&L, typically it's unhelpful. As Richard suggested, you can change the P&L into points, and then if you find it more helpful, set up a small master account to run your trades, and then they copy into your larger accounts. And if you still find it's too triggering, just close the P&L tab and just focus on the price action and create a feedback loop that tells you when you've done a good thing. A little challenge that there was a study that was done, and it was something like 75% or 80% of drivers felt they were above average when it comes to their ability to drive. So a lot of the time, we will always round up our ability to perform a task. So trading, for example, there is probably the same truth that 70 to 80% of people would go, oh yeah, I'm definitely above average as a trader. Yet, we know the statistics, 20% of people will make money, or maybe even lower than that. Now, if you are, or should I say, if you really want to test your ability in the markets, if you opened a demo account and you turned the profit to points and you traded flat lot size, and you asked yourself, can I make 10 points a day? Every time you just think, you know what, I want to get in here, I want to trade here. If you had a demo account and you allowed yourself to just practice this again and again and again, you'd get feedback on whether or not you could make more points than you lose. And it's a little challenge that I set myself. If I could make 10 points a day at a flat lot size, what would that mean for a P&L perspective? And so I went on a challenge, and I actually realized that I couldn't reliably make 10 points a day, but I felt like I could. I was like, oh no, I can easily make 10 points a day. I'm probably right on my analysis 80% of the time. Of course I can make 10 points a day. So I challenged it, and I said, well, put it in on a demo account and go prove that you can take these random trades that just feel good in the moment. And it was very humbling, because what it actually did is it showed me that there is a gap between how good I thought I was and the reality of how I actually am. I couldn't make 10 points a day, not on average, not consistently. So there was a part of me that looked at this and said, well, once you realize this, then I'm now going to stop behaving in a way that's impulsive on my live accounts. Because most of the time I was like, oh, I'm sure the price will reject a little bit here and I'll get, say, 4 points or 6 points. And the market would just kind of chop me about. And at the end of the month, I was like, oh, I probably got a little unlucky. So I created a framework and a set of rules. And I said, if you can do it, go prove it. And so a lot of what we do in trading is about building evidence that you actually can objectively scale up and size your trades accordingly, because a lot of the time we over optimistically guess that we should be in an area that actually our skill just isn't there. So it's all about building a realistic mirror that shows you where you are logically rather than where do you think you are. Because if you behave on where you think you are relative to where you actually are, if you're a losing trader but you think you're profitable and you start sizing up, it's just going to put a magnifying glass over what's really happening within your trading. So everything we want to do in trading, we want to build evidence and then be able to assess and say, this is actually working based on data, not I think it's working. The amount of times you make money and it feels like you're not doing very well, feelings aren't facts. And you can create wonderful feedback loops that give you those facts and give you those insights. And that's the stage I wish that all traders could reach and assess for themselves after doing that work. Does having this process help me? Or is it just a complete waste of time and I'm better off just slinging trades around in the market? Every profitable trader I know who has built and underpinned it with a system that gives them feedback has always said, I need this system to be profitable. I couldn't confidently continue for the next 3 to 5 years without this kind of feedback loop, because if not, my P&L is going to start tying into my identity. And a really good way, if you're finding that each win gets you too excited, each loss gets you too fearful, is to build a spreadsheet and dump all your emotions in there. You're on a 5R drawdown? No problem. Go to your spreadsheet, have a look at your data. Cool, I'm up 62R this year. What's a 5R drawdown? It's nothing. So it's like looking at the chart on Richard's screen. You can see the price action runs off to the top, but it pulls back and has these pullbacks. Now, in these pullbacks, it's like the drawdown, and it's so easy for us as traders to get caught in my strategy's not working. I need to change my rules. I need to change my risk. Maybe I don't take the next trade. All these things aren't helpful, but if you can evidence it, there will be a day and a number where we talk about this in Module 3, how to deal with drawdowns. There will be a number where your trading vehicle overheats and the wheels fly off and it's no longer sustainable to keep trading it. Let the data tell you that, not your emotions, because your emotions will arrive at that conclusion way too early and probably incorrectly as well.
Yeah. Very, very interesting. I still haven't started the course yet. I've had some weekend things that I needed to, get to. It's difficult in the week, busy weeks. But I definitely am going to eventually start it. No pressure on myself, but definitely going to start it, and also kind of like want to see where it takes me. Because I think even as full-time traders, and even those that are not full-time traders, I think the goal is always the same. Within margin, the same. But we don't all have the same start point. So I'm going to join your course. I would consider myself a little bit further ahead than the average Joe Schmo. So for me, I'm starting with my cup half full, where someone else might be starting the performance coach with a cup completely empty, and some obviously starting it with a cup completely full. The idea is that you need to realize when you go into this course that you need to go in with an open mind and a completely blank slate ready to learn, instead of saying, I already know this. Because if you're going into that with this, I already know this, it kind of devalues what you can gain from the course itself, because you're going in there with your own bias. And your own bias has brought you to where you are right now. And it can be either very profitable or barely break even, or a losing bias. So you need to go into it clear mind, open, and ready to just learn. That's how I'm going to approach it. I'm going to approach it as if I have never traded in my life.
I'd be interested to hear your feedback. A lot of the feedback we get around the course at the moment, it kind of falls into the two camps that you're talking about. Traders that have a lot of experience and they go through it and go, oh yeah, it's a lot of stuff I already knew. And then it's traders that have sort of yet to build their processes out, and they're like, hey, I'm still studying it, or I've gone through it twice, I'm now building it out a third time. And the course exists just to be a mirror. It isn't to give you all the right answers, it's to just ask you the right questions to help you figure out, like, what would this look like for you. We got a video about sustainable trading and life balance. I kid you not, it took me 4 weeks to create this video. Who am I to turn around to you, Richard, and say, this is how you should live your life? And I wrestled with this, and I'm like, I'm not a guru that should tell traders how to conduct themselves within the market. There are some people that could grind at this for 16 hours a day, and it's right for them. There are other traders that should only do 3 hours a day, and that's their limitation. And I'm like, well, how do I create a platform that helps traders find the right area for how they should conduct themselves in the market when they hold all the answers? So it was about, the whole course exists in this entirety to create a platform to be able to encourage traders. You know what? First video, it's all about strategy. And how boring is that? 80% of traders say, I know my strategy. Okay, do you really know it? And there's homework assignments in every single video. There's call to actions at the end. If you know it, you should be able to complete the home assignment with no issue. Now, what I'm really looking forward to, and I've been through the entire course as a part of the workload I had to do, but what I'm really excited to do, and I haven't had the chance like yourself, Richard, is to go through the course as a trader. And I know this sounds super weird. You're like, what, Rich, you created the course. Why would you go through it as a trader? I need to go through it as a trader. Creating that course took nearly a year because so much stuff in there I had forgotten. And I need to bring them back up to the surface to be the kind of trader that I want to be. Am I profitable? Yeah. Am I massively profitable? Well, I don't massively follow my processes because there's some vague areas, and this course is going to be a tool for me to get completely familiar and clear on exactly what it is and why I got into the markets in the first place. So I'm, like yourself, I'm super excited to go through it, and I kid you not, that's going to take me weeks. Like, to be able to tick all the boxes. I think one of the video has a, follow your trading plan for the next 20 trades and prove that you can actually take 20 trades without breaking your rules. Well, I can't fast track that. I can't do that in a day. That for me to take 20 trades would probably take me 2 weeks. And what if I slip up on 2 or 3 trades? Now I've got to journal about it. Now I've got to do my weekly review. So it could take me several weeks, if not months. But I'm actually looking to complete the course in its entirety. And for me to do that, it means that I need to partner with the material, and I need to engage with it and build myself out to become that trader. And that's going to take me months. And I'm super excited to be able to do that with the traders as a bigger project of what we've got coming in the community at the end of the month. And that's all I'll say on that, because I'm not allowed to talk about it. But Richard knows what it is. And yeah, I'll get in trouble for it if I go into detail.
We are hunting rabbits.
That's a good impression.
This is Daily Factors DAX trade. He just said, now got out because of my strategy, just now at 0.5 R profit. Original would have been close to 7 R. He decided to get out at half R. Daily Facts just kind of, I know you said because of my strategy, but give me some context. What portion of your strategy has led to you deciding that you need to cut it short? I mean, you were looking for 6.5, close to 7 R trade, and you did cut it short because of your strategy. But what portion of your strategy is determined you need to get out? It's just for my own blatant curiosity. Is it a 15-minute candle? Is it a 5-minute candle? Is it a certain time that you're in an area? Interesting. I'm just for my own. 15-minute candle closed above the 9 EMA on the 15-minute. Okay. I don't have the 9 EMA, so I do have a 10. Let's make that one 9. And let's see this. Oh, on the 15, yeah. No closure just yet. 11 minutes before we close. Okay. We'll see where this one goes as of now.
What time frame is that? 15 minute.
Yeah.
So
this is a 15 minute.
DAX is my bread and butter now. That's what I built my a lot of my trading behavior around. I still love looking at GU and EU and gold as well, but I was like, you know what, Rich, you got one mouth. You can't walk in that sweet shop and fill it up with all of them. Start with one, cut your teeth on just one asset, and I'm there with you on the DAX. So daily facts. When you said about how the DAX had moved, I was like, yeah, I know it's been moving massively as well. We gapped up nearly 4%. I think it was yesterday, and then sat pretty much in a range the entire day as well. So some big, some big movements on the DAX.
You could almost think of it on the DAX as if this is a flag, but a very extended flag. So I'm just going to move these out of the way. Yeah, come on. So you have this strong leg up, and then you just have this descending and flat section. So it's a very, very long flag. So the idea is to see where it's going to eventually tip out and then decide which direction it does want to go. So from there, coming down very, very nicely, let's say from this point over here, we've pretty much had a break of sorts and then a retest almost. Failed retest as yet, but yeah, so just still in limbo. I do still like the idea of this going lower. Daily fact saying your price is different. Yes, I mean obviously this is an IC market chart on TradingView, and are you using Vantage? Vantage account?
Vantage is different price feeds on certain candle closes. I won't go into the details of it, but they are different. They look very, very different. If you flick between the two, you get very different looking charts on certain time frames. But it's
so
small detail.
If we can actually see it here, so DAX, see if there is Vantage information.
I see now you're saying now I'm getting FOMO. Yeah, to watch a trade pull like 7R into profit and then pull back to like a 0.5. Now this is the cool thing. If you follow your system properly, you create no gap between the result you should have got and the result you got. If your system should have given you 7R, but you got half an R, the gap between where you should be and where you are is massive. But it's also something that's within your control. And that's where we call like man-made drawdown. It's something that you did that created a difference between the gap you should have got, the result you should have got, and the result that you actually got. And then there's market-made drawdown, which is where you just follow your trades and you get the exact result your strategy produced. Win for win, loss for loss. And it could be that you took a 10R drawdown, and that's where your accounts should be. And over time, we want to pride ourselves as a trader to put our accounts exactly where they should be on a trade-by-trade basis if we followed our plan correctly, all with consistent risk management. The moment, like if Richard Butler says, do you know what, I kind of really like this trade, I'm going to put 2% on this. No matter what happens in that trade, win or loss, it's going to put his P&L to a different state where it should have been if he followed his plan with the right risk management. And so this is why it's so important for us to be consistent in our actions, because this is the cool thing about it, because so many traders look at their P&L as a reflection on how well they're doing as a trader. But if we measured their consistency, there is almost none. So the P&L is just a byproduct of a trader turning up one day willing to try and hit a home run and another day being terribly scared. And that creates a horrible feedback loop because, the account got blown. Why? You took 4 trades and you should be trading at 1% risk. How on earth did that account blow? Well, I missed TP on one trade and then I tried making it back on the next and then I moved my stop loss. So we might as well say, well, that account taught us nothing then. Like other than, you're not managing your risk. That's an expensive lesson to learn you're not managing your risk.
It is.
So we kind of reach a stage in trading where it's like, look, if I'm going to lose this account, I want to learn 5 lessons from it. And it might be that we lost 2 or 3% because we didn't manage our risk. Okay, let me go and journal about that. Let me fix that. And then it might be that we start FOMOing into trades. We lost another couple of percent. No problem. Let me journal about it. Let me fix it. But if we're trading at 2, 3, 4% or worse, the no stop loss, we're risking, like, we don't give ourselves enough opportunity to reflect on actually what's happening on the account. And it's not uncommon for traders to run through many accounts, but never pause and go, I did it again. Let me spend 20 minutes journaling around what it actually looks like for me to do what I did on that account. And it's always behavioral. It's always behavioral, which is why psychology has to be, psychology has to be such a large subject in trading, is because we just need to be consistent in our behavior. So easy to teach it, so difficult to do it. But with processes, you can actually make it easy to do.
It's
or
like
easier. I don't want to say easy.
Yeah, it's like saying, I'm a data-driven person, I go on data. And then it's like, okay, cool. You can extrapolate from data that you've received. How do you extrapolate from emotional data? It's so much more difficult because you don't always know what... If something goes up, you can say it goes up because addition. If something goes down, it's because of subtraction. Simple. It's a very simplified way of looking at something goes up, something goes down. But if my emotional state is going up or my emotional state is going down, you can go and quantify that as much as you want. You're not always going to get a one-to-one relationship between what is causing it to go up versus what is causing it to go down, like my emotional state. So it's very difficult to say, I'm going to approach it the same way as I approach doing math, my emotional state. I agree with you. Like the psychological side of trading is so much more diverse and so much more difficult to get underfoot. But when you do get it, it's that clicking of everything just aligning, and then you see, but the numbers are impacted by the emotional side, and the emotional side can also be impacted by the number. So it's that interesting, it's that duality, that juxtaposition between what is more important. Is it the strategy or is it the emotional side? And today the one is going to take precedence, tomorrow the other one will take precedence. And it's not always going to be the same at every point throughout the day. I just wanted to check this. So daily facts. So you're saying, should I use IC markets? Okay, so here's what I'm going to tell you straight up. Are you using or are you trading with the fivers? So, when you do analysis, if you're going to be using TradingView as your analysis template, as the thing that you're going to be looking at, drawing your lines, all of that kind of like stuff, take one, whether it's IC markets or Wanda, or whichever one, that closely resembles the MetaTrader movements. If you have Vantage, look for one that is as close to your actual price, let's say your execution price on MetaTrader as you're going to get. So for me, for argument's sake, NASDAQ, I use the IC markets chart. There is room for error, but it's as close as I get normally. So I'll show you the current account. I'm just going to move this, I'm just going to move this like that. Let's hide it. Just going to hide it. So the current price right now is 24,825-ish. The current price here is 24,825-ish. So between the two, it is so close. And even the movement. So to give you an idea, the top of that candle over there on the 5-minute, the top of this candle, okay, maybe, yeah, let's do that. Now I can see it. The top of this candle was 24,854.5. So 854.5. 854.5. The top of that exact same candle here was 24,854.44. So 6 pipettes difference. That's how close it is. That's what I'm going to suggest. If you're going to use Vantage Markets, find on TradingView a brokerage information that is as similar to yours as you can get. So if in my case, I trade the fivers and I use the IC markets one because I have found that it's the closest to the fivers information. It's not always going to be, there's room for error, but it's as close. And I'm happy with how close it is. So I would suggest that go and find one that you can that's comparative 1-to-1 with room for error. And remember, there will always be a the trading view side is always going to be slightly either delayed or slight different pricing to your Fivers account, because your Fivers account is not drawing its information from TradingView, where TradingView's got its own areas where it's drawing its information from. Just take that into consideration. Sorry.
There is a moment where it pays to set your terminals up, not just your master account, but your terminal colors. I see you guys were using Earn Forex position size calculator a little bit earlier, but setting up a terminal where it can do exactly what you need it to, and it's something that we'll go into towards the end of the month. I've got a proper segment for it that I'm gonna do on it. But I see we've got a quick comment here. I'm going to touch on this, and then I'm going to have to see about wrapping up because I've got to shoot. Where is it? I can see it. It's in here. This one here. Sparkleby says, I love you guys. Absolutely talking sense. Genuinely, really appreciate you checking out the stream and just spending a bit of time with us and listening to us as we kind of share our experiences of the market. Now, if you enjoy this kind of content, this kind of insights, one of the best ways that shows us that we're along the same kind of lines as the stuff you want to see within these streams is to give us a little thumbs up. It's one, it helps the algorithm, which gets in front of more people, but two, it tells us specifically as hosts, as co-hosts, that you know what, actually this segment here connected with traders, and then we can bring you more of the stuff that actually helps you as traders as well. I'm going to have to shoot off now in 3.5 hours from now, just a little over 3.5 hours. We have one of the coaching sessions within the Discord. It is completely free and open to any trader who is a Fivers trader. You are welcome to come in and just have a chilled out listen and just kind of listen to the conversations that we talk about and stuff we cover. You can join in, you can have a conversation with us, have a chat, you can show chart examples. There's just kind of a space that we use to really build that community feel, so that you don't always feel that you're stuck as a trader on your own. So if you've got a sticking point or something you want to discuss, it's somewhere where you'll have access to me for well over an hour, and we can just go through some of the more personal stuff in trading. And one of the things we'll probably touch on a little bit later on today is how to systemize a feedback loop on your emotions and your technical trading as well. This was one of the biggest clicking points for me as a trader. As Richard said, how do you create a feedback loop that you actually performing emotionally as a trader? I found a way that I could completely systemize it in a simple process that is as simple as systemizing the feedback from your data of your strategy. Now, you're a big guy on data for your strategy. You know it, like what works, and it gives you massive confidence. I have created for myself exactly the same feedback loop on how to do that from an emotional perspective. And then I've got the two talking together, a complete review system, and it basically never leaves me stuck as a trader. So I always know at what point objectively I've got to take an adjustment or I've got to move forward. And every week I know exactly what it is that's holding up my trading or hurting my trading, and I know the exact work I need to do to move past that. Richard, cheers for hanging out with us on stream and having us on stream. It's been a lot of fun and a bit of a chilled one. I'm going to fly off, so if you are available a little bit later on today in 3.5 hours, get yourself into the Discord. Or if you're not a Fivers trader at the moment, then I'll be on the YouTube streams from Tuesdays and Thursdays, and we're going to be bringing you a little bit more of a planned segment as well. So thanks for hanging out with us. I'm going to shoot, mate, and I'll catch you in a bit.
All right, Richard, thank you very much. That was your R&R section, rest and relaxation. You can choose who's rest and who is relaxation. I think Richard Wells is more relaxation, because whenever you hear him speak, it's just like, yeah, that's good. You know, Richard's voice is chef's kiss, mate. Chef's kiss. Yeah, exactly that. So get yourselves into the Discord this afternoon. Even if you have no intention of asking questions, just sit around. You know, just sit there and absorb. Just, you know, become a sponge. ASMR. Yep, very much. It's just, let's say it like this. It's not like he lulls you to sleep. It's not that kind of voice. It's like the He grabs your attention and he holds your attention with his voice. It's that kind of soothe. Let's put it like that. I love his recommendation of adding music when you trade. So this is an interesting thing. So I was watching a video. I think it was yesterday or the day before yesterday, on ADHD. Now, I don't have ADHD. It wasn't the point. It was the point of productivity. How to take somebody that has ADHD and kind of assist with productivity. And something that a lot of people with ADHD struggle with is focusing on a singular task, or letting that one task take up all of their mental space while there's so much other things happening. So it's easy to distract somebody that has ADHD purely because their brain requires a different kind of sustenance. It requires a different kind of, what's the word? I've forgotten the word now. Somebody help me. I'm looking for a word and I cannot remember for the life of me what the word is. But you need your ADHD brains require a different kind of sustenance, a different kind of stimulation. There we go. Thank you very much, Crypto Knight. Different kind of stimulation. So the video that I watched was basically the idea of watching a wall and getting used to being bored. Sound familiar? You're at the markets, you're constantly watching the screen, there's very little happening, you become bored. So what do? You grab your phone, you open up a video, you listen to music, you find something to distract you. But it's distracting you because your brain doesn't feel stimulated. You're sitting here, you're watching your screen, you're watching your trades, you're watching the movements of the chart, but you want to actively participate in it. And you can't because you have to wait for your setup to align with what the market is presenting you. So it's that idea of finding a way for you to not be, or finding a way for you to be okay with being bored. Because when you're bored, your brain starts learning how to self-stimulate. Your brain starts looking for a problem that you can solve instead of you just being bombarded with information the whole time. And that's kind of like what's happening with you being in front of the charts the whole day. You're looking at something, but there's not really anything happening. So what happens? Your brain starts filling in the gaps, starts filling in the boredom. Nothing is happening, FOMO. Nothing is happening, I want to get in on this move, but it's, I don't know. So it's that idea of like, you're constantly getting this stimulation, but the stimulation itself is not providing you with any real stimulation. I don't know if any of this is making sense, but basically this guy decided every day to go and take 20 minutes in his day and literally just sit and stare at a wall. Literally that, just stare at a wall. He's not listening to music. He's not watching anything on a screen like information. He's literally just staring at a wall. Pretty much just watching paint dry. And there were some subtle changes, but his productivity changed after that. So his productivity picked up. And I kind of thought about doing something similar to that, where if there's a moment in the day when I'm feeling frustrated by the fact that the market is flat or the market is not providing me with something that I really want, I'm going to, instead of participating with a stimulation event, watching a screen, listening to music or anything like that to try and distract me from preventing me from entering into a FOMO trade, I'm going to go and stare at a wall for 5 to 10 minutes and just kind of like see what my brain does. And how, when I come back afterwards, if there's any change in me still wanting to participate in this market, or if I can start thinking of something different to do during that time frame, so that I don't feel FOMO or I don't feel that need to trade. I know it's a little bit off topic and it's a little bit different, but like the moment Rich spoke about music and Badaf talking about the addition of music when you trade, it kind of like just triggered that memory of this thing that I watched. I can't remember if it was yesterday or the day before, but yeah, just an interesting sentiment. Let's put it like that. Anyway, let's get back to the chartings. So on gold, this is basically what I marked up earlier. The idea that we had this consolidation from yesterday through the Tokyo session into the London session where we are now. So you had the bottoms that were tested a fair few times and no real reaction off of it. You had the low of the London session, which was tested, broken through, retested, and nothing really done with it. So pure consolidation. This is just pure sideways action. You're hopping between 2 points that is not showing any sort of directional bias. So I thought to myself, okay, so if we're going to need, what we're going to need is a break and retest of some sort. And in this case, we did get the break of this upper edge, which happened to be the top of Tokyo, as well as the low of yesterday's London session. So you get the break. Now we need the retest. Now we need to see whether or not this actual move that we have here is the intended direction. Is it not just a fake out? Fake out being that it looks like it's breaking through, but when it comes back for the retest, it disrespects this area. And when I'm talking about respecting or disrespecting an area, I'm referring to the follow-up. If price pushes through an area, comes back, tests it, and starts pushing higher, creating a new higher low, that is respecting it. If it does not, and it breaks through again, and then instead of continuing back up again, it starts pushing lower, that's disrespect. It's disrespecting that zone. It's not respecting it as if it's a area of supply or an area of resistance. In this case, that would be a fake out. So right now, I would like to see whether or not this move is actually the intended direction. So I'm waiting for the retest. We've had the break. We need the retest. How deep is this retest going to be? Well, that depends. That really depends. We start getting this slowed action. So right now it's quite slowed. We need to see whether or not we can start pushing up. If we start getting a little bit more volume on this current candle that we have, and by volume I mean we have slightly higher wicks, but we have a longer body. So the body itself is a little bit more volumetric. It becomes something more like this candle over here, or if I scroll back a little bit, we start getting candles like these, where you're starting to push a little bit higher. It's not these indecision ones like we're getting right now. So this is just slowed. This is just very slowed price action at this point in time. So over here, just a little bit slowed. I want to see whether or not there's a continuation to be had. So in this case, it can come all the way down here again, or it can just round out and then start pushing up again. And if it starts pushing up, then that was the retest. Then this would effectively be the retest of the zone. We had one wick over here that almost tested the zone. Not quite. You can consider this a test, but we'll see. We'll see whether or not that actually carries on. Now, let's assume this candle starts closing a little bit more strongly. Then you can consider taking an entry, maybe having the stop loss either below the zone or below that recent swing point, and then you can start looking for a target point. I'm not saying take the trade. I'm saying if you're going to build an idea around a break and retest, you kind of like need to make a decision on where would your swing point be in this case. Is it this candle over here? Is this area, the whole area, more of a swing point for you? Is it the last candle down there? This is all going to play a role in whether or not you take of where you take the buy and where you leave your stop loss, and then obviously 1-to-1s, 1-to-2s, 1-to-3s, and so on and so forth. That's why I said this area up here is a potential target should we continue with this upward movement. Yo, Will, what is up, bruh?
Yo, what's good, Reg? How you doing, brother?
Not too shabby, eh, Nige? Not too shabby. How was the interview?
Really good interview. Dude, honestly, really, really good interview. This guy had a really relatable mindset. You know, young guy, he's only 22. He's been paid 8K with like another 7K pending as well. So, mate, what a trader.
Nice. Sounds good.
Yeah, what an awesome trader. So, yeah, look out for that, guys, in the next week or two. That'll be released. So, yeah, it was good, man. I'm gonna go make myself coffee in a second, but I thought I'd pop straight in because I didn't want to leave you hanging.
Nice.
Flying
The
solo.
moment you're done with your coffee, I'm gonna hop off to go and make myself a coffee. So we'll do a
I'll tell
relay.
you what,
You go
I'll
first.
go pop the kettle.
Yeah, you go first. All right. I watched the Fivers live. Don't all of us, please. Don't all of us just watch it. Interact. Ask us questions. Drop a like, drop a subscribe, please. It's the best way that you guys can support us. It really does help the channel out if there's interactions. Like even afterwards, after the stream is done, go and leave a comment on the live stream that you just watched. Go and leave a comment there. You're more than welcome to tell us how much you hate us, tell us how much you love us. It really does help the channel.
Go tell us about how much more handsome I am than Rich.
If only your camera could, convey that information.
Verify that. Yeah, no, I know. I had to customize this camera. I said, look, I'm a lot more handsome than the guy that I stream with. So can you make it so the camera makes me look a little bit more ugly? And he goes, it's going to be hard because you are so good looking, but we'll give it a go. So,
yeah. Nice. Ocean asking EMA, question mark. The one that I have on the screen, this is a 50 EMA. So I have just a regular EMA that has multiple ones that you can select. 10, 50, 100, 200. So if I clicked all of them on, that would be what it looks like. It's actually, let me go to a chart that I have not put any drawings on. There we go. And then, yeah. So that is what you would see generally. So red, I always go red 200. 100 is always like an orange-like color. Green for the 50, and then this purplish color for a 10. So the fastest moving one is purple in my charts. But I only look at the 50. I only look at the 200 and so on once a day, just to kind of get a reference of where we are. So I'll generally go over to the 1 hour, and then I'll switch on the 200 just to kind of see where we are. With this massive movements that we had yesterday, do expect there to be massive gaps between where price is currently and the 200. So I don't really use the 200 on a day like yesterday. Just for the sake. It doesn't really give me much information because we had such an extended move away from it. This is going to be ascending regardless. Okay, so if price is a little bit closer to it, like here, where it wicks into it and then starts moving up, that gives me more information than how far we are from it based on this movement that we had here. Anyways, Nassim is saying, yes, I'm already subscribed and liked. Thank you very much. We really appreciate that, mate. We really do.
Am I getting bad feedback on my camera? Is that what you were actually referencing?
Yes.
I'm just checking the YouTube. Yeah, I was going to say, I'm just
it's better
checking the
now,
YouTube
dude.
now. It's better now. Okay, maybe the YouTube's lagging a little bit. I was going to say, one of the guys in the comments said that we're getting better, a better image from space. And I was like, I'm assuming my camera's bad then. I thought you were just atting me. I was like, all right then, you're going to get the calls out.
Yeah, Artemis 2 will be sending better images.
There you go.
From
yeah.
Abradolf Linkler just being the absolute troll, which we love, by the way. We love trolls. Horror Times is asking, where can I get Fivers merchandise? I really would like to have one. So we do have a merch store on the Fivers page. Let's see if I can bring that up for you. And then you can go to the Fivers.com. I think /merch. Okay, I actually don't think it's merch. Let me see if I can find it for you. I can't remember, mate. there is a store. We do have a store. I just need to find it. I think it might be the /store. Nope. Nope. 404. Oh, it's store. There we go. Store dot. There we go. Yeah, there we go. There we go. The Fivers merch store. Store.thefivers.com. There we go. Me being a muppet and everything. There you go. You can go and shop some lovely. By the way, this was Jonathan's. No, I'm joking. It wasn't Jonathan's. You can buy mugs. You can buy hoodies. We do have a new hoodie, obviously, with. Why is it blurry? Stop blurring. There we go. There we go. Yeah. With the nice Fivers. It's too hot now. I'm not putting mine on. Yeah. We do have skateboard stickers.
There's Jonathan's underwear up there.
Yeah, that's the joke, obviously.
When it says used, it doesn't mean like, used. Or does it?
Moving on swiftly. You can get yourself like even a desk mat. This is a Trade the Pool one as well. So the one side's Trade the Pool, other side is the Fivers. All pretty good. The polo shirt as well. I have one of the polo shirts upstairs. Not wearing it today because I was wearing that one. All kinds of cups and interesting little water bottles. I like it. Like the hat. I would have loved to have gotten the hat as well, but no, I didn't get it.
Not salty or anything about that.
No, not salty at all. All right, so there we go. On gold, we are currently having, if I could just move that out of the way, this is what I'm referring to when I'm talking about a nice volumetric candle. This would be the kind of candle that signifies to me this is continuation. We've had the slowdown, so you can effectively think of this as a singular retest if you so wanted. But this was the full retested section. So gold potentially looking like we can carry on going up. My target is still quite a far away. We do have this one area over here. If I go towards the left, you'll see it is a base area. So it's an order block as well as a base. So we re-established a new downward trend, which this base over here, this base candle that's here, with this reaction off of that one, we broke lower than these 2 points. So all the way down here off of that reaction. So to me right now, that is the first point of potential reversal that we can have. That's why I have this one over here as a potential area. We'll see. We'll see whether or not this continues. We do have the 2 hours from now, the New York session is going to open up. So we'll see whether or not the New York session is going to have that follow through or whether or not we're going to continue back into this consolidation that we've had. Interesting times. Will gold hit 4790? Your question is as good as mine, my friend. If we continue going bullishly today and maybe tomorrow, we can look at that. Maybe again on Monday or Tuesday. It's really going to depend on whether or not we're going to continue with this bullish movement now that we've got the breakout from this consolidation. And it's also going to depend on whether or not the tangerine terrorist is going to tweet something later today or tomorrow that is just absolutely throw the market into a downward spiral.
You can almost guarantee he will. You can almost guarantee he will.
Like real GCC is saying, oh God, the time for the tweet terrorist to wake is near. Yep, that is true. Market session settings. Sorry about that. Well, market session settings, I use the London, New York, and Tokyo session. The times are in GMT plus 2. If I just scroll down, you'll see here time input is GMT plus 2. But this is what I have. I just have the colors. I don't use any of the other like. I just want to see what was the low and the high of New York. I want to see the low of the high of Tokyo and the low of the high of London. That's all I want to see. You can get all of these information here from the stock market opens and closes, and you can get that from, I'm going to bring it up here. Tradinghours.com, this is what I use. So you'll see markets, London one, it was closed on Monday, 9. This is my local time versus the local time where the exchange is. So the local time at the local exchange is this. So it's GMT plus 1, which is British Standard Time. So 8 p.m. or 8 a.m. Sorry, on British Standard Time, and 9 a.m. for GMT plus 2, which is my local time. And then you can go to any other market. You just click on markets. It'll give you a little map of the world, and you can hover over the New York exchange. I can click on that one. It will give me the opening times for my local time, which is 15:30, which is in 2 hours. It's 9:30 local time, New York New York time. So in this case, I think it's Eastern Standard Time. In this case, which is -4, it's 6 hours difference between my time and New York time. So I just input these times on my market sessions indicator, and then that's how I leave it. I go and have a look at it every few months or so, just to make sure that daylight savings time hasn't changed or anything like that, or I just make sure that I just keep up to date with that. Simple and straightforward.
Yeah.
Here's a good question for you, Will. Actually, while we're doing that, I'm going to bring your screen up, and I'm going to make myself a coffee.
Yeah, that's fine. Go make yourself a coffee, my friend. I'll jump over for a bit. What is good, people? How we doing? I made myself another one of those coffees. This time it was a bit plain. Those like Japanese coffees that I was telling you guys about on stream this morning. It was a bit, just a bit tasteless. It was a bit like I like a strong coffee, so I've made myself. It's still a black coffee, so it's still got that plenty of flavor, but I've had to put honey in it just to give it a bit of something, give it a bit of flavor. Anyway, before I hop into the charts and talk about what was going on with GU and EU today and what happened and my predictions, let's have a quick read of Bad ATF. How often do you guys have these interviews? It's always nice to see other people's strategy and mindset. So usually, it depends, man. It depends. The more profitable traders that come through the fivers, the more interviews I do. But usually, I give or take about an interview a week. Some weeks I'll have no interviews. Other weeks I'll interview like 2 to 4 people. So yeah, sometimes I'm really busy. Other times, I'm I'm just chilling. So yeah, we try and get about an interview a week, which is pretty cool. But yeah, it's super fun, man. It's really enjoyable for me as well, because I get to speak to people from literally all over the world about their mindset, about their psychology, their trading, their strategy, and their profits, which is pretty cool. And just congratulate people. It's nice to see people come through the fivers and get paid for it. So yeah, it's quite nice, and it's quite refreshing as a trader to actually speak to someone, have them speak back. Because on live stream, it's just like me and Rich chatting to each other. Whereas when I'm interviewing you guys, it's an opportunity for you guys to chat back to me and talk about your strategy. Me and Rich get to know each other really well. We get to know our strategies, our psychologies, our ins, our outs. We get to know everything about each other. Same goes with all the other hosts and co-hosts out here, all the other guests that come on regularly. We get to know them inside and out as well. So it's nice to get a fresh face to interview and talk about strategy. But if you are looking to check them out, then you can go over onto the Fivers YouTube, which you're already on now, of course. And then go to the Fivers YouTube. Go to the video channel or the video subsection, and then just check out their videos that way. But yeah, it's super cool. It's super fun. I can't remember his name now. He had a 10% win rate and average 1 to 30 risk to reward ratio, and he got paid like $800, I think it was, give or take, from a 10K account. I was like, dude, this guy is crazy. Like, this guy's an absolute hooligan. He just sat there and looked at me and goes, it's just maths. I was like, oh, I mean, fair. The man's not wrong. Like, he was just incredible. Like I said, some of the unique characters you meet it is super fun. Anyway, going on to today's price action, guys. You told me to check out GU and EU this morning. That's exactly what I did. So let's drop down to the 5-minute time frame, just so I can refine in a little bit and talk through what was happening. So we had this sort of nice price action here. We didn't. Oh, hello. So we came down and swept this area here. Then we moved up, pulled back. Rich, will you stop it with the ASMR?
I'm not doing anything, dude.
ASMR.
Ha! Anyway.
Can I break down this trade now? Is that all right with you? Can you just sit there and drink your coffee? Have you not been live solo long enough?
I'll allow it. Did we just lose Will? I think we just lost him. Yep. I'm listening to an airflow of a turbocharging. Yep, it's one of those when it goes. Anyway, do carry on. Sorry,
I'm
sorry.
trying to break down for you guys, and then you're coming in chat and just distracting me. Anyway, we had the break and close, and like I said, my goal strategy, we get the break and close, open on the new candle. We got that 1-to-1, risk to reward. We had the stop just on the low, TP just above. It wasn't the greatest, so I said, okay, well, what would a 1-to-2 look like around the same area? Can we pull back down to this area here, which looks to be a base for Rich, but I mean, Rich, tell me if I'm wrong, but it looks to be around about a base here, a nice little base candle. But we didn't get the pullback. We didn't get the pullback before then actually going up and hitting a nice 1-to-2. However, so this would have been a no trade. So boring, bugger off. However, EU would have been chef's kiss. However, again, there's a couple of howevers here. It would have been really nice if we could have come down and then move back up to TP. But there is also the opportunity to get in on the 15-minute. Wouldn't have been a 1-to-2, but the 15-minute would have been about here. Got the 15-minute break and close above this little area here. And then you could have entered on the brand new candle open. Pretty much very little drawdown. Continuation 1 to 1.5. Or, again, you wait for the 5-minute pullback, which is a really nice area. I did like that 5-minute pullback. In fact, no, hang on a minute. I mean, okay, you could have waited. You could have gotten in on a Oh, no. There we go. You could have gotten in on the 5-minute break and close here, which would have been a break and close. So you guys mentioned about this sort of like compress and triangle price action. I don't know. That looks like a wishbone. This compress and triangle pattern here. So we broke out above that. You could have actually placed your trade on the open of this candle here. Stop loss underneath. You could have... No, it still would have given you a 1 to 1.5. So better luck next time, I suppose.
I mean, it's not over yet.
It's true. Yeah, true. It could still go up.
I think this is Raphael's trade.
We didn't quite get the pullback for a 1-to-2. We didn't quite get the pullback before then hitting TP.
Yeah, this is Raphael's trade. Yeah.
Was it? Yeah, Raphael,
Yeah.
is this the trade that you were in? I know that you were in a trade, and I was trying to work out where he could have been in from, but I didn't actually see.
116,617.
Okay, hang on, bear with,
116,
bear with. So
617.
116, 617.
617. Yeah. His stop
Stop
loss
loss.
was at 116,434. And his
TP.
original TP was at 117,217, but he's changed it now to 117,081.
081.
Yeah.
Okay.
Original was at 217, and now it's at 081.
Yeah, nice. Okay, yeah, I rate that. That's over this area here. I like that. Yeah, I like that, Raphael. I remember you saying that you were looking at EU longs. I was trying to predict where from. So my entry was a little low. Sorry, a little high.
Yeah, but I mean,
But
like, your entry was based basically on what you would have done. You would have waited for the,
precisely.
you know,
Yeah,
the break
exactly.
and then a retest and then continuation. Yeah.
Yeah, precisely that. Okay, dude, that's actually that's a nice trade. Especially now, like
Pretty
if
good.
you want to scale in as well for those scaling people out there. We had the break and close above for further confirmation of a higher high as well. So that was quite nice. Price has been okay today, to be fair. Unfortunately, I would have been missed on EU and GU, so that was tragic. But nonetheless, it was still not trading is still trading. So we would have been missed. We didn't FOMO. We didn't want to get in when there wasn't price there for us according to our strategy. So yeah, it would have been just a missed day for me. Nasdaq, I wanted to be buying, so I wanted to be buying the Nas after the break and close above this point here, I believe it was. But then we came up, and I just kind of lost confidence in it a little bit. I kind of wanted to see. I was like, okay, let's see if we can actually put in a higher
Flat.
low.
It
Yeah,
is a
it
bit
was a
flat.
bit flat. So I thought, can we put in a higher low to give us a bit more confidence in that trade? Oh God, and we did, to be fair. And we're currently back to where we were, but it's one of those where it's not quite moving how you'd like it.
It's not
Although
ready yet, in my opinion.
no, although I am going to boom from there. Let's theorize an entry.
Okay.
So I'm gonna forward test this. I'm gonna go for prior highs. So I say prior highs. This is sort of internal highs. So this would be I'm talking like pre-session highs. We're still in London session at the moment, just about. So I'm gonna go prior session highs, which is Tokyo highs. I'm gonna theorize this. I'm gonna. What do I put my? No, let's put our stops down here. There we go. Let's move our stops here because that is. It would be at that point if we break and close under, it would be the sort of continuation lower sort of ideology. So I'm gonna plot up this and forward test this trade as I think it's really nice, but it's just the volume's not quite there. It's a bit flat. It's a bit iffy. But nonetheless, I think the idea is there. I think we've got that pullback. The pullback's a bit steep, but we got the pullback. Volume died off. We whipped around a little bit. We've broken closed above this consolidation, and the entry is bang on within the retest of the consolidation. So
Yeah.
looks okay.
I mean, yeah. No, I agree. I think that there is. In this morning, I wanted to see the indices sell off a little bit more because I wanted a deeper pullback off of yesterday's impulsive move, but we haven't received it at all. So even now, this consolidation that we just had now on the 5-minute, we're getting a bit of a breakout now of it. And this is also after an attempt to try and push lower, a strong attempt, and then failing. But if I have a look at like DAX as well, DAX also slowed down, broke nicely lower, and then just flattened out. The US 30 was a similar idea in the beginning. Very, very nice push down lower, slowed down, and then pushed lower again, and then retesting now. So still waiting to see whether or not... I still want to see it push lower. That's the thing. I still want it to go lower because I would like to have that deeper pullback of yesterday's move. But as it is right now, it doesn't seem as though it's going to happen. We're still kind of stuck in this little bit of a range. I mean, if you just take Tokyo session high versus Tokyo session low, we broke underneath Tokyo session low, but we did not break previous day New York and London session lows, which was very close to it. And we have not broken above Tokyo high as well. And it's not the biggest of ranges, to be dead honest with you. So the whole Tokyo session was 7,600 points. That's $76. We didn't sweep the high of it, we just swept the low. And if you go and look at the full size of London so far, we're stuck at roughly 9,500 points. So it's not the most volumetric of sessions. So you're looking at a directional move, and there is none. So this is still very much consolidative. I'm still waiting for that break, even though I would still like for it to go lower.
I'm waiting to see what happens here. So while you were talking, I was just about to plot this. I'm going to put interesting point. That doesn't say point. That says point. So this is an interesting point because this is an area that it may want to test before going lower. So it may want to just, piddle about here for a bit, like this, before then doing something like that. I'm waiting for a break and close of higher than this. Oh, whoa, what's going on? No, stupid thing. Higher than this point. There we go. If we can get a break and close higher... Oh, Rich, I want to go to bed.
You can't. You're flying tomorrow.
And close higher. There we go. My mouth wants to make words that make sense. Then I think I'll have a bit more confidence in this, and it'll be like, oh, okay, yeah, this could move higher now. But until this breaks and closes above this internal prior high consolidation zone, I'm still a bit... I'm in an R in. But, I mean, we got that perfect... Look at that. Look at that wick rejection. That would have been a perfect entry. Providing it can keep this bullish momentum, that was a really nice entry.
I know that you've made the decision not to trade this week because you're moving tomorrow. Fair enough. When's your flight, by the way?
Tomorrow at midnight, but I've got a pile of stuff to do. So I managed to get a lot of stuff done in the apartment today. I have a pile of stuff to do tomorrow. And then, in fact, I've actually got another trader interview tomorrow. For those who are asking when I do interviews. Which I kind of was a bit of an idiot. I thought I blocked it off. I have now blocked it off to make sure no more booking an interview with me tomorrow. But it's
what's preventing you from postponing, mate?
Because I feel bad. They've already kind of put in the interview now, so I don't want to reschedule. So
I'm pretty sure they would understand that you're literally moving country.
Yeah, maybe.
Shall I send them a message and say, sorry, due to unforeseen circumstances, you are now no longer going to be interviewed by Will?
Yeah, maybe I'll probably send them an email. Yeah, I'll probably send them. It's probably best. But no, the flight's at 12. I got to be at the airport for 10, and then I'm going to be out of the apartment for around 7, 8ish. Go have some food, get to the airport 10, and then
nice.
Off I go.
Okay, I want to ask this. Do you guys want to... So Pedro is going to be in the next 20 minutes or so. We're kind of going to be stuck here now waiting for the news. I don't really think that the news is going to have the biggest of impacts. However, I am more than willing to be proven wrong. I'm not really seeing anything that has changed my opinion throughout gold or anything like that. Gold is continuing with that push higher, just as we had spoken about earlier with the break and the retest. To me, gold is continuing to push up. Nasdaq, to me, is...
The close wasn't great.
Yeah, I'm not in the mood. Let's put it like this: I'm not like in the mood for the price action right now with Nasdaq. The whole day today has been very, and then yesterday has also, during the initial stages of London, was also, and I was waiting for the New York session to open up to provide some more volumetric movements. So, how about we do a little bit of trivia? 5 questions?
Yeah, you know what? Screw it. Let's do a bit of trivia, because I was gutted. I had to dive off to get to the shop, because, again, my fridge and freezer and all is completely empty. So I had to dive off and go to the shop before it closed, and I missed the trivia. I was like, I was kind of excited for that. So yeah, let's do it.
So let me go and get the trivia questions up.
While you do that, Raphael, William, if we ever have an interview together, I will have a pint online with you, okay? You know what, bro? Let's do it. I will get an off-branded glass. I'll get an unbranded glass, and I'll go... and I will have a beer while I interview you. Just for you, Raphael. And I'm sure that I will, make the editors very angry with that. We won't talk about how it's beer. We'll talk about how... so I'll probably have like a stout or a Guinness or something. So I'll probably call it a cold... I'll call it an iced coffee. There we go. We'll call it an iced coffee. And you can, if you have a lager, we'll call it a fizzy apple juice or something with foam. Just to keep you two happy. But yeah, let's do that. Yeah, a nice IPA. There you go. Raphael, we'll have a beer during the interview. That sounds good.
Okay, so I'm just going to do this. Let's see if I can.
Nasdaq is just dropped in volume as well.
Yeah, we're waiting. Let's see if I can.
Oh, actually, no, Raphael, I got a better idea. Come to London this October when we do when London has the prop show. Because, like I said, I'm 99% sure the Fivers are going to be there. So I don't know if Sol's going to be there, but I'm 90% sure the Fivers as a company is going to be there. So get yourself to London, and every single one of you as well. I haven't been given the sort of much of an update yet, because it is in October, so the organizer hasn't given me much to go on, but I know it's going to be early October, so guys, get yourself there. And yeah, Raphael will have a beer that night, because there's a 2-day event, so I think they're doing like a traders social that night. So I did say to my partner, she doesn't drink, I said, would you like to come to my event with me? Because she came to my last one and she was bored. she was like, I was just standing there watching you talk to loads of people. I was like, yeah, fair. So yeah, no, we'll have a. I think it would be cool to have a catch up. Meet some of you guys who view the Fivers. Because I was there last year, but I wasn't there with the Fivers. I was there by myself. As Will Davis. But I think I'll be there a little bit more involved as a participant from the Fivers this year. So that'd be super cool.
Okay, so do we want to do trivia just for like a few minutes?
Yeah, 100%. Let's do, yeah.
Okay, so Will, you control the chat. You keep an eye on the chat, and then I will bring up the questions. All right, let's do a transition.
Keep my girlfriend at home, lol.
All right.
Fair. I'm bringing my brother with me instead. Rightio. Also, for those of you who are interested in my Nasdaq trade, I probably would be considering cutting around here. This is the second wick attempt. So I'd probably be looking at cutting around here now. So 1 to 1 to 17. But we'll watch it anyway, see how it goes. We'll plot it up.
Okay, I'm just setting up the questions, and then we've got Remy in the background that's just setting up the layout for us, because we tried this on Monday and it was nice. liked it, but Remy wasn't in now. I think his internet has been kicking him out. Remy is our producer, and so I just quickly tried to do it. I think I did
Remy
okay.
is the legend that makes things happen in the
But
background.
Remy makes stuff happen like this, where I'm like, okay, drag it here.
I was going to say,
Okay,
otherwise
place
there's
that
us going you see our and an hour in face.
Okay, so we'll do which. Let's do risk management questions today. Yeah, let's do that.
Ooh, nice. Do you get like a theme song as well? Do you get like a, it was a countdown?
We need to have like a countdown song that plays, but we don't have one. Dude, 8 out of 10 Cats does countdown. Used to be my favorite TV show.
Yeah. Do.
Okay, there we go. Sorry, I'm just you carry on talking, mate. Like you carry on entertaining.
All right. Bro, I don't know if I should bring this up on it. Is this an okay comment? Water trickster? What? I've never heard of it. That was a good one. I've not hit. I don't. Is that a PG thing to do? Am I okay to bring that? Is that trading related, or is that someone help me out here? Water trickster, is that PG? Can I bring that up? I've been caught out a few times where I brought a comment up, started reading it, and I thought, oh no, I shouldn't have done that, and I've like dropped that comment. I'm like, what have I done? Okay, that is yeah, I know.
Okay. Sorry, Remy, can I use the trivia screen, mate? Is it good to go?
Also, Abdolf Linkler, I want you to get yourself to London as well. It's only a quick boat trip for you.
Okay.
You're literally on the other side of the water. You're out on the coast.
Okay, so that was.
Okay. I'll bring the comment up in shortly. Water trickster, but I just wanted to make sure.
Okay, sorry. I had the settings set up, and then I changed it as I brought this up again. So give me a second. I need to like an idiot.
Wait, so should I bring the should I bring the comment up or
no?
How long have I got to talk?
I don't know. Okay, so that one is right.
Come on.
That one is right. That one is right. And then I think I'll add one or two of the hard ones. Yeah, let's do one or two of the hard ones.
I'm a tricky one.
All right. Okay. So, just 5 questions, just very quickly. So the idea is you answer in chat as quickly as you can, A, B, C, or D. Just one answer, and I'll reveal the results for, those that are in. Okay. So everybody ready? Are in chat if you are ready.
Let's go. Are you ready, kids?
I can't hear you.
Are you ready, kids?
So the idea with the trivia is in future we're going to have prizes associated with the trivia results. So still deciding on what the prizes will be, but you'll know once I know. Let's put it like that. So because I'm going to tell everybody. So for those of you who were not here on Monday, all you need to do is just read the question. Fastest person to answer the correct answer, A, B, C, or D. You'll see at the end we're going to give the results. Top 3, 1, 2, 3 times, and whomever got all of the questions right. 5 questions today. 3 risk management, and 2 difficult ones. So, yeah. Ready? Everybody ready? All right.
Oh yeah. Let's go. Let's do this.
Let's start with the easiest of all questions ever. This one. What is the main purpose of a stop loss order? Is it A, to guarantee a profitable exit, B, to limit downside if price moves against the trade, C, to increase exposure after losses, or D, to lock in overnight financing credits? What is the main purpose of a stop loss order? A, B, C, D. Put in your answer in chat right now, and we'll give you guys about 20 seconds or so. And then
when would you like me to reveal who won that one?
Well, I'll show the results once it goes. Okay, what is the main purpose of a stop loss order? To guarantee a profitable exit, to limit downside if price moves against the trade, C, to increase exposure after losses, or D, to lock in overnight financing credits. All right.
Right.
Has everybody answered?
Do I bring everybody? Shall I bring up who got fastest finger first?
Well, we first need to see the result. You know, what's the correct answer? The correct answer is... The correct answer is, obviously... okay, most people got it. The answer is B, to limit downside if price moves against the trade. Nice. Nice. Simple, straightforward, easy, isn't it? Such an easy question. Okay. Next question. You guys ready? Fastest fingers first, ne? A, B, C, or D? Why is position sizing critical in risk management? Is it A, it decides how much capital is at risk per trade? B, it replaces the need for trade selection? C, it ensures every trade has the same volatility? Or D, it only matters for equity investors? Why is position sizing critical in risk management? A, B, C, or D? $20 seconds to get your answers in on chat, guys. 20 seconds. Which one do you think it is, Will? Dude, I think it's D. Yeah. I think it's D. It only matters for equity investors. They're the only ones that care about it.
I was going to go for B.
It replaces the need for trade selection. That's actually...
Yeah.
I've never thought of it
actually, you know how you... you know how you get, like... So, on multiple choice, you usually get... Out of, let's say, 4, you get 1 correct answer, 1 close answer, and 2 garbage answers.
Yeah. They have, like, this is the obvious correct one. This is the obvious wrong one.
Yeah.
And then you have balance between the 2.
The other 2 are like, you got to think about them.
Depending. All right. Is everybody slotted in their answers? Why is position sizing critical in risk management? A, B, C, or D? I mean... It was obvious, wasn't it? It was A. It decides how much capital is at risk per trade.
Oh, you know what we can do? We can get a drum roll.
Oh, we can? We should do that. Here we have, so far, it's
a bit long.
Badat, it's Vinny, and Ty Keith. That's currently in the top fastest. And then we have Astor Hall, and we've got Abradolf, Linkler, Henry. Henry? Did you say hi today, Henry? Or are you just literally... Henry's just here like, I don't want to talk to anybody. I just want to... All right.
Yeah, no, Henry was interacting earlier.
He was? Oh, maybe I wasn't in.
That yeah, it's probably... Sense. Yeah. You know, you decided to sleep in today. You're like, I don't fancy opening the stream with Will. I'm gonna go back to bed.
Act as if
one more hour.
Yeah. All right. Third question. Another risk management.
Your wife's like, get her. No.
Why is revenge trading dangerous? A, it lowers transaction costs too quickly. B, it often leads to emotional oversized trades. C, it improves the win rate but reduces expectancy. And D, it forces brokers to widen spreads. Which one do we think it is?
See, final answer. Don't need a call. Don't need to phone a friend.
We should get a 50-50 one. What do you think?
Yeah. Oh, dude, we should. Oh, we should get like. Nah, we can't do that because unless we did a trivia with the hosts, and then the hosts get phone a friend, use chat.
No, but I
That would be-
want chat to engage, mate. I want chat
Yeah,
to.
fair. I was gonna, you grab like ask the audience, and then chat would be
Yeah.
the audience. That would. I mean, that would work.
Yeah. We should phone the CEO. We should phone Sol and have Sol be like, Sol, we have this quandary. Why is revenge trading dangerous? Is it A?
30
All right.
seconds.
All right. Has everybody locked in said answers?
Right. Should I play the ridiculously long drum roll?
Yeah, dude. Do it. It often leads to emotional and oversized trades. Man, I honestly thought it was going to be A. It lowers transaction costs too quickly.
Yeah, fair. That makes sense as well. It's quite logical.
All right, let's see who's currently in the lead. Is it still?
I was gonna say, is it?
It is! Dude,
But-
you're so quick.
Bro. Talk about like lightning fingers. I was
But that-
about to make a really inappropriate joke, but then I realized where I was.
It's Vinny and Ty Keith, dude. Like, you guys are so close. But I'm glad to see that everybody's
Oh,
got
yeah.
it right. Got it right. But here's the thing. Those are relatively simple questions.
It's only gonna get harder.
What do we think of the next question? So this is a history related question. So we're not just going to have risk management. There's going to be some little bit more difficult ones. See if you guys can.
Crash.
Yeah. Okay. We ready? Difficult question number 1. In 1998, long-term capital management crisis is most often cited as a lesson in what? A. Why leverage and liquidity risks can interact catastrophically. B. Why bonds are always safer than currencies. C. Why technical analysis fails in all conditions. Or D. Why central banks avoid intervening in crises.
Bro, it's actually
Which one is it?
That's a thinker. Dude, that's
A,
a thinker.
B, C, or D. The 1998 long-term capital management crisis is often cited as a lesson in what? A, B, C, or D? So some of you will definitely know this. Some of you will be like, excuse me? And then, we'll see. We have news in half an hour,
like-
and
Can we,
we should.
oh no, you know the answer, don't you?
I know the answer.
Ah, that's annoying. I was gonna say, can we have like a private chat between me and you that we can give put our guesses in? But you know the answer, so it's just not gonna be any fun. You're just testing me at that point.
Yeah, it's just not fair. If when Pedro's in here, I can be like, okay, cool. Like Pedro.
Oh,
can
that's fair. That's true. That's true. We can participate.
Yeah. All right.
Right. Do I drum roll?
Is everybody ready? I know this was a little bit of a different question.
I think I know that. I got something in mind. I think I know this.
Okay, so the 1998 long-term capital management crisis is most often cited as a lesson in why leverage and liquidity risk can interact catastrophically. Hello, Pedro.
Hello.
Let's go,
Pedro,
Pedro.
You're just in time.
I knew that one. I knew that one.
You're saying that in hindsight. Saying that you can see the answer.
Yeah. Yeah, I
All right.
also hit B earlier on a 1 to 500.
All right, last question, and it's another historic one, and then we'll reveal who was the fastest fingers first. All right, so here's the question. Why do traders still study the 2008 global financial crisis? Is it A, it shows that contagion can spread across many asset classes? Is it B, it only affected US housing stocks? C, it eliminated counterparty risk from markets? Or D, it permanently ended volatility in credit markets? Which one do you guys think it is? A, B, C, D, or none of the above? No, none of the above is not an option, obviously.
I don't think it's any of them. They all look wrong.
Well, I mean, there is a correct answer.
Yeah.
Definitely. Personally, I think it's because of D.
Is that the wrong? Is that the right or wrong answer that you're looking for?
Yeah, yes.
Yeah, why, you're looking for the wrong answer? Or? Yeah.
Why do traders still study the 2008 global financial crisis? A, B, C, or D? Which one do you guys think? Without
Definitely
giving.
B, because if you're talking about global financial crisis, so it's just about US. So because US,
I mean,
like they are just global. Like NBA,
they have
for
the
example,
world.
they like to consider themselves the
Yeah,
world
they have
champion.
the
and it's
World
just
Series
NBA.
of Poker.
Yeah.
They have the World Series of Baseball. It's the world, but it's only America.
Yeah.
Anyway,
NBA
all right.
is well.
Hashtag entitlement.
Will, can you give us a drum roll, please?
Let's give
The
you a
answer
drum.
is
Is
why do traders still study the 2008 global financial crisis? It is because of it shows that contagion can spread across many asset classes. How cool is that? All right. So, do we want to see the results? Who do we think is
yeah,
first?
let's bring that.
Who was the
Dude,
first?
I reckon it's gonna. I reckon. Nah. I think we know who first is. I think it's just going to be a
Is it
fight
just
between
here? Okay, they're back.
second and third.
Okay. So you think?
I think actually no. I think that one really tested people.
I think it's closer than you think. Well, there's
You mean
results.
you know which person?
Yeah, it's closer than you think. The results are in first
Shall I-
place. No. In
Okay.
first place we have it's Vinny,
Vinny! Yes, my
Vinny,
man.
Badat,
Well
and
done.
then Ty Keith. Nice, congratulations, guys. Henry, unfortunate, man, unfortunate. But yeah,
Vinny,
they're
smashing them.
there we go. I think that was pretty cool, don't you think?
Yep, that's nice. That's really nice, to be honest.
So yes, so the idea is we're going to have this as a competition from time to time, and what we'll do is eventually we will have some prizes associated with it. So we'll see what kind of prizes. It might be an account, or it might be some hub credits, so you can go and purchase your own account. Let's say there's somebody that already has a 100k account, you know. Can't just give them another one, you know. Give them some hub credits and then they can buy their own one. But we'll decide. We'll see how that goes. Pedro, how have you been, mate?
All good. All good. It's just now some opportunities that we're looking for. They moved away on a beautiful Tuesday night, and now waiting for the next ones. I didn't manage to get my short on dollar yen. Unfortunately, I had a pinning order since last week. Price didn't tag me in by a little bit, and now dollar moved down, euro pound moved up, and let's see what's going to happen next in the market. Yeah, my pinning was I had my order around this low in here. Price got really close to it, and I never got filled. So I put it like somewhere in here, and I never put pinning orders, but the dollar yen was a unique situation. So we'll see what will happen next. The reality is that the yen pairs have been moving to the upside, and the yen index to the downside. So most likely are going to take these lows. Which means that there's going to be more opportunities to try to short the yen pairs in the future. If not dollar yen, also euro yen, pound yen, and so on. So that's going to be interesting to follow. For example, Euro Yen already kind of provided this setup. I didn't really trade it yet, but this was a traditional setup that usually works quite nicely, which is that when you do break a really strong level of resistance, and there's still a fresh supply in here. Usually price at least tends to bounce from there, at least respect or come back to visit this resistance that becomes support, and then the decision is going to be made. Either continues down or at least tries to regain. But at least this move from here to here, there's a high probability that can happen. And if anyone is still looking for longs, then try to go long somewhere around here or somewhere around here could be an option as well. I'm still following to see now what kind of price action you're going to have around the highs, to see if there's going to be actually any kind of weakness around here to then try to look for a bigger short. But now it's still early. It's still early to look for this. Need euro as well to drop for the euro yen to play out.
Nice. I see there's some people in chat that might not be completely up to date. Like we're live, but I think there's maybe a delay for them still answering A, B, C, and D. Just make sure that you're still on the live section. You can just click the live button. I think is bottom left.
Yes,
just make sure that you're up to date with the live action. Matthew saying give hub credit. I think that's the direction that we want to go, because if you're going to give away accounts, some of the winners might already have those accounts, and then they might not be able to utilize those accounts effectively. Yeah. So, but yeah, if you guys really do like the trivia stuff, then we'll definitely continue. And it's going to be all kinds of stuff. So obviously this community, the live stream, is about learning. It's about engaging. It's about being like entertaining, and at the same time also kind of like sharing ideas, trading ideas, and so on. So I think the trivia is just going to add just that little bit. It doesn't always have to be trivia. We can do something completely different as well. But the idea is just to be a little bit more engaging, and at the same time, just give away some free stuff. Why not?
Yeah. I like the idea. It was great. Is this made within the software that you're using? Okay, great.
Yeah. So obviously the questions we have to make.
Okay.
And then you have to upload the questions onto the system.
Okay.
So that takes a bit of time. So thank goodness. Okay. LJ had already created like 30 questions for Monday, and we only went through like 12 of them. So I was like, well, let's do 5 more just for the fun of it, and we'll see what happens there. While we were waiting for you to arrive. So
yeah, no, that's good. ChatGPT can also help for sure, or LJPT also can most likely can.
Yeah,
also
LJPT.
Yeah. Can also be
LJPT.
Great.
I like that one. I think that we should make that LJ's name. I'm going to go and edit his name just now. And whenever he hops in, it's not going to be DocLock. It's going to be LJPT.
That's going to be good. Did you guys trade anything? Since the resolution on Tuesday night, like yesterday? Did you guys manage to catch any opportunities from these big moves?
No. Yesterday, I went. My wife and I went to go do like grocery shopping and whatnot. So that was just after I left the stream. We needed to get some dinner stuff and whatnot. So when I came back, the move had already moved. And I was like, well, it's in the intended direction. I'm going to wait for a retrace. And then we got the retracement, but then I just, wasn't in the mood to be in front of the markets anymore. At that time, it was already like way past 6 o'clock in the evening here by me. And then we were busy making dinner and feeding the animals and all that kind of stuff. And it's just like, I don't want to be in front of the charts anymore. So yeah, I didn't take anything whatsoever. Yourself, I know Will is not trading, so let's not even bother asking him. How about yourself, Pedro? Let's skip over Will.
Yeah, no, I'm waiting now. So again, the yen pairs were the dollar yen was the one that I wanted to look for, and the dollar CAD as well. It played out really great, to be honest. But this was Monday, and I didn't really look at the charts on Monday because of the bank holiday that was going on in the UK. I was expecting low volatility, but again, unfortunately, price actually visited the level that I wanted on that specific day. This was a clear Quasimodo pattern. We talked about this setup last week. To be honest, actually, we started talking about it 2 weeks ago when this happened, and then last week when this one, or beginning of this week, when this happened as well. And I could see eventually dollar CAD visiting a little bit lower, closer to this range around here. So this was a good one as well. And then the other one that I mentioned as well, it was a dollar franc Swiss, another good Quasimodo, another left shoulder, price makes the movement, breaks structure to downside, visits, and then it creates even a second Quasimodo on the right side of the move. As you can see, the head, beautiful, and then the move to the downside. Nice moves overall. The patterns in terms of the dollar weakness, that was one of the buys that I had since last week. And now is a little bit of waiting and see what may happen. Even are we eventually going to close this gap that the dollar created or not? That's basically trying to push price back to where it was before the announcement, and then let's see if price resumes in the direction, or price will just continue now to drop, leaving this level behind as it is, and eventually having a bit more of a bearishness on the dollar. And strength on the euro and the pound and so on. Now the gap, it's only visible on the dollar index. That's maybe again because of the specific asset that the trading view has. There was no other gap in any other asset. But in my opinion, I think we actually could leave these levels behind, kind of create these fair value gaps somewhere around here, and price could just resume to move to the upside from where it is, instead of just closing the gap before trying to go to the upside. So I'm a bit more bullish on the euro. I wouldn't be really looking for shorts right now, personally. But I'm not really interested now to trade it from where it is.
I mean, fair. I understand, like, your let's not call it your reservation. You're just, you're kind of like waiting either for the continuation or for the actual pullback to kind of like make its point, to say, okay, we're going to carry on pushing higher from here, this is the intended direction, or there's still a little bit more downside and then a continuation kind of like thing.
Yeah, and to look for shorts, I think I'll prefer to look for or wait for price to get maybe close to 1.18, a little bit higher. We had kind of some structure as well in the past at around that exact level. Can even go even a little bit higher as well. But at least I think price could feel this range close to this structure, and that would be a more interesting level for me to look for shorts. So regarding to the euro dollar, I'm generally just going to wait for price to evolve. It can take a little bit of time until eventually gets there. Hopefully, there's some kind of liquidity that's going to be created, maybe double top somewhere around here, then eventually price can go and come back. We do have this gap, at least on this asset that I'm looking at. I think it is IC Markets. I'm not sure if this gap exists on any other server. If there is, maybe price needs to go. We're looking at the Sunday, I think maybe the opening between Sunday 1st of March to 2nd of March.
1st of March.
Yeah. Maybe there was actually that gap in there or not. If there is, maybe price could go getting closer to that, and then maybe looking for...
So a Wanda chart also has a gap as well. So... So okay, I
think that was the beginning. I think that was the beginning of the war. I think that was kind of Friday night or Saturday morning, the 28th. I think that's when it started.
Yeah. So the gap was on the 2nd of March. So
yeah, when the market opened on Monday or Sunday night. So yeah, maybe price wants to go there, wants to close it. I'll be more comfortable actually trying to sell it from there, to be honest, and then try to look for even potentially continuation or price to go into a bigger short opportunity from these highs. Is there anything in here? Maybe there is. Maybe there is actually this. This could be also kind of considered as a Quasimodo, because we do have this left shoulder. We have then the head being created, and now we actually managed somehow to break this structure here. Even though, even though we do have price just reacting from previous level of that was resistance. basically becoming support. But this is where, for example, even the conversation that we had when the other Richard was here, in terms of these trading patterns, are also using a little bit of your discretionary or bias approach, because when you do are almost creating some kind of a quasi pattern, you can maybe try to sell it from here, but sometimes this can actually be kind of a continuation pattern, and you can actually maybe go long from here and price will just continue, and it's just kind of a fake out for a continuation to the upside instead of a proper break of structure to try to short it from here to there. And I feel like this can be more of a continuation setup, because also where price is reacting on the left, I don't really like this high is reacting on the left side. I think price will actually continue. But overall, I think maybe there's a little bit of a gap in here that price maybe can react and maybe continue. So if I do, I wouldn't be surprised maybe if you do have some kind of reaction from around this level. But I'm more towards continuation on the euro, to be honest.
So you're also, so this morning as well, when myself and Will were talking, I was also looking at the idea of dollar weakening and the dollar pairs, GU, EU, and so on, appreciating, price going up. So glad to see that you also agree with that sentiment. I just wanted to get to this quick one here. The Fivers should launch an instant account as well. We do have a near instant account, just like Unbiased is saying. A hypergrowth is an instant account. Rich can explain better. So when you're talking about instant funding, you're talking about not having a challenge phase. So what the Fivers does is we give you a phase 1, phase 2, phase 3. So with the hypergrowth as well as the pro growth, which is a new one that we launched in the beginning of the month, it's a one phase, meaning that the evaluation is only one step. Once you pass that one step, you are now considered funded, and you get immediate payout off of that amount. So if you bought yourself a 20k hypergrowth as an example, you get that 50% of your initial 10% that you made. So you get 5%, you immediately get back. So that is as near to instant funding as you can get without actually getting instant funding. So you can go and have a look at that. The pro growth one is a slightly cheaper version of the hypergrowth. It doesn't share the same scaling option. The scaling option for the hypergrowth is it doubles your account size every profit margin or every profit target, and the pro growth one follows the high stakes scaling program. So if you started with a 5k, if you pass, it becomes a 7.5. You carry on with the 5, then you go on and you go on to the next stage. It's 7.5, then 10, then 12, and so on and so forth. Yeah. Will, I think you were muted because.
I realized that I was muted after all that. I gave up. I'll be honest with you. I just thought I can't be bothered. I'm not going to unmute myself and say, "Oh no, I was muted." I thought I'd just sit there, shut up, and let you finish.
That's nice of you, mate. I appreciate. I appreciate the fact that you let me carry on.
You're welcome. I was basically just agreeing with you. I was like, yeah.
All right. We have news, right? We have core PCE. We have GDP.
Yeah.
So
core PCE
expected.
Yeah.
Yes. Rafael Garcia saying Nas 100 up makes sense. What do you think? Yes.
Still stuck.
So it's now pulled back to the point that I said I would have gotten out from. With the news coming up in 6 minutes time, had I still been in this trade right now, I would have gotten out exactly where we're at. So I would have gotten out if I was genuinely personally trading this right now. I would have gotten out here. Price came up to here. It's pulled back down to here, which is actually really nice because we have got the break and close above this zone, meaning it's sort of somewhat invalidated it. But due to the fact that we've pulled back down to this level and we've got news out in 5-6 minutes time, this would be where I'm getting out due to the fact that news. So truth be told, this area would have been my exit zone. But again, because we're forward testing it, we're gonna wait and see what happens. But I think we can take the pre-session highs. I think we can take Asia highs. So yeah, it does make sense in my head.
Okay. To me, we're still kind of stuck in the
that's why I
Tokyo
haven't
London
entered
range.
the Ashleigh flat.
Yeah. I just think we're still waiting for New York's input. Let's put it like this: either through news or through just the opening bell. Let's rather say. I see Will is frozen again. Humanity is asking, what is the profit split on the bootcamp? The profit split on the bootcamp, if you start with a 20k, your first payout will be a 50-50. If you start with 100k, your first payout will be a 50-50. And then if you start with a 250, it will be a 50-50 as well. So this is the there we go, the bootcamp. Bootcamp, 3 phases, 1, 2, 3, 4. Once you are funded, so if you purchase a 5k, you will become a 20k funded trader. If you start with 100k, you will start with a 25k account and then end up as 100. If you start with a 250, your first step is 100k and then you'll end up at 250. So not to be confused. If you bought a 250k and all of a sudden your first step is only 100k, when you become funded, this is the amount that you will have. Okay, so the scaling works like this. If I started with a 20k account and I have reached my profit targets through step 1, step 2, step 3, and finally become funded, that funded phase, I need to make 5%, which is $1,000. I have $800, which is 4% available to me for drawdown until I lose the account, but then it is a 50-50 for the first one. On your second scale, which is your 25k, so from a 20 to a 25k, your profit split becomes a 75-25, meaning 75% of the profits go to you, the trader, 25% of the profits goes to the fivers. Okay, and here's another cool thing. The fivers carries the payment of the spread and the commission. So you don't have to worry about that information, like the spreads and stuff like that is covered by them. And then this will carry on until you eventually reach 2 million in funding with the bootcamp, which then equates to an 80-20 split. And then once you reach 2.5 million in funding, you get a personalized contract. And that personalized contract basically says that you get 100% of the profits from that account. So that is when you are contracted by them. So there isn't a lot of people that I think that have reached this point. I think there may have been 1 or 2. Rich Wells is going to start providing us with some statistical information sometime in the next few weeks or so, when we start bringing him back on Tuesdays and Thursdays. One of those days is going to be a statistics day where we just talk about trading statistics in general, from the fivers point of view, from the industry's point of view, and then you'll get to see information like this. So yeah, that's what that is.
Yeah. But the best thing is, like, our website is quite clear in terms of all the information. With those tables, it becomes really easy to understand the scaling, the specifications of how much risk, target, profit you need to achieve. So the website is quite easy to read.
Yeah, you just need to go and have a look at it, and then you can see it. Why I cannot buy account here? Well, that's because this is the live stream, and you can buy an account via the hub. So you just need to go to thefivers.com, register with the Fivers, and then from within the hub you can purchase an account.
Yeah. All right.
I see Will is struggling with the internet. We can see you, Will, but you're breaking up with the voice a lot.
Yeah, news in 5 seconds. So we'll see.
New 5 seconds. Let's see what financial juice. The results are on financial juice. Where are we? Where are we? Where are we? Okay. Core PCE 3 forecast was 3, actual was 2.96, which is pretty much 3. PCE price index month on month forecast was 0.4. The actual result was 0.4. The year on year actual was 2.8, which was also the same as the forecast. And then the sentiment month on month actual was 0.5 versus a forecast of 0.6. Interesting. Yeah, you're back, mate. You're back. You can jump up. So,
Good.
unemployment claims 219k versus 210k. A little bit of a change, not that much. Let's see whether or not it's having an impact. Right now, it is having a bit of an impact. Let's see DXY. Yeah. Small reaction, really. Houston, we lost contact. Yep. Interesting question here. Do you guys organize meetups?
That's a good question.
Yes. From time to time, the Fivers will have some. What do you call them? Not a meetup, an event. There we go. Yeah. So a proper event, let's say in Dubai or in a different country, and then you can go there and you can meet them there. I don't actually know when is the next one.
Yeah, I was actually at their last one in London. Their last one was in London about 3-4 years ago now. That was a lot of fun. I haven't been to any of the recent ones or any updated ones, but that was the one that I went to. And that was good fun.
Is that the one where you met Victor?
No. That was last year. Yeah, that was. Oh, dude, that's so embarrassing. Yeah, that was last year. Oh my god, me and Cece, my partner, were talking about that last night. It was quite funny. I think I'm one of the only people on planet Earth that has a photo of Victor, other than Victor's family.
I would think so, mate. I would think so.
Yeah.
So this question here from not here on the website. So if you want to get funded so this is the website. So it's thefivers.com. If you click on here, get funded. If I click there now, it's going to take me to the hub and it's going to log me in. You can go and do that. You can click on the get funded and then you just follow the steps. Create an account with the Fivers, register, then you get access to the hub, and then from the hub, you're able to purchase an account.
Yes.
Simple, straightforward.
Indeedio.
How to be in the leaderboard. Be a good trader, mate.
Yeah, good.
Make profits. No, I'm joking. How to be on the leaderboard it's going to really depend on your style of trading. If you're somebody that really enjoys full sending it and just like pray and spray almost, just high like lot sizes, you can get onto the leaderboard, mate. But like it's not something that is repeatable, I would think.
Yeah. Do you know who I'm amazed isn't on the leaderboard?
Who, me?
50 Cal.
Oh. Why is 50 Cal not on? Is he participating?
I don't know. I'm sure he said that he was on a competition. I'm sure he said that he did sign up to the Fivers comp. Or maybe he's bought a Fivers account. But
I think he bought a Fivers account.
It was. Oh, okay. It wasn't the competition then. No?
No.
Ah,
He bought an account. Yeah.
dude, that is one guy who I have never understood how he trades. So like me and him, like, I've known him for a long time, and back when I pretty much started out on like doing my trading properly, and he's an awesome guy, awesome trader, but his way of trading is triggering. He'll message me being like, "Bro, I just blew an account." I'm like, and then he'd be like, "Bro, I just earned like $1,000." I'm like, "How? How?" And then like, dude, he's just one of those people that he'll earn so much money, and then the next day blow the account. And he's worked out that he trades better with small personal accounts because he'll turn 20 into 200 in like 2 or 3 months. And it's just absolutely bonkers. He doesn't do prop challenges, but I wish he did, because that is how you get on a challenge or on a leaderboard.
Yeah, it's the more gambling side of things.
Yeah, it's pretty much having the gambling mindset backed with a profitable strategy. You know, it's having that hee ho, let's go, I don't care on outcome, mixed with this is my strategy I've used, it's proven, I'm 90% sure I think it's proven, I'm pretty sure it's proven, screw it, let's try it anyway. You know, it's one of those like, yeah, it's a weird one. It's a weird one.
Here's an interesting question. How do you guys answer this? Do you guys work for the Fivers?
That's it. I mean,
Yes.
yeah. Well, I mean, technically, I suppose. Yeah.
I'd like to think of it. We work along
We were
with
with
the
the Fiverr. Yeah.
Yeah.
I was gonna. Yeah.
I like the
I
word,
like
yeah.
that. I was gonna say I don't like the word I work for, but more work with. Because
Yeah,
it's like the fight. We're a team and a family here at the Fivers, and they treat you like that, and we get treated like that, and we wouldn't be here if it wasn't that case and it wasn't that way. So yeah, I suppose technically, yeah, you're sure we work for the Fivers, but no, we work more alongside the Fivers than with the Fivers.
Hola, Victor.
Victor, ¿cómo estás?
Pra-pa-pa-pa.
Welcome.
Thank you. Hi. I would say the Fivers is my client.
Ooh,
That's
I
how
like
I
that.
work.
I like that.
Okay.
Samir!
What's
Hello,
up,
hello,
Samir?
guys.
We can't all
How
be
are
a
you guys?
Victor that has clients. He's like a lawyer.
Yeah.
You
We
pay
can't all
me
be as
to
good as
deliver a
Victor. There
service
is
for you.
only one Victor.
Now Fivers
Nope.
is our second home.
The Fivers works for Victor.
Yeah. Have you seen those those memes where it's what's his name? He's just died recently. Karate guy. Oh my god, why have I just forgotten his name?
Cry guy?
Karate guy.
Oh, Chuck Norris.
Chuck Norris, thank you. Yeah, like Victor's the trading version of Chuck Norris. Like Victor didn't make profits. Profits made Victor. You know,
What?
I'm following you, but thank you.
Victor was profitable before the market even existed. He took his
Yeah.
first trade on the CME before the CME was even created. That's how you do a Victor equals Chuck Norris, mate.
You guys make me
Victor
feel
didn't
old.
learn to
But
trade.
Thank you. I predate
Yeah.
CME certification.
Yes,
That makes
yes.
me that makes
Yeah.
me a little dinosaur in time terms. But thank you. I do appreciate the good intention into that. You guys are too kind to me. To me, I'm just a little bit above average of a trader.
And
But
that's why you
know,
are Victor Chuck Norris trades.
but thank you that you guys think as high that high of me. Thank you. So the news came out. Market didn't really do much. I did get out of my trade because high impact news. I was close to TP. My rules say I need to get out of that trade. Were you in any? Were you guys in a trade before the news? Did you hold it? Okay, no, I see
No.
3 nodding sideways. Some mute
There's like a whole lot of
ears as
nodding
well.
dogs.
They're nodding horizontally. So okay, so I got the picture. Uh,
Oh
how has the day been so
no.
far
Say again,
for you
Victor.
guys? Yeah, how was the day, your trading day been so far?
Non-existent.
Ah,
Pretty much same as that, yeah, ditto. We had a couple of opportunities on EU and GU, but they would have missed me. So yeah, no, zero trading for me. We
I
did
see.
plot out a theoretical buy on NAS, which I gave 2 potential exit points, but it hasn't yet hit that final theoretical TP yet.
Nice. Nice.
Yeah.
How, Will, before anything, actually, I had a question for you because you mentioned yesterday that today, or was it today or tomorrow, is the last day that you're gonna be on
Today.
that side of the world. Today it is.
Oh
Okay.
no, sorry, no. Tomorrow's the last day. Yeah, today's my last stream in Hong Kong.
Yes.
So
Yeah.
tomorrow I fly back to the UK.
I was gonna ask you, uh, how how do you look back on your periods? That period that you've been here, been there. Um, are you considering moving for a longer time? Are you gonna be repeating this periodically? Was it a great experience? But you had you reached your goals. How
Dude,
do you how do you put this as a trader? Of course, we're not talking about
yeah,
personal
dude,
stuff. As a
that's a
trader,
fantastic question. So let's go into the sort of economics of being a trader, like the finances. Hong Kong, pinnacle capital. It's the best place to be as a trader. Okay, the housing or like the accommodation, it's ridiculously expensive. I will fully admit that. Everything else is pretty affordable. It is the financial hub. I went to just a local pub a couple of weeks ago, and half the guys there were working for the finance department at HSBC. You can go to an average bar and just find you end up being well connected with people.
hmm.
So it is a great, great, great place to be as far as financial connections. The rooftop bars, the lifestyle, the flashiness, providing you can afford it. Because again, when you get to like that sort of upscale side of Hong Kong, it is really expensive. That is great. That's amazing. So, and the taxes, it's pretty much tax free up to a certain amount. And even when you like surpass that certain amount, the taxes are low. Again, not a financial advisor, not not an accountant, but that is a bit of information for you. So on that side, it's brilliant. Yes, I could move here. I'm a city. I'm not a city boy. Sorry, I'm a country boy. So city life for me, it's
Country.
been an experience, and Hong Kong is a magical place, and I'll fully agree. Someone who worked, who I met, the Hong Kong government are giving people an extra bank holiday once they've gotten rid of Will. Fully, of course, you have to come in and just instantly, yeah, fair. Yeah, probably are. They're calling it thank goodness day. But no. So it is a magical place, and the reason I say it's a magical place, like I was going, I was at this bar and talking to this guy. Actually, no, this one guy as well was a lawyer, or a solicitor. He was a lawyer who sets up hedge funds. Me and him had a great conversation. A couple of pints later, a bit of alcohol flowing, you spill the beans a bit more. And dude, the information he would just happily give to me, like somebody he did say, look, I can't tell you this, but he said, let's just say. And when someone says let's just say, it's going to be some juicy stuff. So I'm not going to divulge that. That's information that I'm going to take to a very secret place with me. But he did say Disney. It's like Disneyland. Hong Kong's a magical place. Where nothing like it exists. It's just one of those places that you can come and it just have a life that you walk away from and you're like, what just happened? Hong Kong is that. And it is a fantastic place, and it will forever have a place in my heart, but it's not for me. Yeah,
Not for you.
it's not for
Okay.
me. Yeah,
Okay.
it's I will make it something that's regular. I'll probably come out here once a year, maybe once every other year. You know, my partner is from Hong Kong, so we'll be visiting family. Uh, but I'm not overly keen for it. It's too built up. It's too city. I love a fast paced mentality, but it is overly fast paced here. You know, it's everyone's too much in a rush,
Mm.
and it's not quite got that fast paced mentality. It's that legit fast pace, and
Ah.
I don't like that. You know, like so I like a bit of a mixture. So like I'll go into the city for a couple of days and get that fast paced action. Whereas I enjoy to just enjoy and take it a little bit slower, have a bit of a relax. This has really sort of opened up the British or European culture in me. It's really opened up that laid back attitude and made me realize that, you know what, maybe I'm not a city guy. So as a trader, it's a great place to be. As a person, it will forever have a special place in my heart, but it won't be a permanent place.
I see.
Nice.
I
Nice.
like that. But would you recommend for traders? By the way you described it, you would. But would you recommend for traders to make it a hop for a couple of months, a year, maybe once or
Yeah, oh,
twice, in their life?
yeah. If I grew up in a city like London, or I grew up in a built-up city, London, New York, somewhere where maybe the apartments are small, money doesn't go too far, and you're used to that city life, get
Hmm.
your ass to Hong Kong. You know, forget Dubai.
Get
Dubai's nice,
get
yeah,
your
Dubai's
get.
great.
I didn't
Get
get
your
Bye.
that
ass
word.
over to Hong Kong.
Get your what? I didn't hear you correctly.
Your derrière. Get your bottom over to Dubai, to Hong Kong. Yeah, forget the overly fabricated, synthetic Dubai. Because yeah, Dubai's great. It looks fantastic, tax free completely. But it's very new. It's very man made, which is great. Yeah, of course. You know, it's very luxury. If you're looking for that little bit of culture as well, because it is super metropolitan when you get into the city. You
Mm.
know, it is super fast paced. It's business people. It's finances. It is a great place to live. Uh, if you're into that sort of thing. If you're maybe a little bit more, the Monaco mindset where
Mhm.
you like to relax a little bit, you like to have that European thoughts, stay away from Hong Kong. It's too fast paced.
Speaking of staying away, I'm going to take this moment to say adios and goodbye.
Ciao
I'll
for now.
I'll see everybody next week Monday again. I'm going to head off. I need some lunch. Pedro, I hope you have a good day, sir.
Very
Victor,
bad.
I hope you have a good day, sir. And then Samir, I hope you have a good day to you, sir. And then to William, I hope you have a good flight.
Thank
And
you.
that
Yeah, you could.
and that
Really
we
Thanks so
don't.
much, Mr. Richard. Thank you so much.
All right, guys.
Thank
Cheers.
you very much,
Pedro.
Richard. Sir.
Take care, Rich.
See you later, man.
Yeah, I
Have a good
like
one.
that. I like that. I have never been to Hong Kong before, but as traders, we're flexible in where we can operate. The other thing that I
Yeah.
wanted to ask you was, how did you experience the time difference for your trading session? Because that's the biggest change for a trader, that you're gonna have different sessions that are during your awake hours. How was it for you?
I'm going to go with a 50-50, and the reason it's 50-50 is I'm not a morning person. I have to force myself up in the mornings. So I
Mhm.
used to go boxing at like 5-6 a.m. just to force myself to be awake, ready for the market for London Open. Here, London opens around, I gotta try and think, 2-3 p.m. No, 4 p.m. 3-4 p.m. So I can't remember now. So it's in the afternoon. So it's super
Mm.
chill. You get to spend the morning, go out and do this, that, and the other, come back, start trading. that's the positive. That's what I love about it. Now, the negative is I like to go over into the early stages of New York. I've not
Mm-hmm.
been able to do that. I've not been able to go into the early stages of New York. I feel like it's limiting a lot of my trading. I
Mm-hmm.
feel like if I want to trade that side, I'm going to have to stay up to like 2 in the morning. Of course, I got a partner. She's not going to be too impressed if I'm going to bed and waking her up at 2 o'clock in the morning every single night. So,
Not
I
even
kind of got
healthy.
like, yeah, exactly. So I got to really try and cram in
Mm.
my trading, which it's doable to be fair, but I don't like it. It makes me feel a bit on top of myself. Whereas when I
Mhm.
stretch my time zone out into early New York, I feel a little bit more relaxed. Okay, look, it's not quite coming yet. I can wait a little bit longer, maybe enter in New York once that volatility settled down of the open. So it's a mixed bag. It's an and an ah. I've not enjoyed the time zone too much, but I've also enjoyed not having to wake up super early and trade.
I suppose that's the biggest drawback I would mention, because when you're in, either in Africa and Europe, you can trade both sessions, right? You can do the
Mm,
London session, and then you can still pick the first half of New York session, and still have just a 9 to 10 hours per day of a working period,
yeah.
and you're catching the best two sessions, in terms of volatility and volume. What else? It's the best place to be. I mean, if you're in the States, you're not going to be able to catch London session easily unless you wake up very, very early. And if you're in Asia, you're going to be missing New York because it's too late for you. So that's the only thing I would miss, a chunk of my trading session, and probably a
Yeah.
chunk of money with that as well for every day I spend there.
Yeah,
But
yeah,
other
literally, exactly.
but other than that, I guess it frees up the morning, and that's
It does.
something,
It does free up the
right?
morning quite nicely.
You could be there and have vacation during the early hours, and then do some trading for the couple of next like in the afternoon, and still have a productive day while basically on vacation.
Mm. Yeah, no, exactly. Like truth be told, I'd rather get the saying "eat the frog" first. I'd rather get it all over and done with in the morning, early afternoon, and take the
Mm.
afternoon, evening off. I'm more of a night owl myself anyway. I like an evening barbecue. I like to just chill, wind down, go out for the afternoon, go have some lunch. So I'm more of a chill out in the afternoon, do the work in the morning sort of person. So
Mm-hmm.
to me, it's like I'm flipping what I feel is my natural mindset. So that sucks a little bit. And like you said, New York session, I'm leaving a lot of money on the table, which again, it sucks and it has been limiting, especially when holding over news. So if I have held a trade and I'm like holding over slightly, I'm like setting alarms to remind myself that there's news out at 9:30, not 1:30. So there's been a couple of times I've been stopped out due to news because I've been out chilling in the evening with my partner. And next minute I've hit a notification saying hit stop loss. I was like, why am I in a trade? It's nighttime. And I've looked. I'm like, oh my god, Will, you absolute idiot! It's not nighttime. It's daytime. It's midday. So yeah, that's been a bit frustrating. So I think Europe is on the cards next. My brother is big into Spain. He's got his partner's family is Spanish. He's pretty much fluent in Spanish as well. So it's just we'll probably move to like Porto Banús, Marbella, so somewhere like that. Check out that a little bit. He's got family in like Fengarola way. So we're gonna look at like
Ah,
Spain next, and
he
then
does.
take a look
Okay.
through there because it's a closer time frame to London, and not only that, we've still got the nice European weather as well. So
Yeah. Yeah, it
you
was
know,
funny you mentioned Fingirola. I was planning to go there to visit someone there, a close person to me. So, but I haven't gone there yet. Probably this year I'll be visiting Fingirola, close to
oh
Malaga.
nice, yeah.
Yeah.
Yeah. Oh, awesome stuff. So yeah, so they got family out there. So we'll see. We'll see. Maybe we're just exploring a little bit at the moment. We've got businesses in the UK as hubs. As like actual physical businesses in the UK. So
Hmm.
my brother's a little less virtual than I am. He's a little bit less flexible with how far he can come. So if we're a quick flight away from the business, it's not too bad. You know, what's a flight to Spain is hour, 2 hours, 3 hours, something like that. So it's not too bad. But we'll see. You know, that's what I love about trading. You know, I'm able to explore these vast countries that I want to go Thailand as well. So I'm gonna spend a month in Thailand next year now, just because why not? You know, trading gives me that ability. Now Thailand, I think, is 2 hours behind Hong Kong. I think it is.
Okay.
I know that. I think there's a few Thai people in chat. Let me know if I'm wrong with that. So that's not too bad. That's not too bad. I get to work a little bit earlier and get the evening off. So yeah, you know, just exploring and enjoying the freedom of being a full-time trader.
Nice. That's the life, right? That's why we
I
chose
have not
this.
been a travel guy, but now I am shifting to that. I haven't really traveled international. So this year, definitely I'm working on that. I have been super, in my room all the time, that type of guy. But now I am breaking that pattern, where I'm traveling here and there. So I
Yeah,
will be planning for a trip as well and seeing
Where are
you
you going
guys.
to?
It can be anywhere near to my place. In I
put a
haven't
load of
decided
places
it.
that you want to
I
go.
haven't decided it basically. Yeah, yeah, yeah.
Yeah, put like a list of places that you want to go and put like a random generator on, like a
Yeah,
random name
that's a good
generator,
idea.
and then just go there.
That's
That'd be cool.
that's the
Just
dope
looking for
idea you
next
gave
week.
me.
Yeah, yeah. Also, Delcio, Mallorca, it was really nice. I loved Mallorca. I actually worked there a couple of years ago when I was late teens. I worked there on the bar,
Oh,
so that was good fun. Mallorca is another place that's quite special to me. It was my first ever time away from home on my own.
nice. Never been to Mallorca yet. I've been to Ibiza a couple
Yeah.
of times, but not Mallorca.
I haven't even heard about this. First time I'm hearing about this. Mallorca.
Yeah.
I don't even
Maybe we
know
should organize
where.
a meetup with the Fivers crew at Mallorca or Ibiza or anywhere.
Guys,
Yeah,
every,
yeah.
every single city you are saying in Spain, it's one of the best places to play paddle. Okay, they have the best classes, the best academies for paddle. I'm having to go into the south of Spain or to even Valencia, Barcelona. They have the best of the best academies of paddle in the world. So I'm having. I'm having either
Pedro's like, yeah.
Mallorca,
Right.
Ibiza as well also has it. Yeah, all
I've
of them.
never been Ibiza.
Granada. Yeah, all of them.
Waiting
I'm
for
keen. Dolcio, I'm keen.
yes.
Let's do it.
All right.
That will be
So
Okay,
awesome.
guys.
where's the opportunity, guys? Samir is eyeing something on the US 30. I'm pretty sure I can read his eyes. We have
I'll tell you what then, Samir. I'm going to let you crack on with your analysis because I know that I'm going to let you do it uninterrupted as well. I don't want to interrupt you, so because when you do drop that value, you do drop that value. So therefore, I'm going to love you guys and leave you guys. It's been an absolute pleasure streaming with you from Hong Kong. Guys, you've been absolute legends. To each and every single one of you out there who are from Hong Kong, I know there was a couple of you throughout my journey in Hong Kong with you guys in chat. You have a beautiful country, and it is absolutely fantastic, and it will always hold a special place in my heart. But the next time you see me, I will be back in my home office. I will be in Mikasa, and I cannot wait to be, more importantly, at my large trading monitor and my comfy chair. So for now, I love you and leave you, and I shall see you all next week. Have a fantastic weekend. Stay safe, and don't do anything I wouldn't do. So, don't know what that is, but who knows. Peace!
safe
Thank
flight
you.
with
Thank you very much, Will.
Take
tomorrow,
care.
and we'll be waiting for your return to your place. Take care. All right, Pedro. How is on your side? I asked before you came in, I believe, or did I? No, I think you were already here when I came in. So you were asked already. You didn't have any trades you set on, but where's the opportunity for someone who comes in watching us? By the way, like and subscribe. But one of those person who comes in and is thinking, I want to have a trading idea. I want to know, what's bubbling. Where's the action? Where would you say that is, Pedro? Whenever you come back to the screen.
Just not that bad. Where is the action? Well, one asset that is actually moving are the yen pairs. Okay, and actually someone
Okay.
on the chat was looking at euro yen, because the yen index actually just broke these lows in here. So we are literally just now about to break these lows from that were created on the 11th of March, and it's a big structure also around this level. So are you going to have some kind of continuation? Most likely, maybe you have a little bit of momentum, and then we'll see if there is going to be enough liquidity to try to push back, to try to push price up again, or not. Okay, this has been a repetitive pattern that has been going on the yen index, and with this type of behavior, then we can try to look individually at each one of these yen pairs to try to see what is the best opportunity to eventually, again, myself as a counter trend trader, I'll be looking for eventually the move to the upside on the yen index, which means eventually shorts on the individual yen pairs, euro yen. Well, this is a E. Yeah, dollar yen and so on, pound yen and so on and so on. So that will be something that I'll be trying to pay attention to. So that's one that is actually with some momentum right now. Then of course we do have the dollar, but the dollar isn't moving that much. At least I'm talking about today. And the dollar, again, I'm curious to see if you're going to close the gap or if it's just going to continue to move to the downside. Just been a bit more my inclination. But staying on the yen pairs. Yes, so this euro yen was a setup that eventually I'll be looking for a short, but I do need to wait for price action confirmation. Okay, I do need to wait for price to actually to show me some weakness, and at this point I haven't seen that weakness. I already mentioned before there was a high probability move that could happen from here to here, and that was it, which is basically price broke out the structure, got into this next structure in here that was still fresh, basically this supply level. Price react from it, but it just went to retest the previous level of structure. This resistance becomes support. That was the only space available. That was the move. After that price, actually, there was a high probability that could just resume the move to the upside instead of just dropping. So that happened. Price now is moving, and now I need to see weakness from here. If I don't see any weakness, then I'm not going to be interested in trading it. Okay. We do have maybe really at the extreme, maybe something in there. So which means that price may still go all the way and take this high, or maybe there's something else also still within here that maybe price can react from, basically actually where price is approaching right now. So if price actually starts showing some weakness from here, at least I would like to see. Now we need to start looking at the approach. Okay, so I'm looking at the higher time frame on the left side to see potentially where are those order blocks or pressure levels that I'm interested. And then I need to start looking at the approach to see which level maybe I want to see being broken to the downside, to start confirming that maybe price actually has intentions to move to the downside. So I'll have maybe this consideration as a level that price could bounce and continue to go higher, and then a little bit closer around 50-minute time frame, maybe a little bit closer somewhere around these last lows in here. So even if price, for example, breaks this, maybe can just retest this level and can just resume the move to the upside. If price breaks this level, maybe resumes this, can maybe look for a trade in here, but that doesn't really mean that price will just move down. Maybe price will then just resume to the upside. Either way. So let's see if there's actually any kind of selling pressure from around this level, and I'm curious to see then how this level is going to hold. If this now starts being broken, then maybe we are going to start seeing some bigger selling pressure from here, and there you go. And now the sellers are going to be in control from these highs. Just to finalize it in here, because if you're actually looking to the higher time frame and are looking into the weekly, can be even monthly, and now we are back into 88. Okay, we are actually basically almost 40 years ago.
How
Yes,
many?
we are reacting almost 40 years, 36, 37 years ago, basically from the 90s.
Okay.
So we are indeed reacting from this supply level. It's a level I've been mentioning many weeks ago, many months ago. Price is still holding it. Are you going to go above that level? Then we will see. Okay, then we'll see if you're going to still end up taking this top or not, and then maybe price can even start looking a little bit higher. But for now, don't really need to look into that. I just want to see that price, at least this high, is actually reacting from something relevant on the left side, and then you can go into the pound yen. Pound yen is now taking this liquidity, which is nice as well. So pound yen could be also an interesting one. I would like to see even going above these highs as well. So let it go a little bit higher, and then maybe try to look for a short on the pound yen. So yeah, I think the yen pairs are going to be on my radar. I'm going to be all over pound the yen pairs these next days.
I'm going to switch to mine just
Yes.
for a little bit here to give people, just a little variation on the same thing you mentioned, because you were focusing on the yen pairs, specifically on euro yen, not only for the reason because there was someone in the chat. Thank you for that, by the way, for mentioning it. That's what we want. We want you guys to tell us what you're looking for. What are your putting your eyes on, so we can help you break it down through our lenses, and give you as an alternative view to the same asset that you've been looking and trying to get a trade on. So if I look at this pair, what I see is on the complete higher, the monthly, the highest time frame that I look for, this is bullish. That means that at least in this time frame, I know it's a very, very long
Mhm.
time, very high time frame, but still it's very significant. If there's a complete absence of bearish structures, you know where you're standing. If you look at the market structure and it's very, very bullish, you need to understand that, even if you have sell signals on even the daily, you shouldn't be targeting too ambitiously, meaning um, you should just be taking to the next level, and that's it. Because the higher time frames, we'll take a look at the weekly as well, but the higher time frames are letting you know that it's been for many, many months now favoring to the upside. You can see it clearly broke that swing high, had no issues at all. Didn't on this time frame, didn't come and retest um, that high that was broken, and just continue consolidated all the way up where we are in the last couple of months, and it's still breaking out. Still early to say, though, I must admit it's only 9 days into this new month. Still, it sets the tone basically for the super macro view on this pair. So I don't have any bearish structure. If anything, we can see that there is a bullish one. These are not the best one to trade if you had to put them in, hierarchy, because it is at the end of a bullish impulsive move. So you want to be a little bit careful with them, but you can still use them. Just make sure that your risk is adequate. So we go lower time frame on the weekly. If we are looking at the structure that stands out, that we're currently in a bearish. It is a first retest, and why I'll tell you what my rules are to still consider this a fresh retest. What I do is I measure from the creation of the order block, which is these two candles created that order block. And, since we have one candle that is completely the complete range from here to the high, to the from the high to the low of that candle, none of it touches the order block to me, by the way that I mark the order block. So that means that this is the first retest. There is no immediate retest. And none of the candles, as it was retesting and interacting with the order block, none of them actually printed its full range outside of the order block. It means that it's still being retested. This is still the first retest, even though it doesn't really look like that, but it is technically to me. However, that doesn't tell you the complete story, because I wouldn't be going short this pair. Why not? And I'll tell you why. For one, we have some pretty clear bullish order flow. If you mark these, you will see that the market creates the order block, and what does it very, very often do. This is the creation of the order block. What does it do? It comes back to retest it and it moves away. Look at that beautiful pin bar that was created afterwards. That tells me that, this is telling me more information. These combination of candles tells me who is in charge, even though that on a higher time frame, yes, you do have a fresh order block, but the reaction, this is price action order blocks being created, being retested, and the market reacting to it. That's much more stronger than just an order block being created. And so far, no reaction, no follow through movement out of that. So that sets, to me, that tells us that the likelihood that the bigger structure will eventually break is quite high, or at least it's not as low as you would expect. So that's the weekly. If we go to the daily time frame, you can actually see that we do have a reversal pattern. The highest point is to be assumed the head. That makes this point the left, the neckline. That's the daily quasi. That makes this automatically the left shoulder, the head neckline. And this is the first right shoulder, right? So the quasi is actually like so. You have this as being the structure. You can drag this point all the way lower, but it doesn't really matter. It breaks the neckline, it goes for the first right shoulder, moves away, hits target, which is the target, right? The low of that structure, hits it, and comes back for a possible second read or second right shoulder. But remember that the higher time frame, and that's the importance of having the weekly and the monthly structure at the back of your head, because remember what I just said. If you do have a signal from a daily or even a weekly, you should not be too ambitious with the target, meaning you should not be targeting again for the second time the low of that structure. That would be maybe asking for a little bit too much, right? You can't adjust that expectation with time, but right now there aren't any indication that the market is actually losing steam. On the contrary, it looks like it wants to break out. So whatever you do, make sure you just target the next level, and that's it. You move away, you capture your piece of your pie, the slice, and you are happy with it. You go home and you eat it. You share it with your friends and families, but you do not, hope for the last target to be hit necessarily. So that's the quasi. That makes this area the area that you could be looking for a possible short signal. And if you do get it, where's the first level? At least currently, where's the first level that is visible to us? That's the within the weekly order block still, right? So that tells you it's not too big of a target. It's not too ambitious. It is within the structure. Price can easily come back, hit this, and continue, and it wouldn't change the bigger picture on the weekly and the monthly. That's what you want, right? You don't want to put your target where it needs to invalidate a higher time frame structure in order to hit your target. You want to, you can't go either direction. You can go against the higher time frame as long as you know when to extend that target and when to be conservative with the target. Now it's time to be conservative because of the higher time frame posture. You can also see the EMA. This is the 50 EMA that is inching up. It's not very visible, but it's inching up. It's sloping up a little bit. That's the 200. That tells you, that sets the tone that the buyers are eventually are likely to continue, break out, and continue. But in the meantime, there could be a sell signal, and that could be a nice area to be targeting. So that's the daily. If we go to the 4-hour, let's take a look here. Actually, I had a target we discussed before. When it broke out of this level, that was the target some time ago. Anyways, so on the 4-hour, we can actually go a little bit cleaner with that's the daily still. So on the 4-hour, there are two entry order block, right? So you look for the same structure, see if it's still valid, and it is, and the level, the structure is, this is the complete structure, right, on the quasi, on the H4, and if you go back between that point and the head, right? These are the three areas that you could be looking for possible reaction. The first one has already been invalidated, which is that one, and we're currently retesting the second H4 order block. I would be, looking at price action. If you zoom in, you see the market is not at all indicating that it wants to reverse. This is not the price action this is the impulse. It's not that of impulse, but that's the first leg. It has a consolidation. And actually, I wanted to continue. Let me check that back. So this is the move, right? This is one leg. It consolidates, has the second leg, consolidates again, and has a third leg. That doesn't look at all like bearish or anything that seems like it's want to reverse. So you don't want to imagine it's going to reverse. It has to tell us that it wants to reverse by creating the structure, by having double tops, by having quasis, head and shoulder, whatever it is that you like to use as a reversal pattern. But it needs to do it. And as long as it doesn't show it, you assume that it's going to just continue with that trend going higher. And so there's nothing to do in terms of a possible reversal. But this is the area. And I would be keen to see if the market, let's say it does something like this, it consolidates here. If it gets, and it, like it did here, it has like a little wick that touches this, then to me, this becomes the order block, not the one that we're currently dealing with. So I would be putting my stop if I, not trading from the H4, but if I would be putting my stop beyond that area, because I would understand that this whole structure is being retested, and it could go back and retest that and penetrate it a little bit deeper than previously. Hasn't happened yet, so I'm going to take these away. So right now, there isn't really, to me, there isn't anything to look for. If the H4 isn't ready, and it isn't, I have nothing to do. I'm not, unless I'm going to be scalping, but I don't scalp Euro Yen. So I would scalp EU, GU, but not EJ. Simple personal preference, doesn't mean you shouldn't, but that's just me. So that's EJ. And I'll go back to you, Pedro, because I just wanted to give this intermezzo from the other ones that you were talking about. Actually, I think you finished with the sequence or the list of, and by your facial expression, I understand that you actually finished with the list of assets you wanted to talk about. So let's steer then to Samir. How is 14 minutes before, 13 minutes before the open, Samir?
Yeah, 30 minutes.
You're focused on US 30. Could you show us
Yes.
what you're looking for? Are you going short? Are you going long? Are you looking for that breakout? Is there
All
a
right.
setup or not?
Yes. According to my US 30 strategy, I get set up almost every day because I trade 1 minute correction patterns, and you see it everywhere. But I do have some rules that I follow. I don't take 1 minute continuations blindly. So I was drawing my levels here and there. I was trying to understand which levels makes most sense. Let me go to the daily time frame first. I will not remove these levels and draw it again, but I'm just gonna let you guys know why I have drawn this level. First of all, this is a very decent resistance area and couple of rejections. So I have one level there. Again, you can see a couple of rejections, another level, and this line that you see here, I have marked it as a psychological number. If we get some kind of rejection from here, so I know this is also a psychological number, so it can act as a confluence. This is a decent level, this is a decent level. So these are a couple of levels that I have of my daily time frame. Now looking at the daily candle, look at this daily candle. It has closed very strong. If I draw my areas, right now we are retesting this area. This is the first information that I have. Going to the 4 hour time frame, let's see what do we have. And if you see, this is a huge fair value gap on the 4 hour time frame. Let me use other tool. So this is a 4 hour area. I'm gonna delete it, but just for the reference, we do know that this is a 4 hour fair value gap, and price may can tap to this 4 hour fair value gap. So there is a possibility of price doing this in today's session. But looking at the current price action, seems like we are holding this area. We have closed dodgy, and going to the 1 hour, VWAP is bearish, so definitely we can break this area and we can continue towards this area also, and potentially filling that 4 hour fair value gap. And then maybe we can give a continuation momentum that the daily candle is having, because this last previous day candle was having way too much momentum. So on the 15-minute, how will I take the trade? I was talking to myself. Now let's do it live here. So we have these trend lines here. Let me delete this thing because it makes a little bit less sense. This makes more sense. So if we tap this area, and if for the 1 minute time frame I saw some consolidation, then I will sell from this trend line. This is the first scenario. And the second scenario can be if we break out of this trend line and we do some pattern, and then I will be buying, and maybe potentially we can target these highs. So this is the second scenario. And the third scenario can be we break out of this area, we retest couple of small consolidation area, and then I will sell from here and aiming for this area or maybe this liquidity low. Or if we impulse way too much and we came to this area, definitely this will be a buying area for me. So these are 4 scenarios that I have for today's session. Let's see how price is gonna behave here, or if we break, we will see how it is gonna behave. By the way, yesterday's trade that I showed you guys on stream, it was amazing. We was having this channel, price was traveling like this, price was away from the VWAP, and price just rejected right from there where our that 4 hour wick fill was. If I take you there, so this was the area. It was very beautiful trade. If I was having my CFD account, I do have it, I am deciding not to trade it, so that's why I didn't took this trade. I was focusing on the scalping strategy, but I realized scalping is not for me, so I have deleted NQ. So I'm just gonna strictly follow my main strategy, which is this trend line breakouts. That is it. And today's session is looking we have gap here, so I do think we can break out of this area and we can fill this gap. And if we go to the 1 minute time frame, we do have small consolidation here, so I am seeing if we can break this area, I might can enter sell, putting my stop loss above this VWAP or maybe above this trend line, and I can easily secure 1-to-1 this way. But we do need some confirmations. I don't want to take trades right at the market open, because we can wick out and we still can break out of this trend line. I did a mistake back in the days, so I will avoid it. I will let the market settle for 3-4 minutes, and then when the candlesticks start to print little bit I will say normally, then I can plan my trades. Both of the scenarios are looking decent to me. Let me remove this 200 EMA. On the 5 minute we are bearish on the 200 EMA, so I think if we break this area, there can be a selling opportunity potentially coming to this area, and then I do think we can continue that daily candle momentum. So right now daily candle is a little bit contradicting, because it is way too bullish, and right now it may be making a lower wick and potentially continuing bullish. So I have to take the perfect pattern. So I think if we break out of this trend line, that will add more confluence. So I will be looking more for buys, but if I got the sells, that is okay, I will still take the sells. But more confluence is on the buy side. So if we go to the upside, the confidence level is gonna be more, and I can execute it with confidence. So I'll be waiting for something like this. But again, I showed you 4 scenarios. If any of the scenarios played out, I will definitely show you guys my trade here. I will tell you guys if I decide to take the trade. Yesterday's scalping session took a loss, but this US30 was really amazing sell right from that area. And yeah, let's see what we get today. Utkarsh, Fivers is the best. Yes, you are right. Fivers is the best. It has been 10 years, we are in the profit industry, and that is amazing. So, yeah. Okay, I can see
Yes,
some
I was
red
gonna.
news here.
Yes, it's been a while. It's about 32 minutes ago. But the fragile ceasefire that we have had so far is still standing, as we can hear the deputy foreign minister of Iran saying that there are still green light. They're still going to the peace talks that are going to be in Pakistan. So that's a positive news, and probably that's why we see EU moving, break continuing its move towards the next structure, which is that H1 order block. I had my target here, but I closed it before the news event that we had before, per my rule. The but the important thing is that so far, even though they're mixing contradicting news headlines, and there's always that headline risk, that one side could be trigger or could say something that makes everyone think there is no ceasefire or it's going to fail or whatever. But this is, positive news, and these are the headlines, news that will drive the market, right? The market is always hungry, especially in these moments, to get new information, right? New direction, new indication. Are we gonna go? Is this ceasefire gonna fail? Yeah, is the Strait of Hormuz effectively open or not? It's not open. They have agreed to open it during the ceasefire or the negotiations during the ceasefire, the 14 days, but it's not open yet. As far as I know, there's only like 4 ships that have gone through the straits. None of them are gas, natural gas, or oil, which is, exactly what we need for the energy sectors. Um, so all of these things can, make the market, the investors, but also the traders, take on risk, right? If things are positive, or be conservative and be, risk off. So it's you want to be that's why I want to be here at the fifers, so we can, give you these indications whenever they happen. We'll be seeing them because we're traders, first and foremost, and these are the same indications that we take, to take risk, put risk on the table or not. And let me tell you a little bit about this trade, because perhaps some people are watching that. Hi, Big D guy. Thank you for coming in. Um, you're asking me if I'm single. You want to know if I'm single, if I'm the market. Uh, you have a. And I'm not gonna go there. But anyways, yes. Pedro is always laughing. Pedro is he's enjoying his life as a good trader, and you can see it on his face, on his facial expression. He's always laughing. Anyways, but coming back to the charts, um, let's see. I didn't know I had fans.
You
All
have
right.
a lot of fans here with in a
Okay.
stream.
So we on the higher time frames, just to understand, we did hit a. This is the head, left shoulder, neckline, and we did hit. If it's not very easy to see, I mark it all the time just for people to get the feeling. There was, this is the first right shoulder, but we could form a second one as we move away from it, right? All of that being from the structure to the left, huge structure, goes all the way to 2018. So you get a picture. Some of you might not even be traders. Were not traders all the way back then. Um, but that tells you how important this structure was and still is, and you can see how the market came in. Look at that wick, that rejection wicks. That tells you there are sellers here. However, that being said, there's something though to be noticed. On the same time frame, we created a fresh order block on the same time frame, right? So it's also a monthly. It's not part of a quasi, so it's not that elaborate, and it's not that it doesn't have that much of a time. You don't have to go that back in time to see it, the inception of that order block, but it is still a monthly structure, very very strong, normally, and it was created by an outside buyer. That makes it a little bit extra special. And what did price do? Price broke it, right? By closing below it, invalidated that fresh structure. That's why I don't have it anymore. But it's still important to understand that the what started here, the rejections that started here, we're still getting information from the rejection or invalidation, the break of this fresh bullish structure that the market is giving us that idea that eventually it is a good probability that price will go lower, lower than the current low that we've seen so far, which was at let me see if I can well, it's about 114.80, I believe it was. Um, Whatever it is, 114 something. Prices eventually will likely be going lower. Why? Because of that bullish structure that was broken. The only thing is price doesn't go there in a straight line. As you can see, the current candle, only 9 days old, this is basically the move that we've had the last couple of months, but it doesn't go in a straight line. It goes up, right? The market zigzags its way in any direction most of the time. So that's if you have that as a primer for your for your setup on that higher time frame, then you can start looking for the weekly to tell you, to give you an idea when could we be looking for that continuation of that move down. It's a huge move, as you can see, right? So it pays to spend some time to try to catch a little bit of that move on the lower time frame, maybe on the daily and so on. All right, so the market is open. So we're gonna go to Samir in a couple of minutes. But let me get back to the lower time frames on this AU. So what do we have? That's on the monthly. On the lower time frame, on the weekly, we don't see that the market is ready to continue lower. On the contrary, you see a fresh order block right here that has been retested, and we had a beautiful. We talked about that yesterday, Samir and I, how we had the weekly, the daily, the 4 hour, even the 1 hour was setting up beautifully. Something, to hang on the louver and, not to be stolen, but to be appreciated. We have a daily structure here. Let's go to the daily to see it. It is within the weekly. That's the daily structure. And as you can see here, I already started taking it down, but that was a beautiful area that didn't get triggered. Otherwise, I would have been in the move going up all the way. This is actually a little bit lower, not as it is pointing here, something like that. So that's the daily. And to me, if you look to the left, there isn't anything. Look at that. There isn't anything on this time frame to stop price other than the daily order block we have above. The daily order block is part of a quasi, that being the head, neckline, the left shoulder, and we're coming to 1, 2, or 3. Those are the areas that I would want to see how price moves, but we're not there. Actually, we're targeting to get, this is the lower border of a weekly that was invalidated before, but this is the actual target. And that's why you have me putting the macro target there. So basically, it doesn't mean the market will continue to go there, very, impulsively. Not necessarily. It can stop and decelerate a little bit as it goes there, something like that, or whatever way it gets there. But in general, that's my expectation. Price eventually will reach this. Maybe not in one go, maybe in 2 or 3 goes, doesn't matter. But that's the area. That's the only area that matters right now for the market to react to. That's the next level. But in between, I needed to get into that trade right here to be in all the way. Or, and this I mentioned yesterday, I need an H4 to tell me it's ready for me to get in. And that happened today. We had a fresh order block, as you can see here, H4. And if we go to the H2, there was actually a structure as well, but it was the H1 that got me into the trade. And this is the area that I was looking for right here. There, it was a 9-pip area, very tight. If you think about it, that's not a lot at all. And going to the lower time frames, you can see that I can pinpoint the area. This is an internal quasi. It's not the external quasi where this would be the head, the left shoulder on that time frame. This is an internal, but it doesn't matter. This is the area that I'm interested in. So if I go there, you can see that this is the quasi, goes all the way down. This is the neckline. It goes up. Actually, the neckline could be not really. That is the neckline. That's the head, so that becomes the left shoulder. Neckline goes all the way to the top of the structure, and it comes before it goes to the target. It actually goes back to one of these structure most of the time, not all the time. You have this. The first one has a little reaction, wasn't enough, goes to the second one, and bingo, you got your move there, and I got triggered. It actually gave you a second chance if you didn't catch the first one to go in and move. It formed another quasi, as you can see there as well, because the market is fractal. It uses these patterns all the time, not every time, but almost all the time. But I had to get out before the news, so I didn't. That was my target, and you can see that in a couple of seconds, it's likely to hit that target. And that was the trade that I did. There was a nice trade, 9R of a trade, which is my type of a. These are the moments. These are the types, the setups that I'm waiting for, and I'm very selective, and a lot of times there isn't anything to trade, but it's all fine because I just get to catch one or two of these every other day, and that makes up for everything else. Even small losses here and there, I get a 9R, and actually I had two 9R trades because I had two this setup signal twice today. So, and actually, I didn't. I get the whole 9R because I had to close it before. But you can see I got most of it. All right. So yeah, that's it for my side of things. Let's see on maybe Samir. Let's take a look at Samir's screen, if that's okay with you, Samir.
All right, seems like we are gonna break the inverted head and shoulder that I have on the 5 minute. And if we re-break the high, okay, we have re-broken the high. I was having buy stop here. I am already in the trade here, and let me see where my stop loss is. My stop loss is at 858, but on the futures platform, I think it is somewhere around here, like 100 and let me see how many points it is. It is 136 points. I think something close to that. And I'm aiming for, I normally aim for 1-to-1s. Let's aim for this rejection area, which is, yeah, it is 1-to-1 already. Let's see how this trade plays, and the bias is very simple. Inverted head and shoulder on the 4-hour level. Daily is very bullish. 4-hour bullish, and yes, decent level. We are having very decent bullish momentum, and all these fundamentals, ceasefire, and all these things making sense. So let's see what this trade is gonna do. It has been almost, I think, 5 to 6 days I haven't executed any trade on US 30 because I I was not trading CFD. But let's see how this trade plays out. It makes sense, and the 200 EMA is also bullish on the 15-minute time frame. Yes, the only concern was the VWAP, but I do think we can break that area because we do have more confirmations for the price to go to the upside. So I like to take the trade on that side where confluences are a little bit more. So yes, and we also took out this liquidity. That's why I didn't want it to get involved in the first move. And I think it is also the opening range or something like that. Most people do. This was a opening range, and we broke the high. So that's why I was having a buy stop here. So that was also the confluence. So I'm in the trade. I have the fresh account. So let's see how it goes. 1-to-1.
CFDs?
CFDS. On the future side also, I'm in the same trade.
Nice. Yeah, the opening range is we are 8 minutes into the open, and it's looking nice for a continuation. To be fair, you're looking at US 30 though, while Pedro is laughing, smiling. Pedro, are
I think Pedro have something to share.
no?
No,
It's on the
it's
screen.
pretty
It's on
common.
the screen.
Maybe you caught
No,
like a big move. You're just hiding it from us.
No, it's just I don't know what kind of comments are these. Thank you, man. Thank
What do you say to that? What do you say to that,
yeah,
Pedro?
I don't know. I don't know.
Pedro as a
But I don't know. I have no
Charlie.
comments to say. Um, yeah, I have no comments. That's a nice trade. The trade that you took on euro dollar, it's actually a nice one, a nice continuation.
It is US 30, or you are referring to Victor's trade?
I was actually talking about the Vitor one. In terms of yours, I
Oh,
think
okay,
there's
okay.
room to the upside. I'm actually looking for that, but on S&P and Nasdaq. Let
Let's
me
see
just
what
bring it
NAS 100
down.
is about doing.
Yeah, I'm just bringing here. I
Oh,
was
yeah, yeah.
looking to see if the S&P or Nasdaq as well could at least try to push a little bit closer to the stops, which in theory would favor your trade as well to push
Hmm.
higher. Um, yeah. So we have kind of a specific height on the Dow that maybe price can go and approach. Um, the risk is that actually touch 48,000. So there's a round number in here. But I'd like to see the Dow getting a little bit closer to this 48,500 to then potentially see some kind of reaction. So I think you might have actually that continuation to the upside. Just again, be careful just in here that you have a little bit of this supply. Our price is actually reacting
Yeah.
right now. So at least on the way I looked at it, I know that you look a bit more kind of diagonally to the charts.
Yeah,
I'm
yeah.
horizontally,
Hmm.
and horizontally do have this supply level, but I think price could continue. I think price went up, it retraced, it came a little bit closer to this extreme. It already tried to go here, came all the way back again to kind of react a little bit from this direction, and it could continue to go high. I think that would be the idea that I would be expecting on the Dow. But I don't really trade this levels a bit in the middle. Same thing with NAS. For me, Nasdaq, I would like to see Nasdaq getting to 25,300. Okay, to take out the liquidity above these highs, and then try to find some selling pressure. That will be my idea. Okay, and I think
Okay.
eventually we are going to approach back to the origin of the move that was created during those news release from Trump Tuesday night. So I think eventually are going to go back a little bit closer to this structure. And actually, I would like to see it happening after price takes its liquidity, comes here, and then comes out the back in here, and then maybe potentially could go higher. So that would be the ideal. Now, on the lower time frame, looking at yesterday's high, you may still have actually a fresh level that could still hold price. Um, okay, so maybe there is a small chance that price can actually even bounce from around here and keep ranging. But my favorite it would be actually to take all the liquidity from these stops. That would be my favorite before looking for a short. And then on the NAS, if price actually then decides to continue, then close to this level, 25,800 or 900, there's another potentially interesting short opportunity. But that's for the future. It's not for now. As you can see, I already talked about that level several times. Every time I put a circle in here, it's because I mentioned that I'll be waiting for price to go there. So you can see that I've been waiting when price was creating these tops, when price created this top, and when price created that top. Price never went there yet. So yeah, let me just put another one in here because this is a new time that I'm waiting eventually for price to go there. Yeah, so that's just indices for me. Now, Victor, I really like your trade on the euro. Okay, I think that's a great continuation setup, something that I could maybe try to add a bit more into my portfolio of trades, but that's a great quasi model. That's a really great quasi model that you traded, to be honest, this morning. Great trade. Price had already broken even the structure as well. Everything was textbook on this year on your one on the euro, and I think there was this. Yeah, I think price now can resume to move to the upside. This was more yesterday during the live stream that we were potentially looking for a short in there, but the move to the downside already happened. So I would like to see euro going a little bit higher. And I think I have the same structure. Surprise, surprise, but I think I do have the same structure that you do have on the higher time frame on the euro, which is a little bit closer to 1.18, if not mistaken, kind of somewhere around here. On the higher time frame, maybe 1 hour, 4 hour time frame, that potentially you could see some selling pressure from there. So yeah, let's see. Looking at the yen pairs, they just continue to go. I think euro yen continue to push higher. Yep, so it already took slightly the high again. So we kind of respect a little bit of this initial demand that we had around here. So at this point, there is no weakness on the euro yen so far, which means that the yen index most likely is also pushing lower. Yep, just broke, respected the structure, and now is pushing lower again. So we may have a continuation setup in euro and yen pairs as well. Just from that, I don't really have anything, to be honest.
Yes, let me go back to my screen if that's okay with you, Pedro.
Yeah, go ahead.
We have the open of the indices. If you're trading futures, you'd likely to be looking at the Nasdaq if you're a breakout trader or you like a lot of action. And what we see here from this perspective is that the market did create, we left behind as we closed last week's candle, we left behind a fresh order block, and price didn't even need to retest it immediately. That tells you something. The market is, who's dominating on the market this week? There isn't really anything to stop price currently, other than the monthly structure that we left behind. If you want to see it on the monthly time frame, that's the monthly structure. So I'm not saying it's going to go there, but that just tells you we don't have anything stopping us, so it can continue to go a couple of days more. However, what I do see is that if you go to the lower time frames, not lower time frame, if you go to the daily, you can see how neatly the market has been reacting on this, on this 200 EMA. I don't trade the 200 EMA, but it is very helpful to see how the market reacts to it. Whenever an EMA or an SMA is reacted upon, sharply, you got to pay attention. That's not coincident. That means that the market is taking their decisions, to get in or get out of the market based on what they're seeing on the market, and likely if they're doing it more often than not on the same EMA, that means that likely the market is going to react as again. So you can see how, not every time, but you can see the pattern that from time to time it will react to the EMA, and you can see that the market was reacting quite beautifully on this indicator. Look at that. That's almost perfect right there. All these times that it comes back and retested from above, using it as a dynamic support, and then it breaks, and you can see quickly, it uses then as a resistance. So you get the picture that the market is interacting, is playing, is flirting with this EMA, and it's been using it for quite some time. This is the daily, so you don't even have to be in a hurry to see it. You can just, sit in your chair with your coffee in your hand and, observe these price action. And even you don't even have to sit in your chair. I mean, you can do it over days because this is the daily time frame. But what I wanted to say was that all changed as we broke through it, and that was with the ceasefire. That was yesterday, a candle, of course, and everything happened during the Asian session, the overnight session before the actually spot market opened, because that was the ceasefire, right? That is the news. That is the event that is driving the market right now more than anything else. And you can see that it changes the market completely. The market goes through an EMA that it was previously reacting to. It would have expected, a little bit of a pushback before it breaks it. Didn't do that. Went through it right away. Tells you something. Something has changed. And obviously we know what has changed. It's the prospect of a possible end of the conflict, right? The ceasefire is a de-escalation level, which is very, very welcome. So that's one thing that I think is quite nice. You do get, as we always say in the market rarely goes in a straight line anywhere. So that means that even though the break of this EMA tells you that likely it's going to continue eventually to higher levels, what could happen is the market eventually, and that coincides what Pedro just said, after some time, who knows how high it might get, it could go back down to retest some structure it left as it was pushing up. That could be this daily, that could be this weekly, and then depending on how it reacts, maybe it's ready for that continuation move on a higher time frame. I'm gonna take off this TP because I think I shown you guys already. It already hit target. I was already before that out of the trade, but it's fine. So that's on the daily. If you go to the H4, you can see something. Who sees something here? I mean, if you guys know me, you would know what I'm looking for. It's a hunched back guy who lives a solitary life in a church somewhere in France. If you don't know who I'm referring to, then stay tuned, like and subscribe, and I'll tell you who I'm talking about. It's a big fella, cheerful one, and he works for Disney Company, just so you know. Anyways, I'm talking about Quasimodo, the fictional character here at the Hunchback of Notre Dame. So you have the Quasimodo, right? That's the smallest H4 order block, and you can extend it all the way up for the top of the market, and that gives you a couple of areas. Why is that important? Because you can use this range for any pullback that we might be finding, not right now because the market is not looking to be wanting to do that right now, but for future reference, maybe tomorrow, maybe next week, who knows, right? Maybe a couple of days from now. So if you mark that from all the way from the top of the market, yes, it is the top. It's the lower part of the, it's a bullish structure. And you can see we have one order block there, another one, and this is the third one. And is that enough? Actually, we have 4. That means that on the 4-hour, I wouldn't be able to trade this, right? My limit is 3, so that means that I would need something else, either on the 8-hour, 12-hour, or maybe something else, or just I don't trade it, which is the latter one. That's the one that I use. I don't normally go look for the time frame to fit. I have from in advance. I know which time frame I'm going to be looking for, but I mean I could be looking for a structure in one time frame that fits. So that's the area. On the daily, do we have a quasi already? Actually, we do. Look at that. We did mark this previously. That's the neckline. So actually, the quasi was not on the 4-hour, but on the a daily time frame. That's the left shoulder, the head, the neckline. We just took it with that little wick, but that's enough for my rules. So that means that this now becomes a fresh order, not a fresh, I'm sorry, a entry order block for the time frame. So these are the levels that the areas that I'm going to be waiting for price and see how it reacts to it, right? And if you can't hold overnight because of futures, I mean, you can do it at the 5-hours, but even then you'd have to be, only one contract you can hold overnight. Not if you have multiple, you wouldn't be able to do that. And if you don't want to have that, you can try it through a CFD, right? Go to NAS 100 and you can hold it overnight with no issue. So, all right. So these are the areas. Price is not really looking at all as interested to be coming to them, but this is something that you can extend into future and just wait patiently for the market to come back to react to them. So that would be something, as I said, for the future. But now, this is the move that was created by the ceasefire right here, right? You can clearly see that the market has impulse to the upside. But what I would like to see is you do have a market on the H4. We don't have anything else besides this structure. But before, if this is the impulse, right? And that's obvious. That makes this with all, the consolidation. That means that what are the ways to catch the next impulse? Just think logically. If you already have the first impulse, that's the direction where you want to be catching the next impulse. And the consolidation is the range that needs to be broken. Now, there are two ways to trade this. One is you wait for a bullish structure to be created, right? Either something like this, in my mind, that would need to be an H4, it is created, and then it comes back, and you get your entry when it comes back to the retest, and you preemptively get in with your stop below, with the thought that it's going to break out of this range, and you'll have to be patient, because maybe it doesn't do that right away when you want it to do, but eventually it will break out, and you have it at the right place with your stop beyond the opposite range. So, and then you catch the move up, right? That's a swing trade, because this is the H. You'll have to probably hold that for for an overnight, maybe even a couple of days. That's one way, and the other one is you can wait for the market to break a bearish structure, which is equally bullish. If it breaks a bearish structure, that's a bullish sign. Same way as when it comes back to retest a bullish structure. Very logical, right? It's not rocket science. So we don't have a bullish structure right here. That's what I'm trying to say. We do have a bearish structure. So whenever we break this and we close above it, that could be your sign we need to get in. Of course, your entry will be higher, and it will not be as tight when you get a bullish structure being retested. But hey, we just navigate the sea. We don't control the waves, right? So it is what it is, and you'll have to make the best of it. On the H4, there's nothing here for me to trade. On the H2, same thing is happening here. It's not creating that bullish structure that I'm waiting for. There was a little structure here that is the market is having difficulty to close above it. It is on the 2 hour, and we are 4 minutes away from the close. So that if it goes there, taps the H4, and isn't even able to break the H2, you get the gist, right? That tells us that the market is getting ready for perhaps retesting these lows, and who knows how far that could be. But it's only a matter of time, right? All these retraces, this is the retrace, this is the actual direction you want to be catching. It's only a matter of time, either this one, or maybe the next one, or maybe the next one, but one of these move down will, the mark, unless the situation out there changes completely, the market will continue in the direction of the impulse, right? That's why the impulse was here in the first place. So maybe headline risk, maybe Iran or US or whatever, complication of the ceasefire, or maybe some other thing that could boost price, depress price to go a little bit lower in that retrace. But eventually the move is to be expected for another push up. So I'm looking for that. I'm not seeing indication of that yet. You could be looking for a quasi. Yes, I do see that as well. Let's see. You have this move there. That's the internal quasi that you could be looking for, and that gives us two structures below, which I can, I do use them, not on my main strategy, which is strict. This is not an H4, but an H1 actually. And that would be an entry, not a regular one, right? So that would be one, and actually it's quite wide. Not very useful when it's that wide, but it is something that you could be using. That's so I would be, if I'm, if I'm going for, if I have multiple indications that price is likely to be going up, which is the preferred direction, I want to be buying when price is interacting and coming out of this area. So if you go to lower time frame, you can go back and see, or maybe on the 15-minute, right? Go back and see where's that quasi forming. So you can't use that low. Can you? No, you can't use that. Hasn't been broken yet. So that means that this is the neckline, and the structure then becomes the following, and you mark this one. Let's take it off there, and if you go back, you can see that, is this an order block as well? It isn't. So that's the only structure I have. So in this example, you would be waiting for price to come to this area, and you wait for the market to react. Wait for it to react, then you get in. I mean, that's just one idea. You can just get in on any indication, any sign you get that buyers are taking over, and you get in, you put your stop below the structure that you're actually trading, which is the H1, and you target, at least this high, and you could be using, you can project how far it would be able to go based on the day. You'd be looking for that next order block, maybe. Let me measure that. How much is this? This is, all right. So I would say, yes, that's easily achievable within a day. And actually it can surpass this. Looking at the APR last couple of days, you could expand this. I would take some profit there because of that top we have, but we could certainly leave something for that continuation on. And this is a high risk reward ratio, so you don't expect win rate to be very high. But that's the thing, right? You can have them both ways. You can have a high risk reward ratio strategy and expect to win like 70-90% of the time. Not gonna happen. Anyways, coming back to Samir, I think. Samir, are you how's the trade going? You're muted.
I'm just this close to my TP. It's
Nice. Let's go
70% my
yours.
favor.
Good. Nice. Good stuff, man.
I don't know. Is it TradingView you guys are seeing or my other platform?
Trading view.
Trading view.
Oh no, the other. There was the other.
Yeah, the
platform,
other.
yeah.
Now it's trading view.
Okay. So this is the TradingView, and I just need a couple of more points. 64 points for my TP. We have broken the trend line also, closed above the VWAP, so everything is looking good. Now if it reverses, it is completely the probability. I cannot do anything, but technicals and all the things that I use, trend lines, EMAs, VWAP, everything is looking good, so it should hit my target. So yes, let's see how it is gonna be.
Beautiful. And we have reached the end of the stream. That is
Oh
always
yes, I
a
forgot.
bummer. We are it is when we're just getting started, right? The motor is running, engine is running, and we're getting ready to keep spitting these analysis, and it's time's over, time's up. So don't remember, guys, we are celebrating this month the 10th year anniversary of the Fivers, and specifically this month, the community we have, the non-toxic, helpful, great community. We have beautiful people in there for you to come in and get to know. And it's not only about social, although the social part is a huge thing, but it's also about edge, right? There's actually edge in being part of a community. Not kidding. That's not a sales bit. That's reality. Community is something you need to have as a trader if you want to succeed, because it will help you in many, many ways without you even knowing yet, what the benefits are. But coming from someone who has experienced it, it's a great thing surrounding yourself with people who are also working at their edge, and it stimulates and motivates you, and it helps you because they can give you advice, tips, and so on. Not only for that, but we also have calls, traders at the Fivers. We have calls on the Discord community, which are completely free. And this month we are having a 20K bootcamp account given away on every call. There are calls every weekday. So today as well, in about 40 minutes or so, on the Discord community, you have a chance to win a 20K bootcamp account completely for free. You don't have to pay the initial fee. You don't have to pay the fee to get funded because it's a bootcamp. Normally, you pay a little bit upfront, and the rest before you get the funded account. Because this is completely free, and because we love you, both of them are, zero charge, free, all yours. But you have to get into the Discord community so you can get a chance to win it. You don't know what I'm talking about? Discord is on your dashboard. So on your dashboard, go to your dashboard. If you don't have one, you'll have to get an account with us first. But that's where all the goodies are, right? So you get in. That's where you can buy other accounts, but you can get the free access to our Discord community. Try it out, and you will see you would love it. But this month especially, it pays to be part of the community because you have chances every day of winning a free account and 10 hub credits. We give these out on every call, normally already all the time, but also on this beautiful period we're celebrating. So I would like to thank this gentleman up here, both of them, who are right above me, for their time, their effort. And most of all, I would like to thank you for watching us today. Thank you. We really appreciate it. That's why we're celebrating our community. And you guys are amazing in every aspect of that word. It has helped me personally, selfishly. It has helped me to be part of the YouTube stream, as well as the Discord. If you think about it, when you are on the other side, there's a certain process that goes into sharing your ideas, and that process also helps the one who's developing those ideas. Well, I'm sure our co-host can attest to that. But thank you. That's what I wanted to say. So last words, gentlemen, before we go. Pedro, who has many fans in the audience, and Samir, who is,
Yes.
both of you guys have fans. From time to time they come in and they say, Samir is the man, and then
Yeah.
and so on. Anyways, last words before we sign
Last
off.
words will be, let's see how this trade is gonna go. I should not get too happy because I remember on the stream it was Monday, price reversed right after hitting my before hitting my TP. So with that, I want to give one last word, which I say almost every time, which is, guys, following your trading plan for 6 months can put you way ahead in trading. So make sure you are following your trading plan, and I think that is the only way you're gonna succeed in trading. With that being said, guys, I will catch you on Monday same time, and we will trade US 30 again on Monday. So that's it from my side, guys. Take care and have a lovely weekend.
Beautiful. Thank you, guys. Yeah, have a nice weekend. After everything that Victor and Samir said, there is not much else to say. Yeah, so have a great weekend. Enjoy. It starts to be sunny outside, so go do something outdoors. Enjoy nature. That's quite important as well. And then, of course, Monday we are going to be back here again for another week of training, another session, another live stream, another day with opportunities in the market. Thank you very
Let's
much,
go.
big
Take care,
guy.
guys.
Thank you very
Bye
much as
bye.
well. Bye bye, guys.
And we love all our members, all our fans, and especially those who are engaged us in the chat. We send you all a big brotherly hug to all of you. Keep engaging us. We love them. Thank you for your support and appreciation. Take care until the next time. See you. That's
Bye.